एवरीवन, गुड आफ्टरनून, गुड इवनिंग, गुड मॉर्निंग टू ऑल ऑफ यू। आज हैं 29th ऑफ मई 2025। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का ये सेशन। फिलहाल के लिए देखोगे क्रूड ऑयल नेचुरल गैस को, तो क्रूड ऑयल हल्का सा गैप ओपन हुआ था, ऊपर गया, एक रेजिस्टेंस है। यहाँ पर देखो मार्केट मल्टीपल टाइम टेस्ट कर चुका है, ये ऐसा नहीं कि पहली बार टेस्ट कर रहे हैं। इससे पहले दो तीन बार मैं जहाँ तक देख पा रहा हूँ, एक बार देख लेते हैं कंफर्म करने के लिए कितने बार यहाँ पर टेस्ट कर चुका है। फिर लेना यहाँ पर सेलिंग का ट्रेड, थोड़ा क्वांटिटी कम ही रखना, क्योंकि इतने बार टेस्ट हो गया है तो ब्रेकआउट के चांसेस बहुत ज़्यादा हैं। सेलिंग आनी होगी तो जल्दी आएगी, नहीं तो ज़्यादा देर मार्केट होल्ड करेगा नहीं इस लेवल पे। ठीक है, तो इस लेवल पे अगर पर्टिकुलरली चेकआउट करोगे, अगर मैं देखूँ इस पर्टिकुलर जोन पे, तो मार्केट यहाँ पर वन एक बार यहाँ पर लिया है। ओके, सू एक बार सेलिंग आई है, दूसरी बार सेलिंग आई है, फिर तीसरी बार और चौथी बार तो ऑलमोस्ट ब्रेकआउट ही कर दिया था। ठीक है, फिफ्थ टाइम यहाँ पर आ रहा है, दिस इज अ फिफ्थ टाइम प्राइस इज कमिंग एट दिस रेजिस्टेंस क्रूड ऑयल, तो ये पांचवी बार है। ठीक है, तो ये थोड़ा रिस्की ट्रेड मान सकते हो इसको। रेजिस्टेंस अभी भी है, ब्रेक जब तक नहीं होता अब तक तो रेजिस्टेंस ही मानेंगे। बट बिकॉज पांच बार टेस्ट हो चुका है, चार बार सॉरी, वन टू वन टू थ्री फोर, ठीक है, चार बार टेस्ट हो चुका है, तो पांचवी बार थोड़ा बहुत लेवल वीक हो ही जाएगा। कोई न्यूज़ वगैरह आएगी, जैसे कल एक न्यूज़ आई थी कि ईरान रेडी हो गया है अमेरिका के साथ न्यूक्लियर प्रोलिफरेशन रोकने के लिए, तो वो एक न्यूक्लियर डील के लिए, तो वो एक अच्छी न्यूज़ थी क्रूड ऑयल के लिए। क्रूड ऑयल का प्राइस ऊपर चला गया था उस वजह से सडनली एक। बट अभी के लिए अगर मैं देखूं, इफ़ यू लुक एट राइट नाउ, सो आई वुड से लाइक इट इज़ अ काइंड ऑफ रिस्की ट्रेड। ओके, थोड़ा रिस्की मान के चलना है इसको, क्योंकि रीज़न यही है सिर्फ कि ये चार बार टेस्ट हो चुका है, पांचवी बार आ रहा है यहाँ पे अब। बाकी और तो कोई यहाँ पर सपोर्ट है नहीं, रीटेस्ट भी कर ही चुका है। देखते हैं और कितना रुकता है यहाँ पे। ठीक है, तो चार बार टेस्ट हो चुका है, पांचवी बार आ रहा है। सेलिंग आनी होगी, जल्दी आनी चाहिए, ज़्यादा देर रुका तो ब्रेकआउट के लिए चला जाएगा क्रूड ऑयल, तो ज़्यादा रिस्क नहीं ले सकते। बाकी ये रीटेस्ट है शायद यहाँ पर कुछ ना कुछ। लेट्स सी, देखते हैं। बाकी डाउन साइड पे अगर चेकआउट करोगे, इफ यू लुक एट द डाउन साइड एरिया, सो इन डाउन साइड एरिया नीचे का जो कल का लेवल है, विच इज अराउंड MCX में, वो एक सपोर्ट की तरह काम किया कल, वो एक रेजिस्टेंस था, ब्रेकआउट हो गया था। सो इट एक्ट लाइक एज अ सपोर्ट, तो कल वहीं से बाइंग आ गई थी, तो नीचे यहाँ पर एक सपोर्ट है, एक बार ले चुका है, देखते हैं फिर से लेता है क्या। एंड ये नीचे वाले लेवल भी ना मल्टीपल टाइम टेस्ट है, ये लेवल भी आपका तीन से चार बार टेस्ट हो चुका है। ये दोनों ही लेवल मल्टीपल टाइम टेस्ट हैं, ये भी रेजिस्टेंस भी और ये सपोर्ट भी। ये तो एक ही बार कल सपोर्ट लिया है खैर। अगर ये यहीं से रुक जाता है मान लो और यहाँ से जाता है, तो फिर ब्रेकआउट ही होगा डेफिनेटली, क्योंकि फिर तो लोअर लो भी नहीं बन रहा। एंड दिस इज अ फिफ्थ टाइम है, पांचवी बार आएगा तो वो ऑलरेडी वीक हो जाएगा। ठीक है, तो नीचे वाले सपोर्ट भी मल्टीपल टाइम टेस्ट हैं, जो सबसे नीचे बनाया है क्रूड ऑयल में। देखते हैं सपोर्ट लेके या फिर रेजिस्टेंस ब्रेक करके ऊपर ही चला जाए। ऊपर रेजिस्टेंस अच्छे हैं, वहाँ फ्रेश सेलिंग आएगी जो ज़्यादा बेटर रहेगा। नीचे के लेवल भी सपोर्ट काफ़ी बार ले लेगा, तो अगर वहाँ से सेलिंग आती है तो फिर इट विल नॉट होल्डिंग दो सपोर्ट इन दैट केस। नीचे वाला लेवल भी कितने बार सपोर्ट लिया है इसने, मल्टीपल टाइम। वन टाइम, टू टाइम, हाई, इक्वल हाई, थर्ड टाइम, फोर, चार बार आ चुका है नीचे वाले सपोर्ट पे भी प्राइस क्रूड में। स्ट्रेंज। वैसे लास्ट टाइम लग रहा था ब्रेक हो जाएगा, क्योंकि प्राइस एक्शन में देखोगे लोअर हाई बना था, बट होल्ड कर गया प्राइस। लाइक भी करते रहो गाइस, लाइक नहीं रुकनी चाहिए, कम ऑन, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल एज वेल। चलो, लेवल फर्स्ट टाइम जब आया था 5170 160 के आसपास, तो लास्ट टाइम मार्केट ने वहां से सपोर्ट लेके एक हाई बनाया था। दूसरी बार आया, ऑलमोस्ट इक्वल हाई बनाया था। जब थर्ड टाइम आया वापस से, परसों आया था शायद, आई थिंक 23rd को, लोअर हाई बनाया था। फिर जब फोर्थ टाइम आया था, ऐसा लगा था ब्रेक कर देगा 27 परसों, बट वहां से होल्ड करके चला गया और हायर हाई बना दिया। तो 1 2 3 4, फोर टाइम वो टेस्ट है। ऊपर जिस रेजिस्टेंस पे अभी प्राइस सेलिंग में आ रहा है क्रूड ऑयल की, अगर मैं बात करूं, उस पर्टिकुलर जोन से भी देखोगे प्राइस को, तो उस पर्टिकुलर जोन पर भी जो क्रूड ऑयल है, ठीक है, इसको काउंट करोगे अगर, तो यहाँ पर भी प्राइस आपका 1 टाइम, फर्स्ट टाइम आया था एक सेलिंग आई, सेकेंड टाइम आया, फर्स्ट टाइम आया लो बना, दूसरी बार आया लोअर लो बना, तीसरी बार सेलिंग आनी थी, हायर लो बना, इसमें भी चौथी बार जब आया लग रहा था ब्रेकआउट कर देगा, बट फिर से लोअर लो बना दिया। तो फर्स्ट, सेकंड, थर्ड, फोर्थ, और अभी आया है फिर ये फिफ्थ टाइम। थोड़ा सा यहाँ पर इसको क्या फेवर कर रहा है कि मार्केट ने, लाइक इस तरह से समझो कि यहाँ पर प्राइस आया, एक बार सेलिंग आई, दूसरी बार आया लोअर लो बना, तीसरी बार आया हायर लो बना, तो फोर्थ टाइम ऐसा लग रहा था ब्रेकआउट कर देगा, बट हाई लेवल से आके नीचे लो बना दिया था। तो अभी पांचवी बार में थोड़ी बहुत सेलिंग, लोअर लो है, बिकॉज इसलिए थोड़ा बहुत होल्ड कर रहा है। प्राइस एक्शन इज वेरी क्रूशियल। नीचे इंपॉर्टेंट हो जाएगा 5280 का लेवल, होल्ड करेगा या नहीं करेगा, नहीं किया तो इजीली परसों का लो हिट हो जाएगा वापस से। बाकी 12:30 हो चुका है ऑलरेडी, न्यूयॉर्क सेशन से पहले लंदन सेशन ऑलरेडी ओपन हो चुका है। एंड कल क्रूड ऑयल की इन्वेंट्री नहीं आई थी। अभी 12:30 न्यूयॉर्क सेशन से पहले क्रूड लंदन सेशन ओपन है। 5:30 पे अभी थोड़ी देर में 5:30 इंडियन टाइम के अकॉर्डिंग न्यूयॉर्क सेशन ओपन हो जाएगा आपका। ठीक है। एंड डेटा की अगर बात करें 6 PM पे काफ़ी इंपॉर्टेंट डेटा है, विच इज़ यूएस का प्रीलिम जीडीपी का डेटा, क्वार्टर ऑन क्वार्टर बेसिस, अनएम्प्लॉयमेंट क्लेम्स, गोल्ड, सिल्वर, क्रूड ऑयल, सभी को इम्पैक्ट करेगा ये तो। 7 PM पे फिर यूएस मार्केट ओपन, 7:30 पे पेंडिंग होम सेल्स का डेटा, गोल्ड, सिल्वर, और नॉर्मली डॉलर को इम्पैक्ट करता है। देन 8 PM नेचुरल गैस की इन्वेंट्री आज शेड्यूल होती है, तो नेचुरल गैस की इन्वेंट्री आज है। ठीक है। एंड फिर आपका 8 PM के बाद नेचुरल गैस की इन्वेंट्री के बाद 8:30 पे क्रूड ऑयल की इन्वेंट्री। फोरकास्ट देखोगे नेचुरल गैस की इन्वेंट्री का लास्ट टाइम +120 बुलियन आया था, इस बार 98 बुलियन, मींस लास्ट वीक के कंपैरिजन में कम एक्सपेक्ट कर रहे हैं। तो फोरकास्ट के अकॉर्डिंग 98 बुलियन से कम अगर डेटा आता है तो इट इज़ पॉजिटिव फॉर नेचुरल गैस प्राइस। तो अगर फोरकास्ट के अकॉर्डिंग देखोगे, नेचुरल गैस की इन्वेंट्री बता रही है कि प्राइस को ऊपर जाना चाहिए एज पर द फोरकास्ट। अभी एग्जैक्ट डेटा जो आएगा उसके अकॉर्डिंग देखेंगे। क्रूड ऑयल की इन्वेंट्री का फोरकास्ट देखोगे लास्ट टाइम +1.3, इस बार इसका भी प्लस में 0.3, मतलब लास्ट वीक के कंपैरिजन में कम एक्सपेक्ट कर रहे हैं। तो अगर 0.3 से कम कुछ भी आता है तो इट इज़ पॉजिटिव फॉर क्रूड ऑयल प्राइस। तो क्रूड ऑयल का जो फोरकास्ट है इन्वेंट्री का वो ही पॉजिटिव है। तो क्रूड ऑयल और नेचुरल गैस दोनों की इन्वेंट्री का फोरकास्ट पॉजिटिव ही है प्राइस के लिए, मतलब दोनों में जो फोरकास्ट है अगर उसके अकॉर्डिंग ही डेटा आता है तो प्राइस को ऊपर जाना चाहिए। लेट्स सी एग्जैक्टली डेटा कितना आता है, वो तो उस पर डिपेंड करेगा, अभी कह नहीं सकते। बाकी कल क्रूड ऑयल भी, नेचुरल गैस भी काफ़ी अच्छा ऊपर से सेलिंग में चला गया था। एंड अभी देखोगे हायर लेवल पे तो मार्केट के पास ऊपर एक रेजिस्टेंस मिल जाएगा आपको। ठीक है, ऊपर आपके पास 320 से 325 ऊपर ही एक रेजिस्टेंस जोन बना रखा है यहाँ पे। दिस इज अ रेजिस्टेंस एरिया ओवर हियर, यहाँ से एक सेलिंग एक्सपेक्टेड है। नीचे देखोगे मार्केट के पास, ठीक है, नीचे देखेंगे तो यहाँ पर प्राइस के पास एक सपोर्ट एरिया डाउन साइड पे दिखेगा। उससे पहले एक रीटेस्ट जोन भी, क्योंकि गैप अप हुआ था तो उसमें एक रीटेस्ट और पेंडिंग है। तो ये रीटेस्ट एक काम का है यहाँ पर अभी। नीचे 280 285 287 के अराउंड सॉरी एक सपोर्ट जोन बना हुआ है। वो एक सपोर्ट बाइंग के लिए अच्छा है। उससे पहले कि रिटेस्ट भी है यहाँ पर एक, क्योंकि सीधा गैप अप हुआ है तो एक ये रिटेस्ट की तरह काम करना चाहिए इसको थोड़ा बहुत। लेट्स सी करता है या नहीं करता है, देखते हैं। नहीं तो एग्जैक्ट सपोर्ट से ले लेंगे। थोड़ा क्वांटिटी कम रख लेना यहाँ पे। नेचुरल गैस रिटेस्ट, बीच वाला जोन रिटेस्ट का है, ठीक है, ये रिटेस्ट जोन हो गया। दोनों पास पास में ही हैं क्योंकि ये तो थोड़ा सा ध्यान रखना, ये रीटेस्ट और ठीक है, रीटेस्ट और ये सपोर्ट ना दोनों ही पास पास ही बने हुए हैं। एक बार यहाँ से भी सेलिंग आ चुकी है, उसके बाद सीधा गैप अप हुआ है तो एज अ रीटेस्ट नॉर्मली तो वर्क होता ही है। ओ, लाइक भी करते रहो गाइस जिन लोगों ने लाइक नहीं किया स्ट्रीम को। थोड़ा रीटेस्ट पे क्वांटिटी कम ही रखेंगे, ठीक है, इसमें ज़्यादा क्वांटिटी रख नहीं सकते बिकॉज रिस्क बहुत ज़्यादा हो जाएगा अदरवाइज। चला जाता है तो बढ़िया ही है, टारगेट बड़ा रख लेंगे, दैट इज इनफ। मॉर्निंग का मोमेंटम है ना। वॉल्यूम भी बड़ा कम लग रहा है इससे मुझे तो अभी, नेचुरल गैस में। इंडियन मार्केट को भी अगर देखोगे, इफ यू लुक एट द इंडियन मार्केट एज वेल, तो ऑलमोस्ट बैंक निफ्टी बैंक को देखोगे तो कल तो साइडवेज ही चला गया था। आज एक हल्का सा मार्केट ने गैप अप ओपनिंग दी जरूर थी, बट वो ऑल टाइम हाई के आसपास प्राइस सस्टेन ही नहीं कर रहा है। यू नो मैंने परसों कल ही बताया था, शायद कल या परसों, मार्केट को ऑल टाइम हाई ब्रेक करना है। चांसेस कल भी था मार्केट के पास, बट वो रेजिस्टेंस पे जाके सेलिंग आ जा रही है, कंसोलिडेट भी नहीं हो रहा है। एटलीस्ट कंसोलिडेशन भी हो जाए तो अपना ऑल टाइम हाई को ब्रेक करने चला जाए, वो भी होता हुआ नहीं दिख रहा है। सो इम्पोर्टेंट रहेगा बैंक निफ्टी में भी। बैंक निफ्टी में फ्यूचर की बात कर रहा हूँ स्पेसिफिकली। अभी इंट्राडे में तो थोड़ा सा नेगेटिव ही चल रहा है, 200 पॉइंट निफ्टी फ्यूचर भी लगभग 30 पॉइंट की नेगेटिविटी पर ही है। बट दोनों ही बैंक निफ्टी और निफ्टी एक गैप अप हुए थे, रेजिस्टेंस पे हिट किए, सस्टेन ही नहीं कर रहा, नीचे डायरेक्टली आ गए। काफ़ी दिनों से एक ही रेंज पे रुका हुआ है मार्केट। ब्रॉडर वे में देखोगे वीकली में फिर से ऐसा लग रहा है इस वीक भी अगर कल भी कुछ मोमेंटम नहीं होता है तो एक नॉर्मल ही कैंडल क्लोज होगी, काइंड ऑफ स्पिनिंग टॉप। थोड़ी सेलिंग आ गई तो इन्वर्टेड हैमर बन सकता है, बट अगर ओवरऑल देखोगे तो कह सकते हैं कंप्लीटली लास्ट 6 वीक से मार्केट अपने ऑल टाइम हाई के आसपास, 6 वीक से मतलब एक महीने से ज़्यादा हो गया, कंसोलिडेशन में फंसा हुआ है। ब्रेकआउट होगा जब भी अगर होता है तो बहुत बड़ा ही ब्रेकआउट हो सकता है। मंथली टाइम फ्रेम पे भी एक डोजी बनने के चांसेस हैं, कल का दिन अगर निकल जाता है, कल लास्ट ट्रेडिंग सेशन है बिकॉज, तो ऑल टाइम हाई पर एक ऑलमोस्ट डोजी टाइप कैंडल पे क्लोज करेगी मंथली टाइम फ्रेम बैंक निफ्टी फ्यूचर। बैंक निफ्टी फ्यूचर अगर थोड़ा सा नीचे ही आ जाए तो बेटर है, नीचे सपोर्ट है वहां तो आना ही पड़ेगा इसको वैसे भी। एक बार यहाँ से सपोर्ट मार्केट ने लिया था परसों 23 मई को सुबह 9:15 की कैंडल पे। उसके बाद फिर से 27 को आने की कोशिश तो करी थी लेकिन आ नहीं पाया था, तो मुझे एक्सपेक्टेड है थोड़ा और गिर सकता है बैंक निफ्टी। गिरना ही चाहिए लॉजिकली, या सपोर्ट पे आना है तो 54,700 से 54,850 या 150 पॉइंट की रेंज, यहाँ तक प्राइस को गिरना चाहिए अभी। और यहाँ तक आता है फ्यूचर में तो फिर यहाँ से एक वापस बाइंग का प्लान, अनटिल अनलेस कोई ओपन इक्वल टू हाई कैंडल नहीं बनती। वापस ऊपर गया इन केस, तो वही कल का हाई आपका अभी भी रेजिस्टेंस बना के बैठा हुआ है। बैंक निफ्टी फ्यूचर नीचे आया तो 54,800 इज अ वेरी गुड लेवल, कैंडल ओपन इक्वल टू हाई ना बने तो। ऐसा लग रहा है इसमें जिसका हाई और जिसका लो है वो ही है सर। तो ये तो बहुत बड़ा हो जाएगा ना यहाँ पर ये। 1.5 घंटा और है, लेट्स सी थोड़ा और अगर गिर जाता है बैंक निफ्टी, नहीं तो कल सीधा गैप डाउन ही ना हो। क्रूड ऑयल में भी देखोगे लगभग 100 पॉइंट का टारगेट लगा रखा है ये। तो डायरेक्टली 100 पॉइंट के लिए मत जाना, डिवाइड कर लेना 50-50 में, ठीक है। 50 पॉइंट का पहला टारगेट डन, देन अगर ट्रेल करता है तो फिर सेकेंड टारगेट के लिए, क्योंकि अगर ज़्यादा मोमेंटम आया नहीं, इसी रेंज में रुका रहा, तो अभी भी फर्स्ट 15 मिनट की कैंडल के नीचे गया नहीं है। टोटल 50 पॉइंट की रेंज है इंट्राडे में। लाइक भी करते रहो गाइस, कम ऑन। जिन लोगों ने लाइक नहीं किया स्ट्रीम को, फटाफट से लाइक कर सकते हैं। गैस साइडवेज हो गया।
Donald Trump has run into a legal challenge.
Right.
They've now appealed. What do you think happens next? And do you think we will see more of these challenges come about? And do you think it gets in his way?
It's been a busy morning because we've all had the administration revoking visas for Chinese students and plans to enhance scrutiny of all future visa applications from China and Hong Kong. Let's bring our China correspondent Min Min Lo in Hong Kong. This sort of started with the Harvard story, and there's been concerns that it's going to be broadened to, other countries and other types of visas. And now we're hearing a specific targeting of visas from applicants from Hong Kong and Greater China.
Yes, and the Secretary of State Marco Rubio posted on X essentially saying that China will, quote, aggressively, the US rather, will aggressively revoke student visas from China and also revise future visa criteria for people from Hong Kong and China. And they're particularly targeting students with ties to the Chinese Communist Party or that are studying critical subjects. And you can imagine this is something that Chinese parents and students will be very closely watching. Huge impact, both in terms of economic impact and cultural impact. Concerns around the soft power of the US, because bear in mind, many of these students...
News when you want it with Bloomberg News Now. I'm Lizzie Burden.
And I'm Caroline Hepker.
The US trade court has blocked most of President Donald Trump's global tariffs. A panel of 3 judges at the US Court of International Trade in Manhattan issued a unanimous ruling that they were illegally imposed under an emergency law. The judges rejected the government's argument that Trump had authority to unilaterally introduce tariffs under a law intended to address financial transactions during national emergencies, and the court has ordered that the tariffs should be stopped within 10 calendar days. We got reaction from former IMF chief economist Olivier Blanchard.
I'm not a legal scholar, but it was clear that the so-called reciprocity tariffs, which was 10% across the board, doesn't have a national security justification, which is what he has used to actually put tariffs. So I think this one is probably in trouble. There's going to be legal steps, right? But I suspect that he will have to take this one off. He'll replace it by something. He will basically, I think, try to get tariffs against particular countries. We'll see how it goes. It's just one more level of uncertainty.
Olivier Blanchard, now the president of the Peterson Institute, speaking there to Bloomberg as Trump's Justice Department said that it'll appeal the ruling. A White House spokesperson added that it is not for unelected judges to decide how to properly address a national emergency. The order covers Trump's global 10% flat tariff, increased rates on China and other countries, as well as fentanyl-related levies on China, Canada and Mexico. Other tariffs imposed under different powers, including on steel, aluminium and automobiles, remain in place.
Well, the court's ruling has led to a surge in stocks. The stock 600 in Europe up by 0.4% after an hour of European trading. S&P 500 E-mini futures currently higher by 1.7%. Nasdaq futures up 2.1%, with shares in Asia rising some 0.6% on the back of the news. The dollar did strengthen on the news, but is flat currently and remains significantly down on February's high. Timothy Moe, Chief Asia Pacific Asia-Pacific equity strategist at Goldman Sachs, is urging caution on the possible upside for markets.
With the S&P and other global markets having rallied well over 20% from the lows in early April 7th for the S&P, April 9th for the MSCI Asia-Pacific ex-Japan Index, a lot of optimism has already been priced in. So I think we have to say this is a fundamentally constructive development from the standpoint of lowering tariff risk, but not all the risk is off the table, and markets have well priced that.
Timothy Moe adds that while this might be considered a body blow, it's not the final rendering. The comments come after President Trump's century-high tariffs and his plan to cut taxes, which have spooked investors who caught on to a Sell America trade amid concerns that the trade war would hurt global growth.
Billionaire Elon Musk has announced that he's stepping down from President Trump's administration. The Tesla CEO shared on X yesterday that his time as a formal advisor in the White House is over. By law, Musk's status as a temporary government worker was set to expire as soon as tomorrow, the exact date determined by the number of days worked. This raises questions now about the Department of Government Efficiency effort that he spearheaded, which fell short of his own high expectations for cost savings. His departure comes shortly after Musk criticised the president's flagship tax bill in a recent interview, and after telling Tesla investors in April that he'd devote more time to the firm.
NVIDIA's CEO Jensen Huang says that Chinese artificial intelligence rivals are taking on US firms as their technology develops. Speaking to Bloomberg, he warned that companies like Huawei and others are filling the void left by the American departure from the Chinese market.
Without American technology, the availability of Chinese technology will fail the market. And so, whatever we offer has to at least be competitive and has to add value to the market.
That was NVIDIA's Jensen Huang speaking. He went on to highlight the shrinking gap between US products and Chinese alternatives, pointing to similarities between Huawei's latest AI chip and NVIDIA's H20 product. US restrictions on exports to China have effectively locked NVIDIA out of the country, the largest market for chips worldwide, causing expected losses of $8 billion in sales this quarter alone for NVIDIA.
European Central Bank Governing Council member Peter Casimir has been found guilty of bribery and fined €200,000. The 56-year-old was charged with bribing a senior tax official in exchange for expediting VAT refunds for some companies. A court in Slovakia is delivering the ruling as we speak and is yet to announce Casimir's sentence. Casimir, who denied the charges, will be able to appeal. The guilty verdict won't immediately affect his position at the Slovak Central Bank.
Here in the UK, the government says that it plans to require the country's pension funds to invest in private markets and in the domestic economy. It's a move widely opposed by the City of London's investment managers. Bloomberg's James Wilcock has more.
2 weeks ago, Chancellor Rachel Reeves gathered with Britain's major pension funds to agree to put 5% of their assets into UK private markets. Bloomberg asked her at the time if she would ever force them into it.
We don't need to mandate them if people are willing to sign a voluntary accord. And today we've shown that that is possible, with 17 businesses representing 90% of active savers signing up voluntarily to this.
Now, the Chancellor plans to legislate to give herself the power to set legally binding targets anyway, just in case. Some of the CEOs who signed up to the pact are worried. They fear acting in the best interests of their savers will clash with investing in the government's priorities. In London, James Wilcock, Bloomberg Radio.
Well, those are your top stories this morning on the markets. The Stock 600 is higher 0.4%. The FTSE 100 is flat to the downside. And on Wall Street, S&P E-mini futures are up 1.7%.
That's news when you want it with Bloomberg News Now. I'm Caroline Hepker.
I'm Lizzie Burden, and this is Bloomberg.
The data that matters for your investments.
The entire audit. Start with, the extent of the bill will matter a lot, right? If it's less, then you don't have to have a market that's weak. You can still have a market that is stronger than what people are expecting today.
Amrita, thanks so much, as always. Amrita Sender, founder and director of research at Energy Aspects. Now, coming up in a few minutes, an interview with the PIMCO president, Christian Stracke, on the state of credit. You don't want to miss that. And then later this evening, also, our exclusive conversation with the Bank of England Governor, Andrew Bailey. Now, you can check that out on LiveGo on the Bloomberg terminal. A lot of the focus today will be on markets, on futures, and exactly what we learned and what we'll learn today on this Trump strategy. It certainly be upended after a court has blocked global tariffs. The ruling could eliminate new tariffs on imports from China, Canada, Mexico, and other
My
countries.
birthday
Up
signals
next,
another milestone
Bloomberg
in my
Brief,
life.
and this is Bloomberg.
I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly. As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and
$1 trillion fund for the average person not managing that much money. What should they be worrying about, and what are you worrying about?
No, I think you've got two things. One, you have the known unknowns, right? So, and there at the top of my list would be two things. One is inflation, because I think there is an argument in a tight labor market when you potentially decline the supply or reduce the supply of labor. In the US, you put on tariffs. These things can be inflationary, and there could be a moment where, given the high level of government debt, that the investors suddenly decide, you know what, we want a much higher coupon to lend to, to governments, and so you could see a step up in interest rates, which could be negative for financial markets. Then, of course, all the AI-related stocks. The epicenter here is Taiwan, so you need to watch that. The thing that really scares us when it happens is the unexpected.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Good morning from our global headquarters in New York City. I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda. Tariffs blocked. A U.S. court strikes down most of President Trump's levies as illegal. The White House says it will appeal. And the AI boom continues. NVIDIA calms investor fears over a China slowdown with a solid forecast.
These AI services.
And our exclusive interview with PIMCO President Christian Stracke just around the corner. Now, in the meantime, we wanted to play you some sound there from both the NVIDIA CEO and President Trump, because those are the two stories dominating. We thought maybe it'd be NVIDIA to start the morning, but not so. It is this overruling of President Trump's, at least Trump 2.0, his tariffs. That has sent us off to the races. We're up 1.5% for your S&P 500 futures. NASDAQ up nearly 2%. I got to say, maybe not as big of gains as you would expect, but we are now only 4% away from all-time highs. When it comes to this bond market, interestingly, yields are still higher across the curve. You can see the long end, we closed above 5% for the first time since October 2023. Maybe if we don't get that tariff revenue, maybe you can't have as glorious as cuts. You can't have the big, beautiful bill. That seems to be weighing on investor minds this morning. I should note the dollar also finally stronger. Do we start to price out some of the policy volatility with this latest ruling? We'll get more into it, but first, let's get you some stocks to watch this morning. With that is Bloomberg's Joe Easton. Hey, Joe.
Hey Danny, so big moves in the chip space today. We are seeing Nvidia rising at around 5% in the pre-market. Remember, the sales beating expectations pretty much due to sales of the H2O chip. In fact, better than feared given the restrictions we've seen on China. That was kind of the main takeaway. The Blackwell chip ramping up, of course, I can't forget that one. And we're seeing a feed through into peers. Marvell Technology, Supermicro, ARM, all of the chip stocks boosted by that single report in the pre-market today. But a stock not boosted is HP over in your computer hardware and printers. That one hit hard in the pre-market this morning. The company actually missing expectations on their earnings by around 10 cents, well below analyst expectations. So HP down at around 9% this morning. Then one for the believers, Hailey Bieber offloading her company to Elf Beauty. Now that is worth around $1 billion. I've spent the morning learning all about cosmetics. I've learned that ELF stands for eyes, lips and face. So I'm learning all the time on this one. But that stock, ELF, gaining 8%. News on that M&A deal actually taking the shine away from a weak earnings report from ELF this morning. Danny, keep an eye on that one and check out the Before the Bell opening wrap on the terminal very soon for you this morning, Danny.
We all learned something this morning, Joe. I did not know that either. Thank you very much for that. Bloomberg's Joe Easton. Now, in just a few moments, we're going to be speaking exclusively with PIMCO President Christian Strack on the state of credit. Later in the hour, we'll also be catching up with Julian Emanuel of Evercore ISI to talk about where stocks go from here after the latest court ruling and, frankly, of HSBC on Nvidia earnings. Let's get back to our top story, though. The Trump administration has been given 10 days to lift almost all of its global tariffs after a U.S. trade court deemed them as illegal. The Justice Department has already filed a notice of appeal. For more, we're joined by Bloomberg's Brendan Murray, who leads our global trade coverage. Brendan, help us understand exactly where do we stand now with Trump's tariffs?
Yeah, so this is a pretty big setback for the Trump administration. The White House had basically based its entire economic agenda on the foundation that tariffs would bring jobs back to the U.S., would bring production back to the U.S., and the particular tariff that the president launched on April 2nd, this so-called reciprocal tariff, was the biggest, bluntest instrument he was going to use, and it worked. It got countries to come to the negotiating table. There are, by a couple of estimates, a dozen or two countries that are negotiating bilateral trade agreements with the United States right now. This court ruling throws all of that into question. Why would a country continue those negotiations if the reciprocal tariff that the administration is hanging over their heads is illegal and won't be imposed? So there's a lot of questions, way more questions than answers right now. We should get more as the day unfolds. One of the big ones is, will Trump comply with this court ruling? They, as you mentioned, they're going to appeal, but Trump has tried to stretch the use of his authority in other cases, and he's done so in this instance, apparently, according to this court. So the administration will be watching closely as to how the administration shifts now into its Plan B. It's not the only tool that's been taken away from him to conduct trade wars. There are many others. So trade wars aren't going away, but they might be on pause for the next couple weeks.
Hey, Brendan, thank you so much for that update. A lot to unpack. That is Bloomberg's Brendan Murray. I'm pleased to say that joining us now for an exclusive interview is Christian Strack, President and Global Head of Credit Research at PIMCO. Christian, what a morning. Who knew that this is what we'd be talking about to start? But we really have this year been oscillating between bearish and bullish, fears of trade, fears of fiscal deficits. Where do we stand now? Is this a bullish trade with this ruling in hand, a wave that you want to ride right now?
Yeah, thanks. It is quite a morning, and certainly quite a last few weeks.
But really, there's a few moving pieces right now that are driving what's happening in markets. On the one hand, if you have tariffs getting rolled back, then that could mean less inflation than the market had been pricing in over the course of this year as a response to tariffs, which then would maybe, at the margin, help the Fed be a little more confident that it could start a rate cutting cycle. On the other hand, if all else equal, people were thinking that tariffs and a trade war would dampen economic sentiment and dampen economic growth, then if you have less in the form of tariffs, then maybe you have more economic growth, which then maybe gives the Fed more pause. So basically what you're seeing in the market is a little bit of higher rates today on balance, not much. Market being in the fixed income market pretty well behaved through all of this. And then, of course, an eye on what happened with the NVIDIA earnings and how that helps support equity prices, which in turn helps the economy more broadly. So all in all, it makes a little bit of sense that we've got rates a little bit higher here. But generally speaking, the market is digesting this news pretty well, as it has been for the last few weeks.
To that point, Christian, one of the big left tail risks for this market had been the fact that you could have a president who could put out a Truth Social post, who could, with the press of a button, implement tariffs and send markets in that volatility spiral. If we remove that tail risk with this court ruling, does it make us reconsider what had been a waning U.S. exceptionalism trade? Do U.S. assets all of a sudden look that much more attractive?
Well, I mean, it's early days, of course, in terms of the battle in the courts around tariffs. So it's hard to say that the volatility related to tariff announcements is over. But I think the market, even before today, the market has been saying that that the world can digest the changes in tariffs as they stood before this court decision, and the world can even digest and handle the volatility around the Truth Social announcements. That's why you've started to see stability in fixed income markets. That's why you've started to see stability in credit and equity markets. Now, there will be more headlines and there will be more volatility on this back and forth in the courts around the tariff announcements. But I think the market has been sending a pretty positive and healthy signal that, yes, there's volatility, yes, there's uncertainty, but by and large, we can settle in around what is a base case of weaker growth, a little bit higher inflation, but neither alarmingly so.
You're painting quite a benign picture, Christian. We had heard from a lot of companies, though, that had really hit the pause button when it comes to things like hiring, when it comes to capital expenditures. For borrowers at this moment, how challenged are they? Just how disrupted is the normal business model for funding and liquidity?
Yeah, it's a great question. It's really kind of differentiated across different borrowers. If you look at large cap investment grade companies right now, they're in a good place. They had years ago termed out their debt with low fixed coupon rate debt, and they are pretty well set up for if there is economic weakness. Now, certainly what we hear from most of the large cap companies that we lend to at PIMCO, that there is a pause and a lot of fixed investment waiting to see what will happen with not just the tariffs, but also tax policy. So that pause is real, and it will dampen growth over the course of this year. But by and large, those companies can manage. Where there is more concern is lower down in the capital structure, particularly those below investment grade companies that have borrowed in floating rate liabilities, so bank loans in the bank loan market and also the private credit market, where you do have a lot of companies that pay floating rate debt, and rates are much higher than people had expected today and will be much higher than people had expected over the course of this year. And so the weight of those interest costs is pretty serious on what are already pretty levered companies in the context of an uncertain economic outlook. So you are seeing a moderate but real default cycle emerging in that part of the credit universe, that leveraged loan, bank loan space, and private credit. So far, it's pretty manageable, and so far, it's not anything that is seriously concerning for the rest of the system, but it is something that we're keeping a close eye on.
What are the risks it becomes unmanageable, that it becomes concerning for the rest of the system, Christian?
Yeah, well, you'd really need a hard recession. That's what it'll take. So in a scenario which is PIMCO's scenario of weaker growth, low growth this year, but not a recession being the base case, then you'll see kind of a mid-single digits type of default rate in that leveraged loan space, in that private credit space, and that's difficult. It'll be worse than seen in years prior, but something that will be okay. If you had a hard recession, then that's a difficult world for a lot of those companies to manage through, where you've got the Fed still on hold or will be slower than it would otherwise be, and economic weakness. Then you could see a high single-digit default rate in that space. Now, how that then would trickle out into the rest of the economy is difficult to see. Banks are in a pretty good position. I think one factor that has given us a lot of confidence over the last 2 months has been that if you look at bank equities, bank spreads, they've been pretty well behaved through all of this volatility, which speaks for banks as a turbocharger of volatility, as a channel of weakness, are not as concerning as they might have been in prior years, because banks have done a lot to delever, and banks have done a lot to recapitalize. And so given that, we're less concerned about a systemic shock to the system if we did have that worse than expected economic scenario.
One place that we have seen continued volatility, Christian, is in sovereign bond markets. It's not just happening in the US, it's happening in the UK, it's happening in Japan, but here we had 5-year yields close above 5%. There's serious concern about fiscal overhang and what that could mean for the bond market. Is there a structural rethink happening more widely in bond markets, Christian? Do you look at treasuries and say, these aren't the risk-free assets that they once were?
Well, there's a few things going on, and one is just as basic as portfolio rebalancing. A lot of investors, a lot of PIMCO's investors, see that they have much more exposure to the U.S. and to dollar assets than they had expected, and part of that is just the natural creep of U.S. strength and U.S. exceptionalism that we'd seen over the last couple of years has left people more exposed to the U.S. And so there's a rebalancing, there's a pullback and back into more home bias currencies, away from the U.S. into the euro, into sterling, into yen, et cetera. As that happens, that involves selling of U.S. assets, and that involves selling of U.S. fixed income assets, and that's led to some of the volatility that we've seen. That'll take some time to happen. It's not particularly alarming. What is a little more concerning, though, is more what you mentioned, the fiscal exhaustion. Are there limits to fiscal deficits in the U.S. and in the developed economies, and limits to how far markets will finance those deficits? And there is certainly, that question is an overhang. And one of the open questions now will be if the market had priced in some amount of revenue coming in from tariffs to help to finance, maybe not explicitly, but implicitly to finance the tax policy changes that we're seeing coming out of the Trump administration, then if that tariff revenue goes away, does that compound issues around the deficit, around the Treasury's ability to finance itself? So that will continue to drive volatility in the coming months as markets look to see some resolution, both on the tax policy but also on tariffs and whether they help to finance.
It's such an excellent point, Christian. We're certainly seeing some degree of that play out this morning. And you have seen some other governments, the UK and Japan, take a note of the US's book, that is, pull back on long-term debt issuance. It's something you usually see in emerging markets, of buyers unwilling to buy long-dated bonds. What is the likelihood we get to a situation where you have a fiscal deficit in the U.S. that buyers, especially foreign buyers, to your point, are less likely to fund?
Well, you could say that over the last several weeks, there's been some of that already. There's been some change in portfolio allocation where foreign buyers are saying, we'd prefer to be in our home currencies. We'd prefer to be more diversified and away from the U.S. And so that will drive outcomes in markets in the U.S. It'll drive outcomes in policy as well. And so, there's real focus on this in Washington on the part of policymakers in terms of, keeping an eye on the bond market, keeping an eye on what is possible in terms of tax changes, what is possible in terms of tariffs, to help to stabilize the Treasury market. By and large, though, you can look at the last couple of weeks and see that there has been some stability and some realization that this will be painful and this will be volatile, but it won't be something that gets out of control. It'll be a process over the course of this year and probably into next year of rebalancing these portfolios that will keep pressure at the long end of the curve. And for that reason, PIMCO portfolios are underweight at the long end of the curve. But it should be something that should be reasonably manageable, barring any alarming changes on tax policy or on tariffs.
Christian, I'm pleased to say that you're sticking around with us. Much more to cover. Christian Strack there of PIMCO. Let's first get you some other stories that are trending on the terminal this morning. The Trump administration is moving to restrict the sale of chip design software to China. Bloomberg sources say the Commerce Department sent letters to some of the leading providers of electronic design automation on Friday, telling them to halt shipments to Chinese customers. Shares in top makers of the tech like Cadence Design Systems and Synopsys are falling in the pre-market trade. Every Doge has its day. Elon Musk's time as a special government employee is coming to an end. The billionaire thanked President Trump for the opportunity to reduce wasteful spending in a post on his social media platform on X. His effort to reduce government spending began with an ambition to cut $2 trillion that eventually downgraded to $150 billion. The Doge website currently estimates a total savings of $175. The U.S. plans to start aggressively revoking visas for Chinese students. That, according to Secretary of State Marco Rubio. The U.S. will also enhance scrutiny of all future visa applications from China and Hong Kong. Rubio said students associated with the Chinese Communist Party or studying in critical fields would be affected. Coming up, we'll have more with PIMCO President Christian Strack on the state of the credit market. That's coming up next. You don't want to miss it on your Bloomberg Brief.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Kuala Lumpur. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays at 9 p.m. Eastern Time, right here on Bloomberg. Context changes everything.
You're watching Bloomberg Brief. I'm Danny Berger in New York. Back with us, I'm pleased to say, is Christian Strack, President and Global Head of Credit Research at PIMCO. Christian, we were talking a bit about how volatile markets have been in this moment. And in past moments of volatility in COVID, we saw funding dynamics change. That is, the banks pull back and private credit really take up this mantle. That's not really happening this time around. As you noted, the credit markets are still functioning. How do you see that mix of funding evolving this time in this volatility?
Yeah, thanks, Danny. It's a great question. You know, there's a couple things going on. One is that we are seeing good flows into credit in general, really into fixed income in general, given the fact that equities, having recovered as much as they have, are getting back into a zone where they could be a little rich. Given that rates are quite high, we are seeing a lot of interest in high quality fixed income. That's something that PIMCO sees and other managers are seeing. And so there is demand for liquid credit right now, and there is funding availability, particularly in the investment grade space. But you're right, there is something of a slowdown happening in corporate private credit, which had been a white hot area of demand and of funding for the last few years. That has slowed down. It's slowed down in part because private equity itself has slowed down. If you think a lot of that corporate lending through the private credit market is there to fund private equity deals, private equity deal making has slowed down considerably, and so it's kind of a natural function of that there isn't much private credit issuance. What's interesting, though, is that there has been a significant ramp up of what's being called asset-based finance, basically private credit diversified outside of corporate lending, the traditional direct lending in private credit. So that would be non-bank lending in residential mortgages or credit cards or auto loans or aviation finance, equipment loans, things like that. That is an area that is really picking up speed in terms of the availability of finance outside of banks. So managers like PIMCO are very actively building out strategies to be able to provide financing in these areas where banks really have retreated, but where households still need access to credit. There's still a significant need for credit in residential mortgages, in credit cards, auto loans, things like that. So it's a really dynamic area where there's a transformation in the way that credit is provided into the system, and there is a lot of demand and a lot of supply there.
Just given that, Christian, is this where the next leg of growth comes from when it comes to PIMCO?
This is an area where PIMCO is actively building out, is actively finding areas where our clients are really interested in diversifying away from that more traditional private credit area or corporate private credit area. So yes, this is an area of significant growth for PIMCO. Of course, at a manager like PIMCO that's got a broad platform across public and private credit, there's a lot of growth on the public fixed income side as well. The demand for liquid fixed income with higher yields, especially given the rise in yields that we've seen this year, is significant as well. So really, if you're looking at PIMCO, there's a strong balance right now between that public and the private. But certainly out over the next few years, we do see this rise of diversified private credit, asset-based finance as one of the key drivers of growth in private credit as a whole and at PIMCO in particular.
You're talking about the spread and the private and public offerings, Christian. We are also in this moment where everybody loves to talk about the convergence of private and public assets. And that is, you get a lot of these players teaming up with the more traditional asset managers, offering things like ETFs in the case of Apollo and State Street, but more liquid-ish, let's say, products to a retail audience. PIMCO is also a firm that does span both the more private type assets and the public offerings with various ETFs and mutual funds. What do you think of that convergence? Is this an appropriate wrapper for more private credit type assets?
Well, the convergence is real, and if you look at just how the credit markets are evolving, managers like a PIMCO need to be able to provide a liquid solution to a borrower or a private credit solution to a borrower and have that option across liquid and illiquid. So that is real now, but the question, then you raise a good point, is, well, then how do investors access it? What's the right way for investors to access? There are a growing number of what are called interval funds or funds that provide less liquidity to investors for a wealth or retail audience. And those are being designed pretty thoughtfully in a way that does allow access to less liquid exposures, but conveys to the investors that you need to know that you will not have overnight access to your funds in these products. Of course, then there's really a whole question around how well are those designed, how are they structured, how are they sold, how are they communicated, et cetera. So that's a big area of development and of growth for the industry right now. But if it's done well and if it's done right, and PIMCO's got a whole suite of these products that we've been operating for a number of years now, then it can be this nice balance of access to higher returning, less liquid assets, but in a strategy that's appropriate for the investor.
Hey, Christian, this has been so fascinating. We have covered so much ground. Please come join us again. I know you're headed off to Berlin for Super Return. Hopefully I'll see you there, and safe travels on your way. Christian Strack of PIMCO, thank you so much. Now, as we head to the end of the half-hour quick check on markets, we continue to power higher for risk assets. We're up 1.5%. A little bit of strength coming from the dollar. U.S. 10-year yields up about 4 basis points, 4.52%, just thereabouts. Now, coming up, stocks are up almost 6% since President Trump imposed global tariffs. We're going to catch up with Evercore's Julian Emanuel next. This is Bloomberg.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
Why is Baltimore so important to you?
It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on things like the Preakness and keeping the Preakness in Maryland for generations to come. While we've invested in the convention center, the reason we focused on housing and getting rid of the vacant housing, the reason we focused on violent crime. And now Baltimore is having amongst the most precipitous drop of anywhere in the country when it comes to homicides and non-fatal shootings and carjackings and auto thefts. So if you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know a little bit about Maryland, what would you encapsulate in a paragraph or two about what people should know about the state of Maryland?
I would say Maryland
countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Optimism works its way back into financial markets as stocks and bonds stage one of the strongest rallies of the year. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Alex Steele. Happy Tuesday if you're a long investor in the equity market.
Well, thanks for reminding me. I was going to say it was Monday.
Oh, yeah, no, it's fair enough. It was a dicey pick there. All right, let's take a look where we're headed into the close. Just three basic assets to show you where we're at. You got to buy equities, you got to buy bonds, and you got to buy the dollar. All of that moving together. So it feels like we're in a buy the U.S. phase right now, particularly when it comes to tech, Romaine. But my question is, can that really last?
Yeah, it'll be interesting here, but the optimism is here, at least for this day, and it really began on Sunday with the U.S. government's one-month reprieve on opposing higher tariffs on the European Union. Now, of course, we've been here before, so add the grain and salt, if you will, but the chatter on Wall Street is that the trade war does start to feel a little bit toothless now, and the contours of other policies emanating from Washington suggest, at least for some, that the darkest days may have indeed given way.
Nothing's really changed in the economic environment. You just have policy uncertainty. And I think people are just going to wait policy uncertainty out. They do think there's a light at the end of the tunnel, that there will be some certainty, whether it's the tax bill or some of the trade terms. But I think they're just waiting it out.
And as far as that light goes, consumer sentiment, which correlates strongly with consumer spending, has indeed rebounded. The latest Conference Board data shows this month's stock rally and the tamp down in trader rhetoric did put consumers in a better mood to spend, though it does come with asterisks, including the continued deterioration in the consumer outlook for the labor market. And we're going to get a better non-survey read on the consumer this Friday when monthly PCE data that is projected to show a dip in both personal income and personal spending. That seems to be what the bond market is focused on. While appetite to buy U.S. government debt is on display today with the solid sale of two-year notes, the premium that investors are demanding to be locked into anything longer than that still remains at the highest, Alex, in 11 years.
That's right. And even though we're seeing sort of volatility come down in the equity market and equities rise, there are still some question marks within the volatility for FX and the bond market. And that's the chart that you're looking at now. In particular, take a look at that green line. That's FX volatility. Sure, it's coming down, but it remains pretty elevated. And that white line is bond volatility. It's the MOVE index. You can see it ticking up just a little bit, meaning that if other U.S. asset classes continue with this kind of volatility, will that eventually continue to infect the equity market?
And as we kick things off here on this Tuesday afternoon to these closing bells, let's bring Tony Rodriguez into the conversation. He's the head of fixed income strategy at Nuveen, and he joins us here in Studio 2. Great to see you, Tony.
Good to be with you.
What does the fixed income market feel like to you today? Is there a little bit more optimism than maybe where we were, a couple months ago?
I think there is a little bit more optimism. It's certainly a calmer market. We had a couple of things you mentioned. Certainly the data was supportive. We had Japan over the weekend, which a lot of this kind of emanated last week in Japan with a kind of a weak auction and fears and concerns there. So they kind of walked back a little bit. That eased some of the fears. But I think right now the uncertainty level is still what is most dominant in that we're settling into a range that feels very tenuous because there's still so much uncertainty, not only about where tariff policy will end up, but then because it's such an unprecedented level that we haven't seen before, what is the actual economic impact going to be on consumers, for example?
But how do you assess that? I mean, you go back to Friday when we started the morning with Trump basically threatening 50% tariffs on the EU. By the end of Sunday, basically that was off the table, at least until early July. But of course, even if he doesn't go through with the 50%, in theory, we're still going to end up with tariffs meaningfully higher on the European Union than where they were, 4 or 5 months ago. So how do you even assess that as a bond strategist, a bond investor?
So, it's very difficult, but what we're thinking is that we're going to end up around this kind of 10% tariff broad level with some very specific industry tariffs at maybe 25%, China a bit higher. That's what we're modeling. That alone leads to growth this year that is down to 1% growth in the U.S. So with that is where we start to say you're going to see maybe towards the end of the year a bit of a decline in rates. You'll begin to see towards the end of the year the Fed begin to start a little bit of easing because of that softness from the economic perspective. And from a credit risk perspective, you may begin to see a little bit more softening, maybe a little bit higher defaults, a little bit more weakness in terms of financial statements from companies. So that could lead to a little bit of a mini risk off. We're not thinking recession, but we are thinking there's going to be this slowdown from those tariffs.
So looking at the bond market in the long end, I was mentioning that volatility. We're at that 5% level. We're at the lowest level for yields in the 30 years since March, but that's whippy. I mean, last week is a very different story. What kind of volatility becomes really negative for other U.S. assets?
So right now, we would say that the volatility is already negative for U.S. assets, but has the potential to get worse. Because some of right now what we've seen is, hey, throw out a large number on tariffs, kind of pause it, walk it back. But where we're going to have the most difficulty, we think, in terms of actual trade negotiations, finalizing in a deal, are with the largest trading partners. So with Europe, with China. UK, that was a fairly easy example for a number of reasons. Now I think is when it gets really difficult. And so therefore, we think this volatility is likely to return with greater intensity as we move into the fall.
As in, like, the UK didn't have a deficit with us. So that was probably why that was so it changed.
Exactly.
Okay, so the volatility winds up picking up. Where in the credit market and the treasury market then becomes a safety, nice yielding play?
Sure. So when you think about like the treasury curve, we do think that the intermediate part of the curve is pretty well positioned. There's some stability there because we do think the Fed will start to cut rates, where the long end has a little bit more risk because substantial deficits coming from the tax bill, et cetera. Where we think from a sector perspective, we do think that the municipal market is pretty attractive because it's somewhat insulated from the tariff story. We think financials are in pretty good shape, strong balance sheets, not quite as much exposure directly to industry-specific tariff levels. So think of the preferred market. And we do think that floating rate assets are attractive because we're not expecting a big drop in rates. We're not expecting a huge cuts from the Fed. So floating rate assets at the higher end of the low quality spectrum can still generate 6.5% to 7.5% returns. That looks pretty good relative to where we think equities and other assets are.
Even in sort of a range-bound market.
Exactly.
Really interesting. And on the Fed cuts, though, I mean, when you say the Fed starts to cut, that sounds like you're anticipating multiple cuts this year?
We are. We think that we might get 2 this year, maybe start in September, could be delayed to October. So we get 2 this year. Next year, it's kind of a question as to whether they stay there because the economy proves to be more resilient than our 1% forecast. If we're right, we'd expect to see another 2 cuts next year, getting down to kind of a final equilibrium level in the low 3s for the funds rate, and the curve being steeper than historically because of all the pressure from high deficit levels, high borrowing needs.
One last quick question, and this is kind of on some of the moves we've been seeing in the bond market globally. Is this in sync? I mean, should we be drawing a line between some of the moves that we saw here in the U.S., what we're seeing in Europe, what we're seeing in Japan and elsewhere, or are these all sort of their own independent stories?
There's a little bit of both. The in sync part is that tariffs are really the dominant economic factor, and all of these regions are dealing with that. And really related to some of these tariff policies are things like Germany and Europe suddenly deciding they're going to loosen up on their fiscal kind of break and they're going to spend more on defense. So that leads to this whole similar kind of rise in the term premium, high levels of borrowing needs, and that requires higher rates. So very similar, but there are some unique circumstances in each country.
All right, Tony, always smart. Tony Rodriguez, head of fixed income strategy at Nuveen, kicking us off to the close here on this Tuesday afternoon. A conversation about proxy season coming up next. This is Bloomberg.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
And follow my instincts. My legacy will be looked on kindly by my friends my family, and hopefully generations to come.
All right, as we wind through the proxy season, the Trump presidency has actually brought with it a proxy battle slowdown. The numbers are down annually for proposals related to things like climate, ESG, executive pay. But with battles like Elliott and Phillips 66 playing out as we speak, we want to get an outlook on the rest of the year. Kyle Likafet joins us right now. He's partner and co-chair of shareholder activism and corporate defense practice at Sidley Austin. And we should point out that Bloomberg does rank Sidley as number one when it comes to legal shareholder activism defense in North America. Great to see you.
Thanks for having us back, and thanks for having such excellent data to underline our prominence in the sector.
Well, let's talk about this data, because there's been a lot less data coming out. I mean, there was a slowdown in activity to start this proxy season. I know we're not quite all the way through it, but the numbers are clearly down. And I am curious if there is a direct link between some of the uncertainty that was coming out of Washington and the inability of shareholder activists to really agitate for anything out of companies in this environment.
That's an excellent point, Romain. And it is true. The Trump administration had a big impact on this year's proxy season. Now, stepping back to in November of last year, activists were popping champagne when Trump was elected. Why? Lower taxes, deregulation, easier path to M&A, all of this fuels shareholder activism. But apparently the activists didn't listen to everything Trump was saying, because they overlooked the fact that Trump was also talking about tariffs.
Yeah.
And once Tariff Liberation Day came, that really was a shock to the system. I mean, we, in our practice, at least 14, maybe 15 of our proxy fights were abruptly withdrawn or settled after Liberation Day, because the market turmoil made it really, really hard for activists to make money.
Do you get a sense, though, that some of those proxies that were withdrawn, that they could be reintroduced in the next go-round, or is this kind of the moment has passed?
Well, if those companies don't perform, the activists might be back next year. But, I mean, a lot of activists decide, okay, this is not the time to go after management teams in a public way, when all management has to say is, look, we need to focus on the supply chain right now.
Gotcha.
Right. It's like also going after like a retailer during cold weather season. Well, it wasn't that cold, and then you can't have a conversation. Is there one sector that you feel like is riper than others for activists right now?
I think there's been one sector that has been overlooked for several years, which is insurance and the financial sector. I think with deregulation in these sectors, we're going to see more activism. So far, we had only a handful of activists who really focused on this sector, like Elliott, Third Point, and Carl Icahn. But I think we're going to see more of that going forward.
Speaking of Elliott, Elliott's been busy. They just won 2 board seats at Phillips 66. They're also in BP now and increasing their stake there. What did you make of the outcome with Phillips 66? 2 board seats, that's it.
Well, that was a big win for Elliott. Look, this
Didn't they want like 8 or something?
Well, they wanted 4.
Okay.
They could only get 4 because Phillips 66 had a so-called classified board where only 1/3 of the board seats were up for election. So they won half of those seats. And that was the first time Elliott took a proxy fight all the way to a vote. And the interesting part here is this was a shareholder base that is a defense lawyer's dream. You had 30% retail, 24% were held by the big 3 index funds, BlackRock, Vanguard, State Street. I mean, it was very difficult to lose any seat on behalf of the company. Still, Elliott managed to get 2 seats. And in fact, they came very close to a 3rd seat, if my information is correct. Only one investor could have turned things around. So it was a big win for Elliott. And the reason why they won this proxy fight is because the company made a lot of unfortunate mistakes. And I mean, just generally speaking, when you're defending proxy fights, you need to be a little bit like Iceman in Top Gun, right? Make no mistakes. And and rest in peace, Val Kilmer here. But the point of the matter is the company made a lot of unfortunate mistakes. For instance, they put out questionable numbers that could easily be disputed. They didn't send all of their director nominees into meetings with ISS, which gives very influential vote recommendations.
Right.
It was really a series of questionable choices that led to this defeat.
I'm curious. There's another battle that was going on, and that was between Beacon Roofing trying to fend off a takeover by QXO. I don't know if you have a movie analogy for that. It's like Brad Jacobs, like hanging from the Burj Khalifa, like Tom Cruise or something. But he appears to have won this. I mean, right? They did come to an agreement, and we should point out you were involved.
Yeah.
You and Sidley were involved in that process, correct?
Yeah, I was leading the legal defense of Beacon Roofing Supply. It's not all said and done. The deal closed last month, so I think I can talk about it. Was a fascinating battle. Was the largest hostile takeover tender offer in the United States with $11 billion. Yeah. And the board went essentially from...
You mentioned QXO. Thank you. BP has Elliott now. What took so long to get an activist investor in BP? And how is that different than, say, other activist investors in other companies in the U.S.?
Well, it's one important difference, and it's the first letter in BP. It's British, right? They're in the UK. They're located in that jurisdiction. And it's really hard to run proxy fights in the UK. It's a different legal framework. The investor sentiment is very different. And let's not forget, BP is a national icon. I mean, it's literally in their name, right? And 50% of their shareholder base is retail. So if you think that Phillips 66 was a defense lawyer's dream, I don't want to even talk about BP. It's almost a proxy fight you cannot lose as a company. Still, I think BP, based on what we read and what I hear from friends surrounding the company, I mean, they've been very receptive. And look, it's just a reality of life. Elliott is oftentimes right. Not always, but they're oftentimes right. And I think the points they raised were largely agreed to by the company, and I think they're working constructively.
All right, Kai, always a wonderful conversation with you, always great insights. Kai Liegefeld is a partner and co-chair of shareholder activism and corporate defense practice over at Sidley Austin. When we come back, we're actually going to continue talking M&A. Maybe it's M&A. U.S. Steel, those shares rising here on the back of an announcement by President Trump.
Exhausted investors digesting the latest tariff talk out of Washington.
The only thing you can do is prepare.
All right, let's get right to our top calls. Big movers on the back of analyst recommendations. And we start off today with CoreWeave. Barclays cutting to equal weight. In fact, it's the first downgrade since the cloud company's IPO. And despite raising its price target to $100 from $70, the firm says the short-term upside is limited given the recent rally. Long-term, though, Barclays is still optimistic on CoreWeave's role in the new generative AI world. Those shares still on a two-day win streak right now, and they've almost tripled since it went public in late March. Up next, Southwest Airlines, Jefferies upgrading to hold, boosting the price target to $33 from $24, with the analysts citing growing confidence in realizable initiatives for the airline, like cuts to underperforming cities and new connections elsewhere. Those shares having its best day going back to April 9th. And finally, U.S. Steel, Wolf Research cutting to peer perform. Now, that note was published after Trump announced a planned partnership between U.S. Steel and Japan's Nippon Steel on Friday. That's a deal that the analyst considers negative for sheet mills, saying it will create excess supply. The shares of U.S. Steel nevertheless up about 2% on the day, and those are some of our top calls. We do want to stay on that last one and take a deeper dive into what exactly is going on with U.S. Steel. Timna Tamners is metals and mining analyst at Wolf Research, and she joins us now. All right, Timna, there's a lot to unpack here. You had Trump on Friday saying there was some sort of partnership going on between these two companies. Today, there's been reports both from CNBC as well as Bloomberg citing that this may actually involve some type of an actual sale of the company to Nippon. What do you know?
Hi, I think it's really a function of President Trump not wanting to explicitly say that he's done a U-turn on his prior opposition to the deal. And so now pitching it as if this were something kind of different than what it was intended to be all along. And I think it is going to be a takeover of U.S. Steel by Nippon. The headquarters was always going to be remaining in Pittsburgh, and leadership would remain in the U.S., kind of a Nippon USA. But I think it just kind of sugarcoating what will be probably what was initially pitched, the takeover of U.S. Steel by Nippon.
One interesting wrinkle to this, according to Bloomberg reporting, citing people familiar with the situation, is the idea that the U.S. government would actually have a shareholder stake. In fact, some degree, I guess, of a controlling shareholder stake, at least when it comes to decision-making power. Does that make this a better deal?
Well, it's certainly unprecedented. I don't even know what to make of that. I've never had a company in over a couple decades of covering the space where the government could decide whether or not they produce or, help them make decisions. So I don't even know what to make of that, honestly. I think, broadly speaking, the only government interest would be just in the union, maybe, which already has opposed the deal, or keeping them producing, perhaps, to try to keep the price lower. I don't know what other interest the government would have in the space, but I think it was intended to be a sweetener to get the deal through in the last couple weeks.
There's also rumors of a new investment of $14 billion from Nippon Steel to U.S. Steel that could result in a new steel mill. A new steel mill? Like, A, do we need that? And B, is that realistic?
I absolutely could build a new steel mill. There's nothing stopping anyone from putting it in the ground and adding capacity, although we think there's plenty of it and could be excess in our sheet storm thesis. But yeah, absolutely. I mean, Nippon has been pledging more investment as, again, part of getting this deal through. And the sweetener, $14 billion, to your point, could be a brand new steel mill and could be enhancements of the existing assets that have been kind of underinvested in U.S. Steel over the years.
But do we need it on a supply and demand basis?
No, our analysis says no. I mean, there is quite a bit of new steel capacity coming from existing players over the next several years across sheet, rebar, plate, and galvanized. But, could be taking more share from imports. We think imports will take a smaller stake in the market given the Section 232 tariffs. But we ultimately see risk of oversupply in the steel market, and certainly by the end of the decade, taking share perhaps from existing players even.
So, I mean, what does this mean? I mean, if we just assume hypothetically that this does go through, does this make U.S. Steel then, just strictly from a financial standpoint, does this kind of make this a little bit maybe of a worser case for the company? Is this going to put the company, I guess, in a worse financial position long term?
Well, I think this will be a cash infusion in U.S. Steel, so they'll be more competitive longer term. I mean, the debt for the combined company, given, almost $30 billion of investments for the acquisition itself and then further investments, that's Nippon Steel's issue. But I think that U.S. Steel is a standalone. Well, it won't be a standalone, but U.S. Steel within the broader Nippon Steel will be more competitive, lower costs. They'll have probably greater capabilities, and so will make them, more competitive, but also could be threatening to other steel mills that don't have the wherewithal to make those investments longer term. So we think the broader steel market implications is lower price for longer, more supply in the market, but a more competitive and capable steel industry longer term.
Where does this leave the likes of Cleveland-Cliffs?
Cleveland-Cliffs is a company that doesn't have the same wherewithal to invest in their assets. That's why I think they will be challenged to stay competitive. As it stands right now, they have not the same bandwidth for investing in assets that in many cases are over a century old. They are competitive with U.S. Steel for now in exposed automotive, but there are quite a few players gunning for producing that same product. So I think by the end of the decade, there'll be a lot more supply gunning for that same tonnage and a lot more options at lower prices for the auto industry.
All right, Timna, always a pleasure. Really good to chat with you. Timna Tanner's metals and mining analyst, one of the best out there at Wolfe Research, joining us there on U.S. Steel. But the sweeteners are so interesting, and you can see that also with the talk between President Trump and Ursula von der Leyen of the EU, right? Like the sweeteners and just having like a good conversation and putting some overtures out there makes a huge difference when it comes to President Trump.
Yes.
Cool. Okay, coming up, a conversation with Chad Treadway, the global head of real estate for JP Morgan Asset Management, his perspective on REITs and where to invest in data centers and what the impact of tariffs could actually be on the real estate market. You take a look at rates. Yes, they're coming down, but they're still a little sticky, around 5 percentage points for that 30-year. This is The Close on Bloomberg.
3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Boston.
And I'm Alex Steele. The equity rally underway, really seeing it play out within the NASDAQ, particularly the Mag 7, that sort of AI theme headed into NVIDIA earnings tomorrow, and that sort of U.S. exceptionalism theme alive and well in the technology space.
Yeah, you're seeing the Philadelphia Semiconductor Index up 3%, really leading the charge here. And that's all anybody seems to want to invest in. There was a great story on the Bloomberg earlier today about Chamath Palihapitiya, of course, over at SoCal Capital, and, of course, a very early investor in Facebook, which is how he made his money. Big land deal out in Arizona here. And it's not just for the data centers themselves, but there's a huge power component in all this where he can seize some of the power in there and kind of, I guess, resell it to some of these data centers as well.
21-acre land deal. Huge data centers, and then upwards of 1,500 megawatts of power. What's interesting, though, is that at some point you're going to move from the large language models, huge mega data centers, into smaller, close to the source inference modeling. And that's going to be different power. That's going to be a different landscape. And I just wonder where we are in that shift.
Yeah, I don't know. I know we've reached out to Chamath for comment. Of course, he's declined so far, but we'd love to have him on the show.
Oh, shameless plug.
Explain. Yeah,
all right, well, joining us to discuss the perspective of investing in data centers as a real estate play is Chad Treadway, the global head of real estate for JP Morgan Asset Management. Chad, always good to see you.
Great to see you.
So that's the data center pitch, right? Are you guys invested in data centers?
So first, look, there will be winners and losers in data centers.
Yep.
And we study the space incredibly closely. What we're seeing, though, is data centers have a lot of components. So first of all, in our portfolio, the average industrial site is roughly $200 per square foot. Data centers, $500.
Wow.
So 2/3 of a data center is actually the power, the technology, and everything that goes along with the data center, not the real estate. So for us, we've gone more pure play real estate, but we do see technology in other places like manufacturing, and we're buying a lot of industrial focused on robotics, manufacturing, and how do you make goods cheaper and faster all around the United States.
Which maybe the data center will use those things then in its production. So when you say pure play real estate, what does that mean?
So we love housing. We talked about it last time we were here. We think there's a structural just demand for housing. Over 5 million housing units are what we're going to need to satisfy the demand in the United States. So we're seeing residential rents continue to grow. Additionally, everyone talks about industrial, but what they miss is what's actually happening with the CHIPS Act. So if you look at the CHIPS Act, there's over $1 trillion of investment in California, Arizona, Texas, and New York, all driven towards manufacturing. So just to give you an example, we have a site in Torrance, California, and it's really hard to find manufacturing talent. So what happens? You have to use robotics for efficiency, and we have 4,000 amps of power in our site. A traditional industrial site is 500. So it's a big trend and something that people should be focused on.
What's the growth rate look like long term, particularly when it comes to manufacturing of robotics and other kind of high-tech areas similar to that?
It's huge.
Yeah.
So as you know, American exceptionalism is something that's happening. The new administration is very focused on things made in the United States. Manufacturing demand is at all-time highs. I think there's a recent survey from Deloitte that said you need 3 million more workers just in manufacturing to meet demand.
Yeah.
So for us, we're focused on everything from supply chain to the actual manufacturing facilities.
How do you determine, though, geographically, where to make that investment when it comes to robotics and all these things, particularly if there aren't as many humans involved? What's the decision process?
Again, a lot of times you follow the dollars. So I think a couple things happen. So one, obviously our cost of capital is higher, but that also means home affordability is just much more difficult. So if you look at it now, the parity between owning or renting, it's 50% cheaper to own a home today, or it's 50% cheaper to rent a home today than to own. Which is the highest it's ever been. So if rates stay higher for longer, that imbalance will continue.
Oh, Romaine, sorry. Yeah. He's renting and looking for a house. That's the last thing you wanted to hear. Another trend that we tend to talk a lot about is senior living and student housing, and those two being some, good trends, never going to go away in the industry. Do you agree with that?
We love it. So we look.
Oh, you do? Okay.
We look at both student and senior. The demographic trends just say it's a great place for rent growth. I think really, though, the main focus here is picking the right partners. So what's nice is we've got a lot of partners that we've dealt with over years, and we're able to really focus on the right assets in the right markets.
So when we get back to this idea of finding these opportunities and the competition for them. I am curious what that looks like. I mean, you started off with that great anecdote about the differential that you're seeing in square footage prices for data centers, because obviously everybody's going in that direction. But some of the other areas that you are invested in are also, there's no secret that these are hot areas, at least from a long-term trend perspective.
Look, it's frothy.
Yeah.
One of the advantages we have, though, is 1 out of every 2 Americans are JP Morgan clients. So we've got data on where people are going, migration trends, investment, household formation.
Yeah.
It's been huge for us. I think the other thing is we've been around for over 60 years. So not only do we have macro themes that we work on top of house, but we also are on the ground in these markets every single day. And we've got an $80 billion portfolio around the world and over 10,000 clients across the bank.
I do have to ask you, though, about the political side of all this. I mean, when we talk about macro themes, you can't really talk about that without talking about what's going on in Washington. You mentioned the CHIPS Act and the IRA. You have an administration that is pushing policies, in some cases, that would roll back some of those provisions from previous administrations. So how do you model, without getting too deep into politics, how do you model for the uncertainty of Washington policy right now that is short-term in nature but could have long-term impact on your market?
It's a great question. We're long-term investors. So first, we model every outcome, but we look at the fundamentals. That's what's great about real estate, which is cash flow. How do we create returns for our investors, and how do we do it using our unique advantages? One of them is just supply demand. So we know we need 5 million houses in the United States just to meet demand. It's undersupplied, will continue to be. I think, secondly, we just look for fundamental shifts and imbalances. We look for the most fragmentation, and that's where we go and find value. For example, looking at industrial, but looking at it slightly differently. Who's manufacturing? Why are they manufacturing? How do they do it using technology versus just a big warehouse in the middle of nowhere?
But to Romaine's point, I'm assuming you're staying away from anything that may have to do with production tax credits or other tax credits, right, that could go away. I'm just thinking of solar. Like, if you had bet on sort of a solar farm or some kind of property with solar, that's out the window now.
Look, it depends. So we do look at solar, we do look at ESG, but a lot of times it's got 2 benefits. So yes, it's good for the environment, but it also lowers costs, which drives return for our investors. And typically it's a 2-sided investment. 1, are we doing the right thing for communities, which we always will? But 2, how does it drive great returns for investors over the long term?
All right, Chad, I have to leave it there. Always a great conversation. Always great to talk to you. Chad Treadway there. He is the head of Real Estate Americas at JP Morgan Asset Management. All right, when we come back, grab your popcorn here. It was a big weekend, big Memorial Day weekend.
AMC stock up over 22%. U.S. and Canada box office revenue coming in at a record for the Memorial Day holiday weekend. All the other movie theater stocks up as well. Joining us to break it down for today's Stock of the Hour is Bloomberg's Thomas Buckley. Hey, are we surprised by this number, or where were expectations?
I think, expectations were certainly lower than this. I'm not sure they were necessarily entirely surprised on the basis that these were 2 extremely popular films, really providing something for every quadrant of the family, and the diversity of the films and their success to date, critically and commercially, has resulted in the numbers that we've seen today.
So, break down the first one. Let's start, of course, with the real winner, which is Lilo and Stitch. Sorry, Alex. So when we talk about the appeal, particularly of a movie that's aimed at families, aimed at kids, was that sort of designed to do better? The idea that, if kids want to see it, you're pretty much going to have to take your child. And, of course, you got to drag the adults along with them. So, ergo, you get a better box office sales?
I think that's certainly the case. It's really interesting. Lilo and Stitch has been one of Disney's most successful franchises in recent decades. Even last year they sold, I think it was $2.6 billion worth of merchandise associated with the franchise. So it's very clear that for many children and families, this became a must event.
Right. But it was a little controversial. Doing a live action version of it. And I think when the previews first came out, there were a lot of derision, if you will, on social media.
Well, it's true the animated property is incredibly beloved, has been for decades now. I think that, Disney has leaned into live-action films. Some of them have seen success, others less so, but certainly this one is seeing gigantic success and appeal.
It's like when they did live action for Lion King. It's like, okay, but they actually weren't lions, so let's not, it's like a little bit of a live action, quote unquote. I'm curious that Lilo and Stitch beat Mission Impossible, which I did see. How do we feel about that? Like, this is the end chapter to Tom Cruise's Mission Impossible legacy. It got beat out in the first one to Barbie and Oppenheimer, then it gets beat out for Lilo and Stitch.
You know, it's really interesting. I think that even though we have a sort of number one, number two narrative, nonetheless, I mean, it's a record for the franchise, for the Mission Impossible franchise, for Paramount. I think also, you know, perhaps Lilo and Stitch has an advantage in it being a shorter film and therefore able to slot more theatre screenings with its shorter runtime. And I think we'll have to see how these films leg out over the coming weeks. I still think the Mission Impossible film is going to have tremendous appeal in the months to come.
Yeah. So what's next here? I mean, I'm kind of looking through the slate, and it looks like we got to wait on maybe a few more weeks here before we get back to some of the really big movies. I'm really excited to see that F1 movie. But what's kind of the next big thing that Hollywood is kind of hanging its hat on?
You know, I think certainly the coming months have some incredible, you know, potential ahead. I mean, we are thinking about F1, for example, the film that you raised, that's being made by Apple and distributed by Warner Brothers. We also have a new Jurassic Park film that I think is going to perform very well.
Is that animated or live
in
action?
July. That'll be live action. A lot of it filmed in Thailand. I think that's going to be an incredible picture. We also have Superman from Warner Brothers coming out July 11th. So certainly a number of titles that could drive the summer box office up to about $4.2 billion domestically.
I mean, when, you know, anecdotally, when I saw Mission Impossible, Tom Cruise comes on the screen for a good 5 minutes being like, thank you for coming to a movie. Movies are important. Thank you for doing this, blah, blah, blah. I appreciate you. So that accounted for the 3-hour running time of the movie. In terms of stocks, when we're taking a look at what benefits, we obviously have the movie theaters benefiting. What are some of the other beneficiaries here?
You know, I think certainly so movie theatres being an important part of it, as you said. I think also, you know, makers of the technology that's licensed to theatre operators such as IMAX are doing very well today. IMAX contributed 20% of the domestic box office for Mission Impossible this weekend, and we're really seeing the stock respond today.
All right, Thomas, really appreciate it. Thomas Buckley of Bloomberg joining us. I'm assuming that you didn't see either of these movies.
No, but I'm informed by my son that apparently we have to see Mission Impossible part, 15.
Okay, it's technically part 8, but it's part 2 of number 7.
Right. So we will go see that.
Okay.
I'm sure. I don't know about. He's a little too old for Lilo and Stitch, but.
Well, okay, fair enough. I mean, it's 3 hours, so. You know,
okay, that's fine.
Prepare
I mean, you know, I can always use a good nap.
Oh,
so.
I mean, it's all right. My daughter made it through. You'll be fine. All right. We're about 15 minutes away from the closing bell. Here on this Tuesday, Holly McDonald, Chief Operating Officer with Bessemer Trust, will be joining us to the close. As we look on this Tuesday, a big rally underway, over 2% for the NASDAQ.
Progress never stops. Neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
We're settling into a range that feels very tenuous because there's still so much uncertainty, not only about where tariff policy will end up, but then because it's such an unprecedented level that we haven't seen before, what is the actual economic impact going to be on consumers?
Tony Rodriguez over at Nuveen talking about that tight range that we're seeing right now in the bond market as we keep an eye on the equity market as we get closer to the closing bell. It's just about 10 minutes to go. Alex, stock still holding around the highs of the day.
I mean, so far so good. Volume is really light, though, so keep that in mind, right? Short and holiday trading week, but tech really the outperformer. And when you have bonds rallying as well as the dollar and technology in the U.S., it begs the question, is this the U.S. exceptional than trade coming back? Just take a look at NVIDIA, up almost 3%. And Salesforce up also, despite the acquisition.
And I just want to point out, too, I mean, I know tech is leading the charge here, but you're seeing a lot of consumer discretionary stocks, particularly those that were exposed to tariffs, really being bid up today. Things like Deckers, you're seeing a lot of the travel companies like Carnival. Maybe that's on some optimism about the consumer. So the complexion of this rally is a little bit broader than just tech.
Well, not only that, but President Trump said that he agrees with U.S. Treasury Secretary Scott Bessent that we shouldn't make T-shirts in the U.S. So maybe there will be some kind of exceptions for certain sectors, which could also help buoy and optimism.
All right. Well, let's see if how optimistic our next guest is feeling as we get closer to the closing bells. Of course, just about 8 minutes goods until we get there. Stocks near the highs of the day. Holly McDonald joins us. She's Chief Operating Officer at Bessemer Trust. Holly, great to see you.
Great to be here.
We did get a little bit of a bright spot today, not just necessarily on the trade front, but we got that conference board data that did show a rebound in consumer confidence from what had been a pretty miserable 3 or 4 months. Now, there are a lot of asterisks that go into that, but any improvement, I think, at this stage would be welcome. And it's kind of a nice prelude to the big PCE data that we're going to get on Friday with regards to personal income and personal spending. Do you think that the stock rally, the tamp down in trade rhetoric, and some of the other things going on in Washington or maybe not going on is sort of emboldening consumers and investors alike right now?
I think so at the margin. I'd say overall we still are in a period of uncertainty, and until we see more of a clear resolution to the tariff discussions, it's still going to be tenuous. But days like today are a reminder that the volatility can go in both directions. And it was, to your point, a meaningful jump in consumer confidence today.
So when you get a reprieve like on the EU tariffs, and I know that's just until July 9th, you see data readings like we got survey data that's positive. Does that give you the confidence to rush back in to consumer discretionary stocks or tech stocks, et cetera?
So I wouldn't necessarily be rushing back in. We've really been invested throughout this period in making changes more at the margin in portfolios at the security level. We've also lowered our U.S. overweight since the beginning of the year, about halved it, and added some exposure to Europe. But I think this is the type of environment where you want to avoid really rushing either way. Things can change very quickly, as we're seeing even in just the last 24 hours.
So does that mean that the U.S. exceptionalism trade is there, just muted, or it's just there maybe with big tech?
I think structurally, Alex, it is there for the medium to long term. I think it had maybe gotten a bit over its skis when we got to the beginning of this year. You combine some valuation difference between the U.S. and the rest of the world, plus the higher uncertainty in the U.S. versus the rest of the world. And that caused a bit of a pullback. But I still think structurally there are many reasons why the U.S. will remain exceptional. We still have 9 of the biggest 10 companies in the world, and those large companies are still doing pretty well, and we're seeing that in their earnings so far this earnings season.
So that feels to me that that's a buy the dip on those kind of companies. Like, is that what we've now relearned?
I think so. There are some important backstops in place here, both from the policy side, from the administration itself, I think is the most obvious backstop when markets sell off too much. And ultimately, I think there's more of a backstop from the Fed, too, probably not in the coming months, but let's say later in the fall. If we see some tariffs calming down a bit, and then if we were to see growth pulling back a bit as well, I think there's a Fed backstop, too.
You said that you're still overweight the U.S., but you just reduced that overweight a bit.
That's right.
What about technology? Are you still overweight U.S. technology?
Slightly. Over the course of 2024, really, ahead of the tariff news, we started to pull that back based mainly on valuations, where there's some very powerful stories, but the valuations had just gotten too far ahead.
But some of those powerful stories and the outsized valuations that come with them are much more about this sort of big structural change that AI and the associated technology would bring. And we should point out we get NVIDIA earnings tomorrow, so we'll get another peek under the hood as to how things are really going here. Do you look at a company like NVIDIA and you say to yourself, it's just too rich, even though there is a lot of promise potentially for what they're selling and what they're trying to do?
We still are overweight in NVIDIA, not as prominently as we were in previous years. But when a company is growing at these astronomical rates, even if they're really not able to maintain, say, 70% gross operating margins, then this is still a name that we're going to want to hold.
Interesting. Speaking of manufacturing in the U.S., Stephen Miron, who is on Fox Business right now, economic advisor, says we can't make everything in the universe in the U.S., which begs the question, have we seen the worst case scenario? That now is just going to be sort of bringing back in the chocolate and rather than just throwing it out. That was a terrible analogy.
Chocolate?
Yeah, I don't know where that came from. But the point is, like, have we seen the worst case scenario? So from here, it's going to be much more about picking the sectors that are going to benefit the most versus pricing out good news.
I think largely we've seen the worst of the headlines on tariffs. Again, it'll be some period of uncertainty until we actually see the resolution. So still choppy, but we're optimistic that the market will remain resilient here.
What other sectors do you like?
So industrials is our most pronounced overweight. I think as companies look to shore up their supply chains, and really tariffs here can be a boon to encouraging them to do that. Their companies still have a lot of cash, and we see them continuing to put that to work on the capex side. So industrials, we think, can benefit.
Are you comfortable right now with where yields are at least in the Treasury market?
It's really been a broader range, I think, if you look over the last year and a half. And I think within that, from a long-term investor's perspective and primarily focused on equities, so long as we're really in this wider trading range, I think that equities can move through that.
All right, Holly, great stuff. And great to have you here on set in the studio, too. Holly McDonald.
Pleasure.
She's the Chief Operating Officer over at Bessemer Trust as we count you down to the closing bells here on this Tuesday afternoon, Alex Steele. And I do want to go through some of the names that are moving because we talk about this idea, of course, big pops and names like NVIDIA and some of the other big tech stocks. Apple getting a nice bit. Remember, that stock was down like for 8 straight days, and they're getting a little bit of reprieve. But I think it's interesting to see a lot of these sort of consumer discretionary names, the Nikes and the Deckers, these companies that everybody had kind of discarded and saying, okay, they're just dead. Saying, okay, maybe there is life here for these names.
Right, and how much of that is just we are oversold and you're going to buy back versus fundamental consumer confidence? I appreciate it's backward looking and quite volatile, but nonetheless. And then how much of it is like you're not going to have to source everything here from the U.S. We're going to make some kind of deals for you. And I wonder if it's the combination. But can equities keep moving higher if you're just pricing out the bad news, or do you need actual good news to then price equities higher?
Yeah, and we should point out, I mean, we're still even at 59.18 and this big, strong rally that we had. I mean, we're still below some recent highs. I'm not even talking about the all-time highs that we had, still below some of the recent highs. So we've got a lot of ways to go just to get back to square one when all this started.
But we did bounce off the 200-day moving average.
Yes,
so
that's good.
We do have some good technical support there. Yeah. It's just a matter of what's going to give us the next leg of that rally.
A live cat bounce.
Alive? Ooh, I like this.
As we break down all the market coverage, starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alex Steele, taking you through to that closing bell. It's a global simulcast, and it starts now. Carol Massar and Tim Stenivek join us in the radio booth. Scarlett Fu is off today as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube. 59.18 on the S&P 500. Alex Steele up 2%. The NASDAQ up 2.5%.
Yep, and there we go, guys. We keep climbing higher, bouncing off that 200-day for the S&P, Carol.
Yeah, I mean, look at it. We're seeing some buying into the close here. Quite a rally. I'm just trying to make sense of, again, what has really changed in terms of the fundamental backdrop.
Well, I guess what's changed is the EU and the U.S. are speaking, and consumers maybe were a little less stressed about tariffs, at least the portion of consumers who answered the questions from the conference board about how they're feeling about things right now.
I mean, you sound kind of skeptical.
Yeah, what's going on?
Well, look,
Tim?
you know, we talked to Mike McKee about this. He said, take this one with a grain of salt.
We will.
And look, there were also some nuances to the data. People are still very concerned about the job market right now.
Yeah, I mean, look, the labor market outlook was certainly dour, continuing to deteriorate here. But shorter term, there were people basically saying, look, we're willing and able and ready to spend money right now. And at least in the short term, that's a positive. We made a lot of hay when that thing was going down.
Yeah.
I love making hay. But I think also the difference is when you have President Trump saying that maybe we don't have to make everything in the U.S., that gives some relief to some of those retailers, right? We're not going to be making T-shirts here. So maybe there are more exemptions that are coming down.
All right, well, we get the closing bells here in New York on this Tuesday afternoon. Remember, of course, Monday was a holiday here in the United States, so it gave folks a little bit of time to kind of parse some of the negative news that came out on Friday and coming in today with some relatively positive news. The Dow Jones Industrial Average up more than 700.
as my birthday signals another milestone in my life. I'm hopeful that if I stay true to myself and follow my instincts, my legacy will be looked on kindly.
Today's the day. NVIDIA after the bell. 30 minutes until the opening bell. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, we have a parade of retail results kicking off the morning, but it's all eyes on NVIDIA today after the bell. Meanwhile, in Washington, President Trump explicitly guarantees Fannie and Freddie, while a new twist develops in the Japanese takeover of U.S. Steel. Plus, Antonio Filosa takes the wheel at Stellantis, while Nissan goes hat in hand to stay on track.
All right, shall we go back to NVIDIA?
Yes, please.
I think we should. It's finally here. NVIDIA, the final Magnificent Seven stock to report earnings today, with shares up 40% since its April low, just about flat for the whole of 2025. Results clearly likely to move markets. Right now, pretty well behaved, up just 0.7% after a big day yesterday.
One of the last companies to report earnings season is almost over. This morning we got, though, plenty of retail results. Macy's topped sales expectations and maintained its outlook for the year. Dick's Sporting Goods also kept its outlook, while Abercrombie & Fitch raised its guidance.
All right, so earnings season, it's not quite over, so let's get back to NVIDIA. Shares expected to move more than 6% in either direction following its report. Earlier today, D.A. Davidson's Gil Loria says that chip export controls are the main focus.
We really don't know what the level of restrictions are on NVIDIA selling chips into China, which chips they can sell, when can they start selling them. We know that there's legislation coming to further restrict them, regulation coming to further restrict them. So we really want to hear from them, what chips can they sell into China and when can they start selling them.
And for more on NVIDIA, we are joined by Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh. So, Mandeep, we are used to an NVIDIA that meets and beats unbelievable results and then forecasts something that nobody can buy. Is that era over?
Not really, but I think right now the focus has shifted from hyperscalers to sovereign AI. And up until now, everyone was like, if hyperscalers are raising their capex, most likely NVIDIA will have a beat and raise quarter. This time around, you are fixated on China and sovereign AI demand, UAE, Middle East, how that's going to translate into demand for NVIDIA's chips, because sovereign AI is becoming a very sizable portion of NVIDIA's business. And look, I mean, somebody has to step in terms of sustaining that, 30-35% growth rate that NVIDIA needs to sustain its valuation multiple. And I think hyperscaler capex seems to be decelerating. I mean, they're still going to have a good year from hyperscalers in 2025. 2026, probably you will see a slowdown to 10 to 15%. So that's where the sovereign AI piece is very important.
I want to talk a little bit about production here, because you think about its new Blackwell chips. It really ran into some manufacturing issues in the fourth quarter. We know that there's heavy demand, but are they able to actually make the chips and get them out the door?
I mean, that's where the pricing power and the gross margin comes into play. If their customers are still willing to pay, the premium pricing that NVIDIA has had because the market has been undersupplied, that's a sign that, their customers are implementing these big NVIDIA systems and they are willing to pay up the price. If that comes down, and the reason why I say if is because the market has pivoted from training to inferencing. So far, it was about using the chips for training the next version of the large language models. Now it's about deploying them for ChatGPT use case. I mean, ChatGPT has 600 million weekly active users. All that is using GPU capacity, but it doesn't need the same kind of chips that were used for training. So that's where the pricing element comes in. Can an AMD or an Intel step in now that the market is moving more towards inferencing?
All right, Mandeep, great to get your perspective as we count down to NVIDIA earnings. You have fun after the bell. That is Mandeep Singh of Bloomberg Intelligence. And tonight, don't miss our Bloomberg Technology special featuring an interview with NVIDIA CEO Jensen Huang. That's at 6:30 p.m. New York time. And of course, it's not just NVIDIA reporting earnings today. We also had retailers Macy's, Dick's, and Abercrombie & Fitch all reporting results before the bell this morning. Let's get a read on retail now with Sucharita Kodali. She is a research analyst over at Forrester Research. Great to have you with us. I want to start with Macy's, up about 4% pre-market. So it actually beat when it came to its quarterly results. This stuck out to me. It maintained its sales outlook. That's hard for any retailer to do right now, Sucharita.
Right. But at the end of the day, Macy's has been a bit challenged. And I think that the expectations have been relatively low. So that's really what we're up against. The department store sector, particularly in the mid-market sector of the retail world, has been challenged for decades now. And Macy's is by no Macy's certainly is no exception. I mean, when you look back 20 years, it had nearly 3 times as many stores. So it really is on a lower base, and they're basically essentially resetting expectations for how the business could do now.
You know, Sucharita, Romain Bostic had an interview with the CEO this morning, and he told him they're not really pulling forward their inventory build in fear of tariffs to come. Is that the right move?
Well, there is just still a lot that is uncertain about what will ultimately shake out with respect to tariffs. I think there's still very much a working hypothesis that this is all political theater, and the outcome for most retailers will probably be more modest than what some of these expectations are. I think a lot of the actions that have been taken to date are largely driven by uncertainty. So I think that what we're seeing is just the response to just not knowing more, because the risk is that if you pull forward inventory, you may just be left with things that are not on trend, and you end up discounting it later anyway. So I think that they're probably looking at other geographies where they can pull inventory from, and looking to potentially diversifying if they need to, otherwise maintaining where they need to be otherwise.
Let's talk about pricing, too, because also in that interview with Romain Bostic, the CEO said that there are opportunities to be able to be sharp and to be able to continue the same pricing strategy we have today. And there are other places where there's going to be modest price increases. You take a look at what actually drove results in the latest report. It was Bloomingdale's. It was Bluemercury. These are higher end parts of the business. And I don't know if you think about prices actually on the rise, or is it those areas where consumers are actually able to withstand some more price increases?
Well, there are different products that are going to have different elasticity levels. So certainly there are going to be things like essentials or things that are often replenishment goods, like, for instance, in cosmetics and beauty, where there may be an ability to price higher for sure. And then there are going to be other categories that typically tend to be in apparel, perhaps in some brands within footwear, where there may not be that ability to increase price. And I think that that's what we're going to see Macy's being laser focused on. Their merchants are really, really going to be looking at data from the past on when they had promotions, which were the categories, the sectors, the brands that they had the ability to increase their prices on, and which were the ones that were most sensitive based on pricing. So I think that that's really what we're going to see, not just at Macy's, but at virtually every retailer, whether it is Walmart or whether it is high-end luxury retailers like Gucci, that will likely do that same analysis across their entire portfolio of brands and products.
Sucharita, great to have some time with you. Hope we get you back soon. Sucharita Kodali there of Forrester Research talking to us about Macy's. Now let's get to automotive. The big executive shakeup overnight. Jeep maker Stellantis has appointed its head of Americas, Antonio Filosa, as CEO in an effort to turn the company around. His predecessor, Carlos Tavares, was forced out over slumping sales and profit. Bloomberg Autos reporter Gabriella Coppola joins us now to explain Filosa's priorities. Gabby, what do we know about he's not a new face on the scene, but definitely to the top seat in the C-suite?
Yeah, Habemos CEO. I've been waiting for 6 months for us to finally have a CEO of Stellantis. And so I think there's a lot of relief and excitement today just that the company can move forward now by making a choice. In terms of his priorities, I mean, in the U.S., they've got to get their market share back. You know, a lot of share was lost under Tavares, especially for the key money-making Jeep and Ram brands. And they are working on that, but it's obviously been complicated by the trade war and tariffs. They have some vehicles that are made in Mexico and Canada that have some sort of the whole pricing model of how you make money off those cars has been in flux because of the tariffs. And then to look more globally, you know, Stellantis has 14 brands, and I don't think there are the sales that really justify keeping all of those brands and the jobs they support. And so one thing that Filosa is going to have to tackle is to take a really hard look at all of those brands, you know, across France, across Italy. And I think one of the things that made this job, you know, difficult to fill is that you're not just running a car company. You're sort of like, you know, acting as Geneva, or it's like running the EU or something, because you've got, you know, France owns this, you know, a significant stake in this company. So does Italy. John Elkann, the chairman, you know, the scion of the Agnelli family. Each one of those countries wants to see this company protect their auto jobs and manufacturing sector. And of course, Trump also wants to see more jobs in the U.S.
Right. Well,
so, yeah, go ahead.
Gabby, to that point, the fact that, you know, he's taking over as CEO, taking the top job at this time, there has to be a pretty hefty political element to what he has to do in the months ahead. How much time do you anticipate that he could be spending in D.C., for example?
I think that's definitely going to be part of his portfolio, but I would also point out that John Elkann, the chairman, has spent a lot of time in D.C., you know, and Paris, you know, in Turin, speaking to Giorgia Meloni in Italy, Macron in France. I mean, I think Elkann, you know, in the past, you know, he's always been involved, but you had Sergio Marchionne, who was a very hands-on CEO. You know, Tavares was very hands-on. I think Filosa will be good in that sense. He's a very personable, warm, friendly guy. He's well-liked, I think. You know, he was kind of started out as like a plant rat, as we say in the auto industry. He worked in plants in Italy and then Argentina, Brazil. So I think he could be very good in that way, too. But John Elkann is a guy who has an amazing global network of business people, politicians, contacts, and he has worked very hard to build back a relationship with President Trump. So I don't know. I think it remains to be seen, but I can't imagine that they wouldn't continue to use him and his diplomatic skills to kind of help support Filosa with all the things on his plate.
Absolutely. It's going to be fascinating to see how this develops in the months ahead. That is Bloomberg's Gabrielle Coppola reporting from Detroit. Now, coming up, President Trump says that the U.S. government will keep its implicit guarantees on Fannie Mae and Freddie Mac, even when they become public firms, which the president says he's working on. We'll bring you the details next. This is Open Interest.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
Let's get now to high interest and look at what's making headlines around the world. Honeywell agreed to give Elliott Investment Management a seat at the boardroom table as it prepares to split into three. Elliott revealed a $5 billion stake last year and called for a breakup, blaming Honeywell's conglomerate structure for poor financial results and share performance. Elon Musk says he's not happy with President Trump's tax bill. He says it undercuts his efforts to slash government spending. He spoke in an interview with CBS.
I was disappointed to see the massive spending bill, frankly, which increases the budget deficit, not just decrease it, and undermines the work that the DOGE team is doing.
The legislation now advances to the Senate after it narrowly passed the House. last week. Meanwhile, his Starship rocket tumbled out of control and disintegrated as it hurtled back to Earth yesterday. The stakes for SpaceX were high after the 2 previous flights exploded over the Gulf of Mexico, sending debris raining down from the sky and disrupting air travel. Katie?
All right, let's turn now to shares in Fannie Mae and Freddie Mac rising in the pre-market trade after a big week last week. Now, that's all after President Trump said that the U.S. government would retain guarantees on Fannie Mae and Freddie Mac when they become public firms, which he's working towards. President Trump posted on Truth Social yesterday saying that he's working on taking these, quote, amazing companies public. For more, let's break it down with Bloomberg White House reporter Josh Wingrove, who joins us now from D.C. And I want to talk about this part of his post, that the U.S. government will keep its implicit guarantees, and I will stay strong in my position on overseeing them as president. Josh, what might this all look like in practice? Because there's a lot of question marks here.
Well, that word implicit, my gosh, is carrying a lot of water.
Thank you.
Honey, can you swap the laundry out today? Yeah, you have my implicit guarantee that I will absolutely do that. So the short answer is we don't know. This has been simmering in the background. In some ways, it is not a surprise, right? Biden, on the way out, some of his staff tried to set like a game plan for how bringing these companies public would look. In other words, they kind of tried to tie Trump's hands a little bit. And since then, it's been sort of like laying in the reeds as Bill Pulte, the head of the FHFA, has sort of hinted here and there before Trump in the last week or two has really ramped up the signals. Now, so the interest is there, but the details just remain so unclear, including what those implicit guarantees or whatever we're going to call them would be. Because, of course, if it's not a full guarantee, it's not much of a guarantee at all. And hanging in the balance of that, of course, is the question about mortgage costs. Pardon me?
He was pretty explicit about it. I wonder if he was laughing to himself as he explicitly wrote about the implicit guarantees.
That's right. Yeah, he's dancing on both sides of that fence right now. But we're going to see. We're going to see where it goes. I think there's a clear appetite in the administration to at least pursue this. As always with Trump, he tends not to get bogged down early in the questions of, what he would consider fine print, like the guarantees. But I think that there will be corners of the Republican Party, if not the administration, that start to get nervous if bringing these companies public really does start to reflect in mortgage rates and, overall costs, which of course Trump is politically sensitive to. So I think that's the third rail here, but clearly there's interest in it. Bill Ackman and other Trump supporters have stakes here as well that are sort of looming large, and so I think the direction is clear. The path is not clear, nor is it clear whether they'll reach that destination entirely.
Josh, how does President Trump sell a Japanese takeover of U.S. steel to the American people after he and Howard Lutnick have gone on for so long about how important it is to keep these industries for national security domestically owned?
Yeah, this is certainly a reversal from his rhetoric on the campaign. There's two things I think that they'll point to. Number one, we've already seen him pointing to a $14 billion investment. Nippon Steel has not detailed that, but that's up from about 2.7, and not to be confused with the $14 billion acquisition price. So more money being pledged here. Whether that materializes or is guaranteed is really unclear right now. And the companies, as I say, have not sort of broken down the cost of where they plan to put that money. The other one is that he's talking about control, and what that looks like is also unclear. But there will be some measure of U.S. nationals on the board of the American subsidiary, U.S. Steel, owned by Japan's Nippon Steel. There would be an American CEO, it looks like, as well as other sort of quasi-veto powers that seem to be coming through on this. Now, they're still working on the fine print. We are barreling towards a Friday rally in Pittsburgh. We just don't know what that'll look like, but Trump is trying to basically lock it up somehow in a way that he can claim some measure of control, even though this company will be owned by the Japanese company.
All right, Josh, thanks so much for joining us. Bloomberg senior White House reporter Josh Wingrove in Washington. Coming up, Truist Keith Lerner argues the market's risk-reward ratio is less favorable following a string of positive trade developments. We'll discuss with him next. This is Open Interest.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
Welcome back to Open Interest. Barclays out with some good news for the bulls, saying that the path of least resistance for stocks is higher. Strategists saying that earnings showed resilience in a positive sign for equities, and with institutional positioning underweight, systemic dip buying means that stocks will likely trend higher from here. Let's break it all down with Truist co-CIO and chief market strategist Keith Lerner. Keith, it's great to have you back with us, and I'm curious what your base case is from here. You have Barclays talking about earnings season going pretty well, about positioning right now, really leading to maybe some dip buying here, but we still have one big one after the bell, and that's NVIDIA.
Yeah, well, great to be with you. And you said it. I mean, the catalyst, what we're all waiting for today and really probably for the next few weeks is what happens today. I think everyone's expecting a strong print from NVIDIA. They've beaten 9 times in a row, both on sales and earnings. So the key question is, how does it act? What's interesting is the stock since last June when it peaked is basically flat, 0.06%. So that'll be the key driver. I think we're in a choppier, broader range in the near term is really what we're thinking here near term, though.
Does NVIDIA, Keith, you know, in 23 and 24, they didn't just beat. Like, they knocked the cover off the ball and unwound the threads inside. So do they just have to meet the street's lowered expectations here, or do they have to really do something extraordinary today?
Yeah, I think the expectations have come up as the stock has rebounded. Remember, it was below 100 not too long ago, so I think the expectations are somewhat higher. I do expect them to be. I guess the question is, do they break out of this range? If they break out of their trading range for the overall market, then the pain trade is higher for the overall market because tech is such an important component, and it's been in the trading range. So I think this is really going to be key, not only for today, but for the next few weeks.
All right, Keith, great to get some time with you. We are just getting started. You're sticking with us through the opening bell. That is Keith Lerner. Let's take a look at the setup as we're just minutes away from the ringing of those bells. You can see the S&P 500. It's pretty much flat, a little bit higher if you take a look at big tech and the NASDAQ 100, the Russell 2000 unchanged. But we know that yesterday was a big day in the market, a big rebound.
We were up 2% on the S&P.
I know, breaking several days of losses. And right now, if we thought we were in a wait-and-see mode yesterday, truly, at this point on Wednesday morning, we are in wait-and-see for NVIDIA.
I will tell you that we're getting a red headline crossing the terminal right now. Germany has agreed on an additional 5 billion euros in fresh military aid to Ukraine. I know that Volodymyr Zelensky had been calling for at least another $30 billion, so this gets him more than a sixth of the way towards that. But once again, Germany has agreed on fresh $5 billion in military aid to Ukraine, and we'll see if other countries follow suit.
Yeah, we'll keep an eye on that, but we'll bring you the market open up next. Don't go anywhere. This is Open Interest.
Exhausted investors digesting the latest tariff talk out of Washington.
Prepare.
We are moments away from the start of trading on this Wednesday, second trading day of the week because we had Monday off for Memorial Day, but Tuesday was a banger, up 2% plus on the S&P 500, and today we're going in little changed as we wait, I guess, until after the bell for NVIDIA earnings. That's really going to be the big one. I think Dan Ives said it's the most important company in the world for markets. There you see the opening bell. On the NASDAQ, you've got Qualcomm ringing the opening bell, celebrating, I think, 40 years of doing business as a company, and the stock has more than doubled in the last 5 years. It's down 30% over the last 12 months, so they can do better. You've got LTC, a REIT, ringing the bell on the NASDAQ. No one cares about that, right? But we do care about NVIDIA. Katie Greifeld is here with a look at the shares in the live trade.
Here is the setup, of course, right now. You can see NVIDIA almost perfectly flat right now, up a little bit. It did have a big day yesterday. It's the final big tech stock to report earnings. Shares are up about 40% since its lows in April. I do think it's poetic that for the whole of 2025, this stock is almost perfectly flat, Matt, for the year. So this will be a fun line to watch later today.
Yeah, just like the market today, right? Even though we've had multiple retail earnings out this morning, Macy's beat estimates, beat sales expectations at least, maintained its outlook for the year. Romaine Bostick had an interview with the CEO, which you're going to hear more from throughout the day. Dick's Sporting Goods also kept its outlook stable, and this is fairly unusual for retailers or a lot of companies this earnings season. Abercrombie and Fitch, this is a company I forget still exists. It's like reborn from the 90s, up like 600% over the last 5 years. Raised its guidance and now sees a record intraday gain. You can see the stock up 32% in the cash trade. We're back with Truist co-CIO and chief market strategist Keith Lerner. And Keith, more and more when I read not only the economic data, the hard data, but company results, I'm starting to think maybe it's not going to be as bad as we thought. Maybe tariffs aren't going to be the end of the world. Maybe we're not going to see massive inflation and every company pull its outlook. How's it looking to you?
Yeah, I think you hit it on the head there, Matt. I mean, one thing that really stood out during this earnings season, during all of this, craziness that we went through, is the resiliency of corporate America. And we have to remember, these companies have been battle tested. They've been battle tested through COVID. They've been battle tested through one of the fastest rate hike cycles we've seen in the last 30 or 40 years, and one of the highest inflation environments. So they have a lot of different levers, and they're resilient. And then the consumer has also been relatively resilient as well. So what we're seeing right now, which is notable, is the forward earning estimates for the overall market had started to trend down back in March and April. That has now stabilized, and we're starting to move, somewhat up. So I guess the message is, don't underestimate the resiliency of corporate America. They're doing it, they're doing it again.
Yeah, it is fascinating, Matt, to your point, that we didn't see that much in terms of guidance being pulled. We saw some of it. We saw some of the airlines, for example, come out with a few different scenarios about how things would go. But like you say, Keith, corporate America is battle tested at this point. I want to talk about how Fed policy plays into all of this, because we keep hearing from Fed members and from Jerome Powell is that they're waiting for clarity, that it's really hard to make policy when we simply just don't know what's going to happen with trade policy. And I wonder, when you marry together the resiliency of corporate America, of the consumer, with the uncertainty over Fed policy, where does that leave you?
No, it's a fair point. And what happens on these Fed cuts, it seems like they just keep getting pushed out. Like we were expecting in June, and now the market's expecting maybe in September. So we still think likely later this year they at least cut 1 to 2 times, because I think the inflation backdrop, outside of the one hiccup on tariffs, which is a big hiccup, like some of the trends as far as oil prices, housing prices are coming down. But there is a lot of uncertainty. But I will say overall, I don't think they're the main mover for this market, whether they cut rates or not. What you can do is you overlay the trade uncertainty index versus the S&P, and they're moving in lockstep. So I think the more important part for the market right now is this de-escalation that we've seen. Does that continue? Don't forget we have a July date coming through. And I think that will be a bigger force for the overall market than whether the Fed cuts rates 1 or 2 times, or if they just kind of sit idle. And in a holding pattern.
Keith, I'm going through, you have 3 bullet points in your notes to us that make total sense to me. Large caps over small caps. Totally get it. Comm services and utilities, obviously. At the lows, there wasn't as much, there was more reward, I should say, than there is at the highs now. Okay, I get it. But industrials and financials, why do you like those 2 groups?
Yeah, well, in big picture, what you just said, Matt, is, at the lows, the market was pricing in a recession. We basically priced out a recession. So a lot of good news is priced in for the market as long as the good news comes through. But the risk reward is, more mixed in our view, big picture. And then to your question specifically.
That makes sense as the price rises, right, Keith? I mean, I'd rather buy low than high, too.
Yeah.
Exactly. That's what we all hope to do, right? Well, with financials, I mean, they've hung in there really well. And talk about the economic resiliency, we're actually starting to see bank credit growth start to move up again. And if we get a little bit of a steeper curve, that's a positive. And that one carrot that we're all waiting for is to see a little bit more deregulation as well. And the technical trends have been positive. So we look at the fundamentals and the technicals; they're both aligned right now. And then on the industrial side, I mean, it's the strongest sector year to date, which is, if you were to come into the year, so we had all this tariff uncertainty, you wouldn't expect industrials to be one of the best sectors, but they're benefiting from a couple of secular trends. One is defense spending, right? Especially the global defense spending. Number one, a lot of that global defense spending is coming back to the U.S. And then it's also kind of a backdoor play on the AI story. You think about some of these old industrial companies, cooling systems as an example. That's a big part of the AI story as well. So I think it's benefiting from both. And so we have some defensive, we have some cyclical exposure. It's kind of not, in our view, it's not an all or nothing market. You want to have exposure to the best cyclical areas. Defensive is more utilities. Utilities are also more of a, it's a defensive play, but also an AI play as well. So it's kind of, everything's getting a bit more blurred in today's market with this AI trend.
All right, Keith, got to leave it there. Always great to talk to you. Thanks for opening these markets with us. That is Truist Keith Lerner. Now, Keith said holding pattern, and that's exactly what you're going to see if you take a look at the breakdown of this market right now. The S&P 500, it's pretty much flat in the first few minutes of trading. And take a look at the split. You have 223 names moving to the upside, 274 to the downside right now. And you take a look at the moves in terms of the points contribution, what the actual percentage gain looks like. It's very small. Apple is up just a little bit. That enough in this market right now to make it the biggest contributor on a points basis. Meta, Amazon, Alphabet also rallying a little bit. You have NVIDIA shares down slightly right now. And let me emphasize slightly. Of course, all the action is going to come after the bell today. So almost an even split when you take a look at the stocks themselves. You're going to see a similar thing if you take a look at the sector look as well. Right now, if we switch up the board, you can see that we have more in the green when it comes to the sectors themselves. Some of them in the red, materials, real estate leading the way lower, communication services and tech trying to move to the upside. But Matt, let me stress again, small moves overall.
Yeah, small moves overall, and I guess we'll see if that changes throughout the day, Katie, right? Because we're waiting for NVIDIA, and that doesn't come out until the close of trading.
That's true. Yeah, it's, again, a holding pattern, I would say. But, news likes a sleepy market, so we'll see.
All right, we're going to continue the conversation on NVIDIA with Pierre Ferragu of New Street Research. He joins us next. This is Open Interest.
All right, it's time now for our top calls. Some of the analyst action in focus this morning. And first up, Fair Isaac is getting raised to a buy over at Baird thanks to regulatory easing. The analyst says that FICO scores have an attractive market position. Next up, we have Booz Allen getting cut to a sell over at Goldman thanks to limited growth potential. The government consulting firm announced last week that it would slash its headcounts in response to the Trump administration's move to shrink government spending. Shares down about 1%. And finally, this is a fun one. Freshpet getting downgraded over at TD Cowen. The analyst cites slowing retail sales and a risk that its refrigerated dog food concept is nearing a saturation point. Matt Miller, perhaps they're going to expand to refrigerated cat food.
Don't cats just eat whatever you put in the bowl?
No, you have to feed cats.
Oh, they're finicky. They're finicky.
They're
felines.
very finicky, but you have to make sure they get wet food because it's really important for their kidneys, in case you were wondering.
Okay, good to know.
Yeah.
I have a couple of cats, but I wish they didn't exist.
Maybe don't get them more wet food.
Let's get back to the big stock story of the day. NVIDIA will report earnings in a test for the AI trade and potentially the general direction of markets. For more, we're joined by Pierre Ferragu, Global Team Head of Technology Infrastructure at New Street Research. And Pierre, I just wonder, and I've been asking all morning, doesn't this company really have to kill it? I mean, if they just do okay, isn't that not good enough?
Or if they do okay, it's not going to be good enough. It's going to be fantastic. You know that NVIDIA is today, facing this additional restrictions, export restriction in China. So we should expect the guide for the second quarter to be actually quite difficult. You have about 1 quarter of sequential growth that is going to go away because NVIDIA cannot sell the H20 chip in China anymore. So it's going to weigh a lot on numbers. If you look at expectations today, they're probably like 2-3 billion too high for the next quarter. So the guide is going to be below expectation. It's almost certain. The good thing is that if I'm telling you that on such a relaxed tone today, it's because most investors understand that and follow that name quite closely, understand that you have like an export restriction. And of course, it's a one-off because what is NVIDIA going to do is develop a new chip, the B40, that will fit the specification of export restriction, and they will be able to sell it in China starting in June or July, and things will get back to normal.
Well, let's talk a little bit more about China because CEO Jensen Huang, he said that when being critical of U.S. policies, that he's basically going to have to cede a market that could be worth $50 billion in 2026 to Chinese rivals. So clearly, of course, Jensen Huang is frustrated here. Do you think that the situation is quite as dire as he paints, though?
Well, he's being quite factual about it. He makes about like $20-25 billion of revenues in China at the moment on a run rate basis. That's about half the opportunity. If NVIDIA had in China the market share they have elsewhere in the world, they would probably be making closer to 40 billion. So that's a reality. And then, of course, he plays his role and he's trying to have the influence he can. The U.S. administration has to walk on a thin line between, defending the interest of U.S. companies and achieving their goals of, limiting technology exports to China. It's a back and forth. It's already like the third or fourth time we have such a back and forth. The game is about the administration tightening restriction and NVIDIA creating a chip that just goes under the restrictions so that they can continue to do some business in China.
Do they walk the line when it comes to regulations all the time, Pierre? I mean, I'm always reading stories about how NVIDIA sells chips to some market in Singapore, which then those chips kind of make their way to China anyway. Doesn't the company know that this is happening, and aren't they somehow responsible for that?
No, I think it would be a very unfair claim to say that. On the contrary, NVIDIA has always been very, very proactive and collaborative with the administration on export situations. So they voice, their perspective and their view, and at the same time, they are like really 100% compliant. It is true that there can be some, suspicion that some of the chips end up in hands that were not the originally intended hands. But remember, we are talking about a business that went from being like a single-digit billion-dollar business annually to a $200 billion business this year. And it's very, very difficult to keep track of everything. But on large volumes, I would say NVIDIA is very, very tight and controlling as much as they can, where their chips end, of course. But they can't control 100% of $200 billion.
Right. And I want to talk a little bit about how the stock itself is trading. We've been making the point throughout this hour that it's pretty much flat when it comes to 2025 as a whole. It's up 40% from its April low, but it's still down from its January high. If you take a look at its valuation, it's priced right now at 29 times its projected profits over the next 12 months. Its historical 5-year average is about 40. Can we actually call NVIDIA stock cheap here, Pierre?
Well, it's always difficult, to call a stock cheap, but relative to history, you just gave the number. So yes, it is like trading at a 25% discount. So the situation today on NVIDIA stock is twofold. So there is first this uncertainty around China that makes people a bit nervous on the print tonight, of course, but it's actually a small moving factor in the stock. What really matters on NVIDIA is that the business has grown so fast and reached levels like hundreds of billions of dollars spent on GPUs that investors are putting their head around it and getting some comfort that the numbers are going to be made and actually even beaten in 2025. And then suddenly the concern shifts to 2026. And then investors are worried about this growth having gone too fast, too rapidly. And then they're worried about a pullback, about a slowdown, etc. And that's what's weighing on the multiples. That's very, very usual. Now, our own perspective is that 2026 is actually shaping up now very, very well for NVIDIA. The way we look at it is going back up the supply chain. So we look at the suppliers of NVIDIA, TSMC, who supplies the CoWoS packaging capacity, and then we look at suppliers to the CoWoS manufacturing chains. And these players are already telling us that the outlook for 2026 looks very strong. So we should see the stock work well because numbers are going to work well, but the multiple, the 29x KD you just mentioned, might continue to come down just because investors, the more NVIDIA is growing, the more investors are going to be concerned about when the slowdown comes, basically. So that's like a natural derating situation for a growth stock.
Pierre, always great to have your expertise. Really appreciate you setting me straight on a regular basis. Pierre Farragut there of New Street Research. By the way, tonight, don't miss our Bloomberg Technology special featuring an interview with the CEO himself, the godfather of AI, Jensen Huang. That's at 6:30 p.m. New York time. This is Bloomberg. This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on in stocks. The S&P right now very unchanged, and the NASDAQ 100 almost the same. So green arrows here, but not a lot of movement as the whole market, the whole world, in fact, waits for NVIDIA to come out with earnings, which doesn't happen until after the closing bell, but maybe today we'll just sit on our hands. Normally I have behind me all of the biggest stocks moving the indexes today, but what I have now is a list of the 10 stocks that BI, Bloomberg Intelligence, recommends you take a look at right now. And with that, I'm going to hand it over to Katie Greifeld and Gina Martin-Adams.
Yeah, let's talk about this all with Chief Equity Strategist over at Bloomberg Intelligence, Gina Martin-Adams, sitting to my left. So this list that you put together, it's the 10 S&P 500 companies that face the greatest risk from Donald Trump's tariffs that could come on July 9th, bearing another delay here. What stands out to me is that, you have names such as Philip Morris, you have Kimberly-Clark, Merck, Cisco, Coca-Cola. It's really covering a lot of different industries here. There's not a huge Venn diagram. So what led you to these companies in particular?
Well, they have the most factories and the most factory exposure as an overall share of their factory base. So this is specifically about companies in the S&P 500s that have factories overseas. And so we screened for overall factories. Roughly half of factories owned by S&P 500 companies are actually outside of the United States, first of all, which was kind of a stunning statistic to think how multinational. Half of factories operated by S&P 500 companies are outside of the United States.
Wow.
So that says a lot about just how much an upending of the global trade order could really impact operations of these companies. Now, of course, some of these operations are in foreign locations to service those foreign markets. I think the market is right now saying, well, those won't be impacted because this is really all about tariffs and the import prices of tariffs going higher. And obviously, that's the most profound near-term risk. But longer term, you're going to make a case for those factories also being somewhat vulnerable. Potential retaliations by those countries, for example, could impact operations of S&P 500 companies that are trying to do business in foreign markets to service the foreign consumer. So we're trying to take a very long-term view. This president has made it very clear that he wants to change the dynamics of global trade. That means that even after 90 days, we can't rest on our laurels and anticipate that it's all over. We're just going to sit at 10% forever. I do think that he's going to continually come back to this well over the course of the next 4 years to change prospects. So that's why we created the list.
So which of these companies do you think is most at risk or most needs to bring production back to the U.S.? And are any of them actively doing that now?
Yeah, I think that many of them actually started in the first Trump administration to try to address supply chain risks, but not necessarily in the form of bringing the companies, the facilities back to the United States.
They moved it from China to Indonesia, China to Vietnam,
building
China to
them,
India.
You know, the biggest headline example in the S&P 500 is, of course, Apple, which isn't on our list, interestingly. But nonetheless, Apple gets the most attention as a target for President Trump right now because they did move their operations or move a great deal of their facilities from China to India to try to account for. Why is it not on your list?
So widely held?
Yeah, because it's not actually of the most exposed. It is widely held, but it doesn't have as many factories or as high a share of factories overseas as some of these other companies. I would really hesitate to target one specific company because I think in today's day and age, we have to be aware that the president is going to target the companies that he chooses to target. And I'm not sure that we have a playbook for why or how or what he will target. But what I will say is across industries, you've got something like 65% of industries in the S&P 500 with profound levels of factory exposure outside of the United States. It spans consumer staples to materials to industrials to technology. Big cap tech is just one of the stories. Broadly, technology is exposed to this as well. So it is going to be a potential long-term driver of volatility for the index.
All right, Gina, really interesting list. Great to get some time with you. That is Bloomberg. Gina Martin Adams of Bloomberg Intelligence. Interesting, again, Apple's not on the Bloomberg Intelligence list, but we know it's on President Trump's list.
Yeah, absolutely. And that relationship, Tim Cook and Donald Trump, is going to be important for so many investors. Coming up in the next hour, Ilana Weinstein joins us on hedge fund talent wars. Plus, Elanco's Jeff Simmons talks about the pet care industry, more cat talk. And Acrissure's CEO walks us through his company's billion-dollar deal with Heartland Payroll Solutions.
Okay guys, crude oil selling target done. क्रूड ऑयल सेलिंग के ट्रेड से निकल सकते हैं, ठीक है. क्रूड ऑयल हो गया सेलिंग का टारगेट डन. बुक द फुल प्रॉफिट इन नेचुरल क्रूड ऑयल. सॉरी, क्रूड ऑयल में पूरा प्रॉफिट बुक कर सकते हैं. यहाँ से एक बाइंग का प्लान है एंड टारगेट ज़्यादा बड़ा मत रखना. बाइंग का जो टारगेट रहेगा छोटा सा ही है नेचुरल क्रूड ऑयल में. सॉरी, $5,360 के अराउंड, ठीक है. 360 से 370 हो, ये भी है. दोनों ही ले लिया इसने तो. बाइंग में ध्यान रखना, क्रूड ऑयल में ज़्यादा बड़ा टारगेट नहीं है, ठीक है. 530 न्यूयॉर्क सेशन की ओपनिंग होगी तो थोड़ा बहुत और मोमेंटम कर देगा प्राइस. $5,370 है ना, ठीक है. सेलर्स एग्जिट हो गए होंगे जो लोग बाइंग में गए हैं या जाएंगे वापस क्रूड ऑयल में. इतना ही टारगेट रहेगा, पूरा टारगेट मत रखना. फिलहाल के लिए इतना ही टारगेट है. फिर देखते हैं, अगर होल्ड नहीं कर पाया तो फिर नेक्स्ट सपोर्ट और नीचे वाला रहेगा. बाकी 530 न्यूयॉर्क सेशन की ओपनिंग के बाद शायद मुझे लगता है थोड़ा बहुत मोमेंटम नेचुरल गैस में भी आ जाएगा. अभी तो बिल्कुल भी नहीं है मोमेंटम. कि सेलिंग में एग्जिट हो जाना, सेलर्स बायर्स ने एंट्री की हुई है तो थोड़ा ध्यान रखना, वापस करोगे तो भी एंट्री यही है, टारगेट इतना ही रहेगा, इससे बड़ा मत लेना। बाकी नेचुरल गैस ही मॉर्निंग से देखोगे बस ये रेंज के अंदर ही फंसा हुआ है। मॉर्निंग पे ओपन हुआ था यहाँ 9 बजे की, ये पहली कैंडल है, उसके बाद से मोमेंटम ही नहीं हो रहा है, 5 पॉइंट की स्मॉल सी रेंज के अंदर फंसा हुआ है। नीचे रीटेस्ट था, थोड़ी बहुत बाइंग आई है, एग्जैक्ट सपोर्ट थोड़ा सा नीचे ही है, तो जिन लोगों ने बाई किया है थोड़ा ध्यान रखना। मुझे मार्केट फिलहाल के लिए साइडवेज लग रहा है इस रेंज में, जब तक ये किसी एक साइड को ब्रेक नहीं कर देता, या तो ये थोड़ा ऊपर ही चला जाए और ब्रेक करके। नेचुरल गैस साइडवेज ही लग रहा है, किसी एक साइड पे निकलता है ना रेंज के बाहर, दिस इज द रेंज आई एम एक्सपेक्टिंग। इस रेंज के कहीं आइदर साइड निकल जाए तब थोड़ा बढ़िया रहेगा ट्रेड करने के लिए, अभी के लिए तो बिल्कुल ही सुपर साइडवेज कह सकते हैं।
Progress never stops. Neither should you. At P
दोनों की इन्वेंट्री का फोरकास्ट पॉजिटिव ही है, क्रूड ऑयल और नेचुरल गैस दोनों की इन्वेंट्री का फोरकास्ट पॉजिटिव ही है प्राइस के लिए। इतना ऊपर तो नहीं जाने वाला है, मुझे लग तो नहीं रहा यहाँ तक चला जाएगा, चांसेस तो कम ही लगते हैं। पर भी सॉरी, यहाँ पर भी एक रीटेस्ट है, ऊपर वाला लेवल तो काफी ऊपर है, लेट्स सी दोनों होल्ड कर लेता है तो। ओह, 5:30 की कैंडल का ध्यान रखना। 5:30 कैंडल इंपॉर्टेंट, काफ़ी डेटा भी हैं आज बिकॉज अभी 5:30 न्यूयॉर्क सेशन ओपनिंग होगी। 6 बजे जीडीपी का डेटा भी है यूएस का। 7 बजे फिर यूएस मार्केट ओपन और 7:30 पर एक डेटा और है। कंटिन्यूसली डेटा आने वाले हैं। नेचुरल गैस में वापस कर सकते हैं भाई, वापस पुल बैक आएगा तो। बाकी थोड़ा सा ध्यान रखना, 5:30 की कैंडल ओपन इक्वल टू हाई बनी तो होल्ड नहीं कर पाएगा। ये दोनों हो गया और इसमें दोनों। बाकी देखते हैं वेट कितना और यहाँ से मोमेंटम देता है प्राइस के लिए। नेचुरल गैस के भी कम ही चांस लग रहे हैं। अगर ये होल्ड कर जाता है 300 का लेवल तो वापस एक अच्छा खासा पुल बैक दे सकता है। अभी के लिए अदरवाइज कल का जो हाई बना हुआ है वो एक रेजिस्टेंस है, इसको भी हटा दो रीटेस्ट को। वैसे में मुझे लग रहा है होल्ड कर जाएगा। इन्वेंट्री में कुछ खास नहीं होता है तो ये होल्ड हो जाएगा लेवल मोस्टली। और 530 कैंडल पे बहुत ज़्यादा वॉलेटिलिटी नहीं क्रिएट होती है तो वेरी गुड जोन अदरवाइज। लाइक भी करते रहो गाइस, कम ऑन। 5:30 देखते हैं, आधा घंटा और रह गया सिर्फ।
The countdown is on.
Falling. In 7 of the past 8 earnings days, there has actually been lower correlation than the other. Options this Wednesday afternoon implying a 6.3% move up or down, and that's smaller than what was signaled back in February and back in November, just before their earnings then. Now, despite the NVIDIA vortex, we should point out it's not just big tech moving today, but retailers also getting in on the action. You had solid earnings reports from Abercrombie, Macy's, Capri, Dick's, giving investors hope that consumer spending is holding up. We're going to get a report from Elf Beauty after the bell today, and from Burlington, Best Buy, Gap, and Ulta tomorrow. And maybe, Alex, that will actually help broaden the market rally beyond tech.
I mean, here's a hoping, right? And here's a good way to also think about it as well. Check out this chart. You're taking a look at that white line, which is the equal weighted S&P versus the overall S&P. Now, the blue line is the 10-year yield, but inverted. So as the blue line goes down, yields are actually moving higher. As the white line goes down, the S&P equal weighted index is actually underperforming. And as you have Treasury yields continuing to rise, guess what? S&P is what's outperforming. So it's that big cap tech. It's not the equal weighted index. So even though NVIDIA may not have a direct correlation to the market, does it continue with the theme when the rally has just not been able to broaden?
Absolutely. Kara Murphy joins us right now to kick us off to the close, the Chief Investment Officer with Kestra Investment Management. And Kara, I want to pick up where Alex left off here about the complexion of, I guess we can't really call it a rally today, but wherever this market is at and what you see as potentially leading it higher.
Well, I'm not going to come on here and tell you that NVIDIA is not important to the market, because it certainly is, and everyone's going to be watching that earnings report after the close. But I think, as you pointed out earlier, we've seen a little bit of a decoupling between NVIDIA and the rest of the market. And I think that's actually a really positive thing. We can't have just one or just a handful of names that continue to dominate year after year. So even though breadth is still struggling right now, what we've seen is that some other areas of the market have been able to kind of shine a little bit during this period of uncertainty. So one that we're focused on a lot is looking at non-U.S. developed, where all of a sudden stocks outside the U.S. start to look a little bit more attractive, particularly as people are worried about things like weaker dollar or policy uncertainty here in the U.S. And the good news is there's still plenty of different investments to be able to choose from that can offer that diversification.
Are those names, though, in those sectors, are they growth stories or are they just kind of defensive in nature?
So what you see is that the U.S. market is much more geared toward this sort of like traditional growth profile, right? We tend to have much heavier exposure to technology companies, more growth-oriented companies. And so when you move over to, let's say, Europe, you tend to have a bit more value-oriented sectors in general. But that said, you're still having that ability to kind of get out of some of the policy constraints that you have in the U.S. You still have that FX benefit if you believe that the dollar is going to continue to weaken. So we think it's okay, actually, to sort of like pitch over to the value side a little bit if it's in Europe, because U.S. markets have become so geared as a growth story.
Which is so interesting, Kara. Does that mean that we just sell U.S. equities, or it just means they underperform? Like on a relative basis, where does U.S. exceptionalism stay?
Yeah, and I don't think this is a hard turn to the right. I think to your point, it's maybe we start to see some non-U.S. outperform. You don't need to have a bear market in the U.S. to have non-U.S. stocks start to look attractive again. It's just where are you going to find that incremental piece of growth? And we think that some of these non-U.S. stories are going to start to look more attractive.
Does that also apply to other U.S. assets like, say, the bond market and the dollar?
So the bond market is really sort of tricky right here because that is really the epicenter of a lot of this policy discussion. And I found it really interesting today, right? Even on a day when we're gearing up for NVIDIA to report earnings, which is typically a huge focus for the market, a lot of the news cycle has also been focused on the bond market. And this is telling you that people are eyes on things like the budget, federal spending, debt. And these are big sort of existential questions. And these are things that are not going to get solved in the near future, but they are really important. And I think bond investors in particular, you know, the U.S. market is so large, so liquid. Even if you're a global investor, the U.S. The U.S. bond market is so important that they need to start to see a way forward, right? We need to start to see a path to lower deficit spending and a way for the U.S. government to start to wind down some of those obligations.
Absolutely. But in the meantime, we talk about this idea, Kara, of the liquidity of the U.S. market. So investors may not shun it. They're certainly going to maybe demand a little bit more out of the government if they continue down this road. This seems like one of the areas, at least of all the things going on in Washington, that at least in the short term is probably the least resolvable. I mean, we talk so much about trade on this program, but, you know, in theory, you know, Trump could flip a switch tomorrow and this can be all over. He can't necessarily do that when it comes to the deficit and the budget.
I think you are 100% correct. And so, you know, as we think back to the beginning of this year, we had identified a number of policy risks. One of them was tariffs. Ultimately, though, we don't think tariffs is actually the largest risk faced by the market, because the level of tariffs is less important than just knowing what they are. U.S. companies can sort of resolve around whatever that tariff rate is. But to your point, this idea of sort of like resolving deficit spending and the amount of borrowing that we have, this has gone on for decades. And I like to describe spending and borrowing such as this as really an American problem. It is not a party problem. What we've seen is both Democrats and Republicans have really struggled to be able to get consensus around how do we solve this over multiple years. And in fact, you could eliminate every single dollar of discretionary non-defense spending, and we would still have a deficit. I mean, that just helps, for me, like drive home how really intractable this problem is. So again, we need to find a way forward. We're not going to solve it tomorrow, but we need to start to see a vision about how we can build a plan to be able to get there.
I do want to get your thoughts, though, on the tariff situation, which not only is unresolved, but we kind of keep kicking the can down the road with these extensions of these deadlines. We have not really seen tangible progress on a trade deal. And the market, at least for right now, at least seems to be taking that in stride. But are you modeling in a scenario, some point maybe this year or even into next year, where the market impact could be a little bit more fundamental, particularly if these tariffs and the impact on the economy, the consumer, and for that matter, business spending, do become so material, they feed into the bottom lines of corporate America?
It does feel like right here the market's forgotten a little bit that we still have tariffs hanging over our heads, right? And we've fallen into this like almost predictable pattern of an announcement of huge tariffs being put on and then, oh, pause. But we still really haven't gotten to that place to what tariffs are. We know they're not going to be that super punitive level that was announced kind of like early in this process. And we know that they're not going back down to zero. But there's still a fairly wide range of outcomes. So to your point, if companies want to, for instance, build a new factory or hire a significant number of people going forward, they're going to have a narrower range of outcomes outcomes than where we currently are right now. And I think it's going to be a bit of a bumpy ride to be able to get there. We still have to get to the end of some of these pauses to get a sense about where these tariffs lie. So to your question about where do we think it all lies, it's somewhere in between where we probably have some level of tariffs, a good bit higher than what we've been used to over the last like 50 or so years. But in time, it becomes manageable by companies who either figure out how to source from other areas or just produce it themselves within the U.S.
Kara Murphy, Chief Investment Officer with Kestra Investment Management, kicking us off to the close here on this Wednesday afternoon, right?
It's Wednesday.
Wednesday,
Yep,
thank you.
day.
I'm losing track here. But
it.
of course, Kara O'Dara was just talking about the tariff impact, and we're going to get some more insight on that from someone who knows a lot about it. We're going to unpack what's going on in the shipping sector amid those China-U.S. trade tensions. The CEO of Genco, the largest dry bulk shipper based here in the U.S., going to be joining us in just a second.
All right, plus how advertising production is getting smarter, all thanks to AI. A discussion with Jeffrey Katzenberg, founding partner of Wonder Co., and Yinyan Na, a co-founder and CEO of Creatify, an AI platform taking over the director's chair when it comes to video advertising.
And that's going to be a nice setup for those results that we are expecting to get from NVIDIA. After the bell tonight, a full breakdown of what to expect out of the tech giants. Stick with us. This is The Close on Bloomberg.
Markets recovering from Liberation Day volatility. Seaborne exports from China, though, have not. So this chart shows dry cargo vessels leaving China that are monitored as they leave Chinese waters, and also how filled they are to capacity. And you can see just the decline lower and the lack of recovery despite any 90-day reprieve. Joining us now with his insight is John Wobensmith, CEO of Genco Shipping and Trading, which is the largest U.S.-based dry bulk shipper. Good to see you, John. Thanks for joining.
Yeah, thank you for having me.
Why haven't we seen a recovery in this kind of trading from China?
Well, we've seen somewhat of a recovery. So if you go back a few weeks, Port of LA was down 30% on cargo volumes. Very telling. And most of that was containerized cargo. We've seen a recovery, but only in the last week and a half, in terms of container volumes coming back into the U.S. But I think what you have to also keep into account is that while tariffs have gone down to 30% on Chinese goods,
they're still there.
They're still there, and it was 20% before we started this whole thing.
And for shipping, how does it work? When does delayed get booted altogether? Like, you can delay a shipment, but when does it get canceled and scrapped or moved somewhere else?
That's going to be very much up to the shipper. But what I can tell you is that, again, on the container ship side, there were a lot of blank sailings, meaning they weren't filled to capacity. That, again, has been taken off the table, but it's very recent that has occurred. I think the hardest thing in this environment is just the lack of not knowing what's coming next. So it's very difficult to make decisions, whether you're importing or exporting or your CapEx requirements in terms of shipping. So I think that's one of the biggest challenges that's been in place for us.
And that's not the only challenge you're dealing with. We still, of course, have the war going on in Ukraine, which has been a disruptive force. You also have several, I guess I will call them skirmishes, if you will, in the Middle East. That's also sort of clogged up some shipping lanes in those areas as well.
It certainly has. The Red Sea issue and the attacks by the Houthis, that is still for sure a threat. We are not taking our ships through the Red Sea area. I know.
Does that add a lot to your costs to have to go around that?
Well, we build it into our freight.
You build
so
it.
So for your customers, yes.
We pass it through. No choice, right? And I think, Egypt has been obviously hurt significantly from this. I think I saw something $800 million a month they were losing. So they've actually reduced fees for some of the container lines by 15% to try to entice more volume, but it's definitely still an issue.
I mean, overall, though, is shipping activity down? Because I keep seeing statistics, and I know it's not all just dry bulk, the statistics I'm looking at, but it seems to suggest trade is still happening. It's just happening in a more, circuitous type of way.
I think that's probably the best way to describe it. Shipping always finds a way to move goods. Again, it's more about, okay, we need to know what the barriers are going to be so we can, have the workarounds and continue to move goods.
So just for those of us who don't know what dry bulk is, you're talking about carrying iron ore, which is used for steel production. You're also talking about grains, steel products, cement. This is stuff that we use and consume on a daily basis, right? It's like the guts of an economy. If you look at where things are going and how they're moving, what does that tell you about the economy here in the U.S. and also globally?
Well, so one of the things a couple things. One, China, there's no doubt their economy is slowing down. You wouldn't necessarily see it in the GDP numbers, but you do see it in consumer demand and certainly housing as well. So that is becoming a factor. Secondly, for U.S. farmers and U.S. agricultural products, there is a 10% tax on that from the Chinese side. The Chinese do import a lot of soybean and corn from U.S. farmers. And if you compare that to where tariffs were before all of this, it was only about 3%. So U.S. farmers were able to be competitive in the world market. What China has done is they have front-loaded a lot of soybean purchases from Brazil, which is certainly a substitution country. And I think you're seeing more and more of that. And I think we also saw a lot of front-loading that began late last year.
So it's hard to get a clear read of the global economy because a lot of it is then distorted by front-running or inventory building, et cetera. If we go into a world where we kind of nationalize products, right? Like we're going to have a nationalized energy industry. Like we're not going to want to, it's more isolation, right? It's the U.S., it's Europe, and then it's China. What is that? Are you seeing any indication of that starting to happen?
I haven't, not more than rhetoric and talk. I wouldn't say that we can put our finger on any of that. Being a global shipping company, we obviously have a bias to global trade and being open. And look, there's no doubt there have been tariffs on U.S. goods for a long time and not a lot of tariffs on imports. But hopefully people can come together, make a deal, and world trade continues.
All right, John, really appreciate it. We got to leave it there. John Wobensmith, CEO of Genco Shipping and Trading, a discussion about U.S.-China relations. And on that front, some breaking news. This from the Financial Times. The President of the United States is apparently telling U.S. companies that offer software used to design semiconductors that they will have to stop selling their services to China. Now, this would primarily affect Cadence Design Systems and Synopsys. Cadence, Synopsys, and Siemens, which, of course, is based overseas, account for about 80% of their market. Shares of both Cadence and Synopsys now hitting session lows here on the day. We should point, this is a report by the Financial Times citing people familiar with the situation that the President of the United States and the Bureau of Industry and Security is now ordering certain design companies, software design companies for semiconductors to stop selling their services to China. We're going to get you some more details on that and bring it to you as soon as we can. We'll be back after the break. This is Bloomberg.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
All right, let's get a view from the sell side. Top calls, big movers on the back of analyst recommendations. And we start today with Booz Allen Hamilton. Goldman Sachs cutting its recommendation on the government tech and defense contractor to sell, lowering the price target to 94 from 108. The bank saying owning Booz Allen at current levels no longer makes sense given, quote, limited revenue and earnings growth over the medium term. Shares down about 5%. Next up, Vail Resorts. JP Morgan raising its recommendation on the ski resort operator to neutral and holding the price target at 167. The analyst says the reappointment of Rob Katz as CEO will bring some fresh powder to Vail. The company reports earnings next week. The shares having their best day going back to early April. And finally, Skechers. TD Cowen downgrading the footwear maker to hold and maintaining its price target at 63. 3G Capital is going to require Skechers for $9.4 billion, a price tag that was below the bull case for valuation, according to the analyst. The shares unchanged on the day. And those are some of our top calls. we do want to stay in the retail space because we are awaiting earnings out of e.l.f. Beauty. The share is up about a half a percentage point on the day as the cosmetic company prepares to release those results. Olivia Tong joins us right now, Managing Director and Senior Equity Analyst at Raymond James. She's got a strong buy on e.l.f. Why, Olivia? You're optimistic about what we're going to hear tonight?
We are, and thanks for having me on the show. We think that they'll beat on Q4, and we've seen a couple of different things happen over the last couple of weeks/quarter. One being that a lip product that they introduced not too long ago has gotten a lot of good traction. Two, they just announced last week a price increase of $1, and the feedback has actually been fairly positive amongst their consumers, appreciating the transparency and realizing, of course, that with inflation and with the potential impact of tariffs, that they need to do that. And then third is the international expansion that they have, they've started UK, Canada, a couple of other countries, but there's still a lot of world to go. So we think that the 1-2 punch of core growth in the U.S. plus international bodes well for the company.
Bodes well long term. I mean, we're still looking at a revenue growth rate, if you believe the Bloomberg consensus, of only about 2%. This was a company that had been growing at well above that, above 50% for the last few quarters here. You're comfortable, though, even though that growth rate is coming down, you're comfortable with what we can look out to for the next few quarters?
I do think so. I think, as I mentioned, they've got the new product and they've got international expansion, which should get that growth rate moving again after the March quarter. And also, if you remember, if you look at the comp for March quarter, they're going against a plus 71 comp. So, being able to grow and finish the year at sort of in a high 20s position is pretty admirable, especially in a tough backdrop with respect to the consumer at this point.
Olivia, what are the risks, right? Like, we always talk about how investing in your face, well, I do. Investing in your face is recession-proof, right? Like, this is where you want to be no matter what, because women are always going to buy face cream and lipstick. What are the risks to that?
Yes, you're right, Alex. That is absolutely the case, that you see beauty tends to be more recession resistant, not necessarily recession proof. The risks, of course, are that as Romain pointed out, the growth has decelerated. Now, still growing quite nicely and still growing share, which is important, but the growth has decelerated to some extent. And the second thing, of course, is the tariffs. They do produce the vast majority of their product in China. So as we think about the next however many months, where the tariffs are still in flux and their ability to move production to mitigate the impact. As we mentioned earlier, there's the price increase that they've already talked about, other tariff mitigation strategies that they could put in place. Those are the bigger risks. And then, of course, if there was further deceleration, if the macros get more challenging, and you do start to see some impact to demand. However, e.l.f. does tend to have more value priced products. So as we think about, always investing in your face and giving yourself a little affordable luxury, this still resonates, and they are priced at a fairly reasonable discount relative to their peer set.
All right, Olivia, really appreciate it. Thank you so much. Olivia Tong, Managing Director and Senior Equity Analyst at Raymond James. Yes, go ahead.
I have to take issue. You said women. They love their stuff.
True.
Men, too.
I did.
I just bought, Derm Store had a great Memorial Day sale, by the way. So.
What'd you buy?
A lot of creams. I'm getting old. I got to get that retinol,
my husband puts
vitamin
Vaseline
C.
on his face.
Vaseline.
Okay? Vaseline. No. It's horrific and horrifying, and
that's
makes
like a high school rookie move.
Hurt.
Come on.
It's very upsetting when
that's
he does
what I used
that.
to do in high school. I just, slather Vaseline, and I couldn't understand why I kept breaking out.
Yeah, I mean, it's so weird that would happen. Although it probably his face.
Now I just
loves
use a bunch of overpriced creams that probably do absolutely nothing, but it makes me feel
my
better.
stuff is perfect. Okay, my cream is amazing. I believe in science. Okay, coming up.
How do I look?
Maybe AI could help Romain with this problem. AI video ad platform Creatify has just raised $15.5 million in Series A funding co-led by WonderCo and Kindred Ventures. We're going to speak to Jeffrey Katzenberg, founding partner at WonderCo, and Yinyan Na, co-founder and CEO of Creatify. This is The Close on Bloomberg.
Exhausted investors digesting the latest tariff talk out of Washington.
The only thing you can do is prepare.
8 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Alex Steele. You're taking a look at an equity market that is still just solidly down, but not by a lot. We haven't really gone anywhere. The S&P is just down by about 0.2% as we wait for NVIDIA.
Yeah, definitely a bit of a holding pattern here. Of course, NVIDIA has been the star of the show when it comes to the stock market for the last few years, largely because of all the investment in AI. The talk has, of course, been about data centers and buying chips. But I think the real question now is, what are the practical applications of all this spending? When do we start to see real people using this for real things?
Well, and the chip restrictions have really put a lot of clouds over NVIDIA's numbers because analysts don't seem to agree on what that could mean. So the consensus for earnings could be really off. So whether they meet or beat, it could just be quite messy. And then you add the FT story just onto all the confusion that President Trump is ordering U.S. chip software designers to stop China sales. And then things get even more confusing.
Yeah, and we're keeping an eye on those stocks. We should point out that Synopsys now hitting fresh session lows, Cadence Design down, key sites as well.
Yep, and we're seeing Synopsys reports earnings after the closing bell as well.
Mm-hmm. Yeah.
It's your intro.
It's my intro.
Yeah.
All right. Well, the two people on your screen, those two people, they aren't actually people. They are artificial intelligence avatars. The Arizona Supreme Court is using the tech to simplify and report on court rulings with the public. Now, these avatars were made by a company called Creatify. It's an AI video ad platform that just raised about $15.5 million in a Series A funding round, co-led by WonderCo and Kindred Ventures. Pleased to say, joining us now to discuss that is Jeffrey Katzenberg, founding partner at WonderCo, and Ynon Na, the co-founder and CEO of Creatify. Welcome to both of you. Great to see you, Jeffrey. And Ynon, I want to start with you because I'm absolutely fascinated by what you're doing. When somebody told me about Creatify, my first thought was, why would I need this? Is this for playing games? And someone pointed out this Supreme Court, the Arizona Supreme Court, using this as a way to sort of explain these rulings, explain what's on the public docket. Can you just explain to me how you came up with this idea, and did you expect it to be used in that type of application?
Thanks for having me. So we started this idea from my experience working at Snapchat. I helped build Snapchat's video platform called Spotlight. So we realized there's a tremendous demand for this short form video era, right? Like there's all the advertisers want to run on ads with the short form video platform format. And so we inspire us to create this idea to use AI to radically make the video creation easier. And to be honest, we didn't expect the use case you just described, but we are actually applying our video technology to different use cases, right? Starting from advertising, now we are seeing new use case like what you just mentioned. And it's very fascinating to us.
So, Jeffrey, I am curious as to how you came about this. Of course, you've been investing in a lot of companies in the entertainment and the tech space, and it's all kind of course, we now see this is all kind of merged together. Calling it tech media is kind of moot at this point. When you came across what Ynon was doing, what was it about it that made you take interest?
Well, I think a couple things. So one, storytelling tools have always evolved, and I've always been looking for whatever the best tools are to put in the hands of storytellers. And great technology turns storytelling into really a creative and a business success, which is in fact what Creatify does. The thing I keep coming back to and just feel so strongly about is the human touch is everything. AI, it follows vision, direction, and feedback. And so Creatify isn't replacing the marketers, it's actually amplifying them.
Does it worry you, Jeffrey, that at some point it's going to just take away jobs on the creative front? I mean, I know this is just one slice and it's not necessarily like writing or directing a movie, but you could see how we'd get there.
Again, I come back to the human touch here, I think is just absolutely essential and fundamental. And so the answer is, what I think it does is it democratizes storytelling. So as a perfect example here, what Creatify does very specifically around advertising, and advertising is very much a storytelling enterprise. And it takes something that would cost many, many tens of thousands of dollars and maybe take 4 or 6 or 8 weeks. And it actually is able to do it in minutes and at a fraction of the cost. And so what that means is that you have the best tools in the hands of more people than ever before. And out of that is going to come great work, great creativity, and I think ultimately business success.
Yanan, Jeffrey brings in that human touch element, which always raises the question of the inputs, right? Like the LLMs, the large language models, where you're getting the source from to then fuel the AI and the copyright issues surrounding that. How are you guys thinking about it?
So we actually take a lot of data from the brand itself, and we augment it using our AI. So the way it works is we'll take the information from the brand and we'll ingest into our video generation model. And our video generator be able to analyze all the information and be able to generate very personalized, tailor-made advertising content for each brand. And we take data privacy and trust and safety very seriously, and we have very strict content moderation rule to make sure all the data are used properly.
Is there a sense, though, Inan, and when we talk about the use case for this, what do you think the trust level for users are going to be? So we use this example of the Arizona Supreme Court, and it's a certain practical application. There's been other cases where people have tried to use AI avatars in courtroom functions without necessarily informing the court that they were using them. That's led to a lot of laughs, but it's also raising about a question about what I can believe with my own eyes. How do I know what's real when I see AI has gotten so good?
Yeah, AI definitely making a lot of change to how advertising world works. And the way we use it is we use AI to really empower a lot of business, because traditionally, for a small business owner, if they want to run video advertising, it costs thousands of dollars, 2 to 4 weeks, and it's very cost prohibitive. With Creatify, we actually can empower them to be able to create a video ads within minutes and be able to grow their business. So what we do here is really to empower entrepreneurship, empower business, so they can actually focus what matters to grow their business. So that's also the vision of Creatify.
But Romain, it does. Well, listen, it does raise a point here, which is should there be guardrails? And the answer, I believe, is yes. But of something that is so young and is evolving so quickly, the balance here is between extraordinary speed of innovation and protection. And whether it's protection around copyright or it's protection around truth and fact, these are super important issues, and I don't know that we have the answers yet, but clearly there need to be some guardrails.
I want to, let me go in the creative space, particularly given your background, Jeffrey, obviously founding DreamWorks and your time as a chairman of Disney Studios back in the day, kind of when movies were made still the old-fashioned way. And we've seen the evolution of technology and now artificial intelligence in movie making as well. There was recently an interesting use case, particularly in the latest release of Fortnite, and the use of AI with some of the voices in there. I don't know what the business terms of that were, what sort of contracts were signed, but it seemed to raise a lot of hackles about fair use, about transparency of use. And I am curious, particularly in the creative fields, how you see this evolving. I know it can be complementary to the human creative, but will it be? Will we as humans be willing to accept that?
Well, that's on us. I mean, I would say to you, yes. And it's interesting because if you go back and you look at how, the evolution of these, tools, you look at animation going from a 2D business into, a CG business, hand-drawn into state-of-the-art computer animation, was an amazing disruption. And yet animation today is bigger than it's ever been. And there are more people employed working in it than ever before.
Thing you need to get the edge at the end of the market day. This is The Close.
A holding pattern for the broad market as investors await a singular earnings report from NVIDIA. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Alex Steele. We're just biding time until 4:20. And you can see that within the equity market going nowhere fast. You have the NASDAQ totally flat. You have the S&P off by 0.2%. We tried to make a run for it to the lower end of the trading band today, but we popped back up from that. Now the VIX for the NASDAQ is coming in right at 22, so that's a little bit lower as well. Even the 30-year is kind of tamed us up 2 basis points. I guess the question is, Romaine, do we actually get fireworks at 4:20?
Well, I mean, that is the real question. In a little more than an hour, we're going to find out. A keen focus right now on its supply of those high-powered Blackwell chips used to run all those AI projects. Now, remember, we got earnings out of Microsoft, Meta, and some of those other big hyperscalers, which did show that the outlook for AI spending is still mostly intact. But investors, they really want to see how NVIDIA is capitalizing on that and whether it can actually broaden its customer base beyond just those U.S.-based names.
Companies like the hyperscalers, which just turn around and rent out GPU capacity, that's starting to flatten out. So that's why it's going to be harder for NVIDIA to grow from these customers.
Now, NVIDIA, of course, has been for the past 5 years the focal point of the AI trade that has taken it from second-class citizen to God-tier status. Now, the second largest company in the S&P 500. But that actually doesn't necessarily mean it's going to move the market. In fact, its correlations have been, well, falling. In 7 of the past 8 earnings days, there has actually been lower correlation than the other. Options this Wednesday afternoon implying a 6.3% move up or down, and that's smaller than what was signaled back in February and back in November, just before their earnings then. Now, despite the NVIDIA vortex, we should point out it's not just big tech moving today, but retailers also getting in on the action. You had solid earnings reports from Abercrombie, Macy's, Capri, Dick's, giving investors hope that consumer spending is holding up. We're going to get a report from Elf Beauty after the bell today, and from Burlington, Best Buy, Gap, and Ulta tomorrow. And maybe, Alex, that will actually help broaden the market rally beyond tech.
I mean, here's a hoping, right? And here's a good way to also think about it as well. Check out this chart. You're taking a look at that white line, which is the equal weighted S&P versus the overall S&P. Now, the blue line is the 10-year yield, but inverted. So as the blue line goes down, yields are actually moving higher. As the white line goes down, the S&P equal weighted index is actually underperforming. And as you have Treasury yields continuing to rise, guess what? S&P is what's outperforming. So it's that big cap tech. It's not the equal weighted index. So even though NVIDIA may not have a direct correlation to the market, does it continue with the theme when the rally has just not been able to broaden?
Absolutely. Kara Murphy joins us right now to kick us off to the close, the Chief Investment Officer with Kestra Investment Management. And Kara, I want to pick up where Alex left off here about the complexion of, I guess we can't really call it a rally today, but wherever this market is at and what you see as potentially leading it higher.
Well, I'm not going to come on here and tell you that NVIDIA is not important to the market, because it certainly is, and everyone's going to be watching that earnings report after the close. But I think, as you pointed out earlier, we've seen a little bit of a decoupling between NVIDIA and the rest of the market. And I think that's actually a really positive thing. We can't have just one or just a handful of names that continue to dominate year after year. So even though breadth is still struggling right now, what we've seen is that some other areas of the market have been able to kind of shine a little bit during this period of uncertainty. So one that we're focused on a lot is looking at non-U.S. developed, where all of a sudden stocks outside the U.S. start to look a little bit more attractive, particularly as people are worried about things like weaker dollar or policy uncertainty here in the U.S. And the good news is there's still plenty of different investments to be able to choose from that can offer that diversification.
Are those names, though, in those sectors, are they growth stories or are they just kind of defensive in nature?
So what you see is that the U.S. market is much more geared toward this sort of like traditional growth profile, right? We tend to have much heavier exposure to technology companies, more growth-oriented companies. And so when you move over to, let's say, Europe, you tend to have a bit more value-oriented sectors in general. But that said, you're still having that ability to kind of get out of some of the policy constraints that you have in the U.S. You still have that FX benefit if you believe that the dollar is going to continue to weaken. So we think it's okay, actually, to sort of like pitch over to the value side a little bit if it's in Europe, because U.S. markets have become so geared as a growth story.
Which is so interesting, Kara. Does that mean that we just sell U.S. equities, or it just means they underperform? Like on a relative basis, where does U.S. exceptionalism stay?
Yeah, and I don't think this is a hard turn to the right. I think to your point, it's maybe we start to see some non-U.S. outperform. You don't need to have a bear market in the U.S. to have non-U.S. stocks start to look attractive again. It's just where are you going to find that incremental piece of growth? And we think that some of these non-U.S. stories are going to start to look more attractive.
Does that also apply to other U.S. assets like, say, the bond market and the dollar?
So the bond market is really sort of tricky right here because that is really the epicenter of a lot of this policy discussion. And I found it really interesting today, right? Even on a day when we're gearing up for NVIDIA to report earnings, which is typically a huge focus for the market, a lot of the news cycle has also been focused on the bond market. And this is telling you that people are eyes on things like the budget, federal spending, debt. And these are big sort of existential questions. And these are things that are not going to get solved in the near future, but they are really important. And I think bond investors in particular, you know, the U.S. market is so large, so liquid. Even if you're a global investor, the U.S. The U.S. bond market is so important that they need to start to see a way forward, right? We need to start to see a path to lower deficit spending and a way for the U.S. government to start to wind down some of those obligations.
Absolutely. But in the meantime, we talk about this idea, Kara, of the liquidity of the U.S. market. So investors may not shun it. They're certainly going to maybe demand a little bit more out of the government if they continue down this road. This seems like one of the areas, at least of all the things going on in Washington, that at least in the short term is probably the least resolvable. I mean, we talk so much about trade on this program, but, you know, in theory, you know, Trump could flip a switch tomorrow and this can be all over. He can't necessarily do that when it comes to the deficit and the budget.
I think you are 100% correct. And so, you know, as we think back to the beginning of this year, we had identified a number of policy risks. One of them was tariffs. Ultimately, though, we don't think tariffs is actually the largest risk faced by the market, because the level of tariffs is less important than just knowing what they are. U.S. companies can sort of resolve around whatever that tariff rate is. But to your point, this idea of sort of like resolving deficit spending and the amount of borrowing that we have, this has gone on for decades. And I like to describe spending and borrowing such as this as really an American problem. It is not a party problem. What we've seen is both Democrats and Republicans have really struggled to be able to get consensus around how do we solve this over multiple years. And in fact, you could eliminate every single dollar of discretionary non-defense spending, and we would still have a deficit. I mean, that just helps, for me, like drive home how really intractable this problem is. So again, we need to find a way forward. We're not going to solve it tomorrow, but we need to start to see a vision about how we can build a plan to be able to get there.
I do want to get your thoughts, though, on the tariff situation, which not only is unresolved, but we kind of keep kicking the can down the road with these extensions of these deadlines. We have not really seen tangible progress on a trade deal. And the market, at least for right now, at least seems to be taking that in stride. But are you modeling in a scenario, some point maybe this year or even into next year, where the market impact could be a little bit more fundamental, particularly if these tariffs and the impact on the economy, the consumer, and for that matter, business spending, do become so material they feed into the bottom lines of corporate America?
It does feel like right here the market's forgotten a little bit that we still have tariffs hanging over our heads, right? And we've fallen into this like almost predictable pattern of an announcement of huge tariffs being put on and then pause. But we still really haven't gotten to that place to what we know what tariffs are. We know they're not going to be that super punitive level that was announced kind of like early in this process. And we know that they're not going back down to zero. But there's still a fairly wide range of outcomes. So to your point, if companies want to, for instance, build a new factory or hire a significant number of people going forward, they're going to have a narrower range of outcomes than where we currently are right now. And I think it's going to be a bit of a bumpy ride to be able to get there. We still have to get to the end of some of these pauses to get a sense about where these tariffs lie. So to your question about where do we think it all lies, it's somewhere in between where we probably have some level of tariffs, a good bit higher than what we've been used to over the last like 50 or so years. But in time, it becomes manageable by companies who either figure out how to source from other areas or just produce it themselves within the U.S.
Kara Murphy, Chief Investment Officer with Kestra Investment Management, kicking us off to the close here on this Wednesday afternoon, right?
It's Wednesday.
Wednesday,
Yep,
thank you.
hump day.
I'm losing track
You
here.
got
But
it.
of course, Carol O'Dara was just talking about the tariff impact, and we're going to get some more insight on that from someone who knows a lot about it. We're going to unpack what's going on in the shipping sector amid those China-U.S. trade tensions. The CEO of Genco, the largest dry bulk shipper based here in the U.S., going to be joining us in just a second.
All right, plus how advertising production is getting smarter, all thanks to AI. A discussion with Jeffrey Katzenberg, founding partner of Wonder Co., and Yinyan Na, a co-founder and CEO of Creatify, an AI platform taking over the director's chair when it comes to video advertising.
And that's going to be a nice setup for those results that we are expecting to get from NVIDIA. After the bell tonight, a full breakdown of what to expect out of the tech giants. Stick with us. This is The Close on Bloomberg.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can. Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
Markets recovering from Liberation Day volatility. Seaborne exports from China, though, have not. So this chart shows dry cargo vessels leaving China that are monitored as they leave Chinese waters, and also how filled they are to capacity. And you can see just the decline lower and the lack of recovery despite any 90-day reprieve. Joining us now with his insight is John Wobensmith, CEO of Genco Shipping and Trading, which is the largest U.S.-based dry bulk shipper. Good to see you, John. Thanks for joining.
Yeah, thank you for having me.
Why haven't we seen a recovery in this kind of trading from China?
Well, we've seen somewhat of a recovery. So if you go back a few weeks, Port of LA was down 30% on cargo volumes. Very telling. And most of that was containerized cargo. We've seen a recovery, but only in the last week and a half, in terms of container volumes coming back into the U.S. But I think what you have to also keep into account is that while tariffs have gone down to 30% on Chinese goods,
they're still there.
They're still there, and it was 20% before, we started this whole thing.
And for shipping, how does it work? When does delayed get booted altogether? Like, you can delay a shipment, but when does it get canceled and scrapped or moved somewhere else?
That's going to be very much up to the shipper. But what I can tell you is that, again, on the container ship side, there were a lot of blank sailings, meaning they weren't filled to capacity. That, again, has been taken off the table, but it's very recent that has occurred. I think the hardest thing in this environment is just the lack of not knowing what's coming next. So it's very difficult to make decisions, whether you're importing or exporting or your CapEx requirements in terms of shipping. So I think that's one of the biggest challenges that's been in place for us.
And that's not the only challenge you're dealing with. We still, of course, have the war going on in Ukraine, which has been a disruptive force. You also have several, I guess I will call them skirmishes, if you will, in the Middle East. That's also sort of clogged up some shipping lanes in those areas as well.
It certainly has. The Red Sea issue and the attacks by the Houthis, that is still for sure a threat. We are not taking our ships through the Red Sea area. I know.
Does that add a lot to your costs to have to go around that?
Well, we build it into our freight.
You build
so
it. Okay.
So for your customers, yes.
We pass it through. Okay. Yeah. No choice, right? And I think, Egypt has been obviously hurt significantly from this. I think I saw something $800 million a month they were losing. So they've actually reduced fees for some of the container lines by 15% to try to entice more volume, but it's definitely still an issue.
I mean, overall, though, is shipping activity down? Because I keep seeing statistics, and it's not, I know it's not all just dry bulk, the statistics I'm looking at, but it seems to suggest trade is still happening. It's just happening in a more, circuitous type of way.
I think that's probably the best way to describe it. Shipping always finds a way to move goods. Again, it's more about, okay, we need to know what the barriers are going to be so we can, have the workarounds and continue to move goods.
So just for those of us who don't know what dry bulk is, you're talking about carrying iron ore, which is used for steel production. You're also talking about grains, steel products, cement. This is stuff that we use and consume on a daily basis, right? It's like the guts of an economy. If you look at where things are going and how they're moving, what does that tell you about the economy here in the U.S. and also globally?
Well, so one of the things that a couple things. One, China, there's no doubt their economy is slowing down. You wouldn't necessarily see it in the GDP numbers, but you do see it in consumer demand and certainly housing as well. So that is becoming a factor. Secondly, for U.S. farmers and U.S. agricultural products, there is a 10% tax on that from the Chinese side. The Chinese do import a lot of soybean and corn from U.S. farmers. And if you compare that to where tariffs were before all of this, it was only about 3%. So U.S. farmers were able to be competitive in the world market. What China has done is they have front-loaded a lot of soybean purchases from Brazil, which is certainly a substitution country, and I think you're seeing more and more of that. And I think we also saw a lot of front-loading that began late last year.
So it's hard to get a clear read of the global economy because a lot of it is then distorted by front-running or inventory building, et cetera. If we go into a world where we kind of nationalize products, right? Like we're going to have a nationalized energy industry. Like we're not going to want to, it's more isolation, right? It's the U.S., it's Europe, and then it's China. What is that? Are you seeing any indication of that starting to happen?
Not more than rhetoric and talk. I wouldn't say that we can put our finger on any of that. Being a global shipping company, we obviously have a bias to global trade and being open. And look, there's no doubt there have been tariffs on U.S. goods for a long time and not a lot of tariffs on imports. But hopefully people can come together, make a deal, and world trade continues.
All right, John, really appreciate it. We got to leave it there. John Wobensmith, CEO of Genco Shipping and Trading, the discussion about U.S.-China relations. And on that front, some breaking news. This from the Financial Times. The President of the United States is apparently telling U.S. companies that offer software used to design semiconductors that they will have to stop selling their services to China. Now, this would primarily affect Cadence Design Systems and Synopsys. Cadence, Synopsys, and Siemens, which, of course, is based overseas, account for about 80% of their market. Shares of both Cadence and Synopsys now hitting session lows here on the day. We should point, this is a report by the Financial Times citing people familiar with the situation that the President of the United States and the Bureau of Industry and Security is now ordering certain design companies, software design companies for semiconductors to stop selling their services to China. We're going to get you some more details on that and bring it to you as soon as we can. We'll be back after the break. This is Bloomberg. All right, let's get a view from the sell side. Top calls, big movers on the back of analyst recommendations. And we start today with Booz Allen Hamilton. Goldman Sachs cutting its recommendation on the government tech and defense contractor to sell, lowering the price target to 94 from 108. The bank saying owning Booz Allen at current levels no longer makes sense given, quote, limited revenue and earnings growth over the medium term. Shares down about 5%. Next up, Vail Resorts. JP Morgan raising its recommendation on the ski resort operator to neutral and holding the price target at 167. The analyst says the reappointment of Rob Katz as CEO will bring some fresh powder to Vail. The company reports earnings next week. The shares having their best day going back to early April. And finally, Skechers. TD Cowen downgrading the footwear maker to hold and maintaining its price target at 63. 3G Capital It's going to require, Skechers, for $9.4 billion, a price tag that was below the bull case for valuation, according to the analyst. The shares unchanged on the day, and those are some of our top calls. We do want to stay in the retail space because we are awaiting earnings out of Elf Beauty. The share is up about a half a percentage point on the day as the cosmetic company prepares to release those results. Olivia Tong joins us right now, managing director and senior equity analyst at Raymond James. She's got a strong buy on Elf. Why, Olivia? You optimistic about what we're going to hear tonight?
We are, and thanks for having me on the show. We think that they'll beat on Q4, and we've seen a couple of different things happen over the last couple of weeks/quarter. One being that a lip product that they introduced not too long ago has gotten a lot of good traction. Two, they just announced last week a price increase of $1, and the feedback has actually been fairly positive amongst their consumers, appreciating the transparency and realizing, of course, that with inflation and with the potential impact of tariffs that they need to do that. And then third is the international expansion that they have. They've started UK, Canada, a couple of other countries, but there's still a lot of world to go. So we think that the 1-2 punch of core growth in the U.S. plus international bodes well for the company.
Bodes well long term. I mean, we're still looking at a revenue growth rate, if you believe the Bloomberg consensus, of only about 2%. This was a company that had been growing at well above that, above 50% for the last few quarters here. You're comfortable, though, even though that growth rate is coming down, you're comfortable with what we can look out to for the next few quarters?
I do think so. I think, as I mentioned, they've got the new product and they've got international expansion, which should get that growth rate moving again after the March quarter. And also, if you remember, if you look at the comp for March quarter, they're going against a plus 71 comp. So, being able to grow and finish the year at sort of in a high 20s position is pretty admirable, especially in a tough backdrop with respect to the consumer at this point.
Olivia, what are the risks, right? Like, we always talk about how investing in your face, well, I do. Investing in your face is recession-proof, right? Like, this is where you want to be no matter what, because women are always going to buy face cream and lipstick. What are the risks to that?
Yes, you're right, Alex. That is absolutely the case, that you see beauty tends to be more recession resistant, not necessarily recession proof. The risks, of course, are that as Romain pointed out, the growth has decelerated. Now, still growing quite nicely and still growing share, which is important, but the growth has decelerated to some extent. And the second thing, of course, is the tariffs. They do produce the vast majority of their product in China. So as we think about the next however many months, where the tariffs are still in flux and their ability to move production to mitigate the impact. As we mentioned earlier, there's the price increase that they've already talked about, other tariff mitigation strategies that they could put in place. Those are the bigger risks. And then, of course, if there was further deceleration, if the macros get more challenging, and you do start to see some impact to demand. However, ELF does tend to have more value priced products. So as we think about, always investing in your face and giving yourself a little affordable luxury, this still resonates, and they are priced at a fairly reasonable discount relative to their peer set.
All right, Olivia, really appreciate it. Thank you so much. Olivia Tong, Managing Director and Senior Equity Analyst at Raymond James. Yes, go ahead.
I have to take issue. You said women. They love their stuff.
True.
Men, too.
I did.
I just bought, Derm Store had a great Memorial Day sale, by the way. So.
What'd you buy?
A lot of creams. I'm getting old. I got to get that retinol.
My husband puts
vitamin
Vaseline
C.
on his face.
Vaseline?
Okay? Vaseline.
No.
It's horrific and horrifying, and
That's
it makes
like a high
me
school rookie move.
hurt.
Come on.
It's very upsetting when
That's
he does
what I used
that.
to do in high school. I just, slather Vaseline, and I couldn't understand why I kept breaking out.
Yeah, I mean, it's so weird that would happen. Although it probably his face
now
probably
I just
loves
use a
it.
bunch of overpriced creams that probably do absolutely nothing, but
Okay,
it makes me feel
my
better.
stuff is perfect, okay? My cream is amazing. I believe in science. Okay, coming up.
How do I look?
Maybe AI could help Romain with this problem. AI video ad platform Creatify has just raised $15.5 million in Series A funding co-led by WonderCo and Kindred Ventures. We're going to speak to Jeffrey Katzenberg, founding partner at WonderCo, and Yinyan Na, co-founder and CEO of Creatify. This is The Close on Bloomberg.
This is the countdown to the close. I'm Romaine Bostick.
And I'm Alex Steele. You're taking a look at an equity market that is still just solidly down, but not by a lot. We haven't really gone anywhere. The S&P is just down by about 0.2% as we wait for NVIDIA.
Yeah, definitely a bit of a holding pattern here. Of course, NVIDIA has been the star of the show when it comes to the stock market for the last few years, largely because of all the investment in AI. The talk has, of course, been about data centers and buying chips. But I think the real question now is, what are the practical applications of all this spending? When do we start to see real people using this for real things?
Well, and the chip restrictions have really put a lot of clouds over NVIDIA's numbers because analysts don't seem to agree on what that could mean. So the consensus for earnings could be really off. So whether they meet or beat, it could just be quite messy. And then you add the FT story just onto all the confusion that President Trump is ordering U.S. chip software designers to stop China sales. And then things get even more confusing.
Yeah, and we're keeping an eye on those stocks. We should point out that Synopsys now hitting fresh session lows, Cadence Design down, key sites as well.
Yep, and we're seeing Synopsys reports earnings after the closing bell as well.
Mm-hmm. Yeah.
It's your intro.
It's my intro.
Yeah.
All right. Well, the two people on your screen, those two people, they aren't actually people. They are artificial intelligence avatars. The Arizona Supreme Court is using the tech to simplify and report on court rulings with the public. Now, these avatars were made by a company called Creatify. It's an AI video ad platform that just raised about $15.5 million in a Series A funding round, co-led by WonderCo and Kindred Ventures. Pleased to say, joining us now to discuss that is Jeffrey Katzenberg, founding partner at WonderCo, and Ynon Na, the co-founder and CEO of Creatify. Welcome to both of you. Great to see you, Jeffrey. And Ynon, I want to start with you because I'm absolutely fascinated by what you're doing. When somebody told me about Creatify, my first thought was, why would I need this? Is this for playing games? And someone pointed out this Supreme Court, the Arizona Supreme Court, using this as a way to sort of explain these rulings, explain what's on the public docket. Can you just explain to me how you came up with this idea, and did you expect it to be used in that type of application?
Thanks for having me. So we started this idea from my experience working at Snapchat. I helped build a Snapchat's video platform called Spotlight. So we realized there's a tremendous demand for this short form video era, right? Like there's all the advertisers want to run on ads with the short form video platform format. And so we inspire us to create this idea to use AI to radically make the video creation easier. And to be honest, we didn't expect the use case you just described, but we are actually applying our video technology to different use cases, right? Starting from advertising, now we are seeing new use case like what you just mentioned. And it's very fascinating to us.
So, Jeffrey, I am curious as to how you came about this. Of course, you've been investing in a lot of companies in the entertainment and the tech space, and it's all kind of course, we now see this is all kind of merged together. Calling it tech media is kind of moot at this point. When you came across what Ynon was doing, what was it about it that made you take interest?
Well, I think a couple things. So one, storytelling tools have always evolved, and I've always been looking for whatever the best tools are to put in the hands of storytellers. And great technology turns storytelling into really a creative and a business success, which is in fact what Creatify does. The thing I keep coming back to and just feel so strongly about is the human touch is everything. AI, it follows vision, direction, and feedback. And so Creatify isn't replacing the marketers, it's actually amplifying them.
Does it worry you, Jeffrey, that at some point it's going to just take away jobs on the creative front? I mean, I know this is just one slice, and it's not necessarily like writing or directing a movie, but you could see how we'd get there.
Again, I come back to the human touch here, I think is just absolutely essential and fundamental. And so the answer is, what I think it does is it democratizes storytelling. So as a perfect example here, what Creatify does very specifically around advertising, and advertising is very much a storytelling enterprise. And it takes something that would cost many, many tens of thousands of dollars and maybe take 4 or 6 or 8 weeks. And it actually is able to do it in minutes and at a fraction of the cost. And so what that means is that you have the best tools in the hands of more people than ever before. And out of that is going to come great work, great creativity, and I think ultimately business success.
Yanan, Jeffrey brings in that human touch element, which always raises the question of the inputs, right? Like the LLMs, the large language models, where you're getting the source from to then fuel the AI and the copyright issues surrounding that. How are you guys thinking about it?
So we actually take a lot of data from the brand itself, and we augment it using our AI. So the way it works is we'll take the information from the brand and we'll ingest into our video generation model. And our video generator be able to analyze all the information and be able to generate very personalized, tailor-made advertising content for each brand. And we take data privacy and trust and safety very seriously, and we have very strict content moderation rules to make sure all the data are used properly.
Is there a sense, though, Inan, and when we talk about the use case for this, what do you think the trust level for users are going to be? So we use this example of the Arizona Supreme Court, and it's a certain practical application. There's been other cases where people have tried to use AI avatars in courtroom functions without necessarily informing the court that they were using them. That's led to a lot of laughs, but it's also raising about a question about what I can believe with my own eyes. How do I know what's real when I see AI has gotten so good?
Yeah, AI definitely making a lot of change to how advertising world works. And the way we use it is we use AI to really empower a lot of business, because traditionally, for a small business owner, if they want to run video advertising, it costs thousands of dollars, 2 to 4 weeks, and it's very cost prohibitive. With Creatify, we actually can empower them to be able to create a video ads within minutes and be able to grow their business. So what we do here is really to empower entrepreneurship, empower business, so they can actually focus what matters to grow their business. So that's also the vision of Creatify.
But Romain, it does. Well, listen, it does raise a point here, which is should there be guardrails? And the answer, I believe, is yes. But of something that is so young and is evolving so quickly, the balance here is between extraordinary speed of innovation and protection. And whether it's protection around copyright or it's protection around truth and fact. These are super important issues, and I don't know that we have the answers yet, but clearly there need to be some guardrails.
I want to, let me go in the creative space, particularly given your background, Jeffrey, obviously founding DreamWorks and your time as a chairman of Disney Studios back in the day, kind of when movies were made still the old-fashioned way. And we've seen the evolution of technology and now artificial intelligence in movie making as well. There was recently an interesting use case, particularly in the latest release of Fortnite, and the use of AI with some of the voices in there. I don't know what the business terms of that were, what sort of contracts were signed, but it seemed to raise a lot of hackles about fair use, about transparency of use. And I am curious, particularly in the creative fields, how you see this evolving. I know it can be complementary to the human creative, but will it be? Will we as humans be willing to accept that?
Well, that's on us. I mean, I would say to you, yes. And it's interesting because if you go back and you look at how, the evolution of these, tools, you look at animation going from a 2D business into, a CG business, hand-drawn into state-of-the-art computer animation, was an amazing disruption. And yet animation today is bigger than it's ever been. And there are more people employed working in it than ever before. The jobs, some of which have been reinvented, some of which are new, some of which have gone away. But it has absolutely been a tremendous positive impact on the business. And so I look at what's happening today. I don't think this is an evolutionary moment. It's a revolutionary moment. It's impossible to see these incredible new releases, whether it's VO3 coming out of Google or the things that we are seeing coming out of OpenAI and Anthropic. And it is breathtaking. It's happening so fast that I think there is anxiety of, can we keep up with this? Can we manage it in a productive way and one that protects, creative rights and all of the things that surround that?
Well, Jeffrey, to that point, no one would have seen this evolution coming in Hollywood, for example, right? It's been quite a ride. And COVID totally disrupted the industry also, so you got to add that on to it. Fast forward for me 5 years. What does Hollywood and the movie industry look like? In the AI world and in reality? Like, is it, we're all going to be watching bots on YouTube? Like, what is it?
I think it's many things is the answer to that, Alex. I don't think it is just going to be one size, fits all here. Do I think there are going to be movies and movie experiences? Absolutely. From anybody that went to the movie theaters this past weekend, the biggest, Memorial weekend in the history of the business, with two incredible movies, yes, there's a future for that. People love that communal experience. On the other end of it, you see TikTok. And you see what, creators are doing today, and YouTube has never, ever been bigger than it is right now. And so I'm very optimistic. I do think there are new forms of storytelling of which these tools are going to be accelerants to that, if not catalysts to them occurring. I don't believe it's the end of Hollywood. Not even a little bit. I think probably just the opposite. Will it function in the way that it has in the past? Absolutely not. At the Walt Disney Studio, we had 130,000 frames of film, every single one of which was drawn by hand with a pencil, and then inked and painted by hand. And then Toy Story comes along, changes everything. And the outcome of it ultimately was great success for Hollywood, for storytelling, for creators, for business.
As long as we all know that we still need financial anchors on television, that's the important part. We never want to lose that.
That's existential. It's not essential. It's existential.
That's right. There you go. Thank you, Jeffrey. I appreciate that backup.
As long as they have good skin care, which I learned about while we were waiting for you, I think that's an important perk that needs to go with the job.
I think it's important. I think there should be a budget for that. To put this into perspective, talking about utilizing AI in many different forms, it's a yes and, it's not an or. Who are some of your customers right now? What kind of brands use your product, and how are they using it?
Yeah, we have a range of different customers, from like SMB owners to like marketers to agencies. And recently we also got amazing traction from like very big brands like Alibaba, like Zongpers, like Hotspot using our tools. So really like serving them with their marketing needs, and also all their performance marketing team are using our tools.
And how do you expect that to grow? Like what other kind of brands are you targeting, and what's your pitch to them?
So basically, we started by building this like AI ad maker, which is a video creation tool. But now we actually evolve into an end-to-end video ad solution. Now we not only helping brand with just ad creation, we also help with the ad research, which is before the creation, and after creation, we help them to deploy to different platforms and doing the optimization. So really, it's a one-stop shop for all your performance marketing needs.
So, Inan, just tell us here. I'm going to give you the final word here. Where does this go next? I don't mean just for a Creative Eye, but overall. You've built something cool. You've raised some good money. Obviously, you got a long way to go to sort of get up to the heights that we've seen with other companies in this space. But when you look at the foundation that you have, you look at the adoption of AI and AI-adjacent technology, what do you see as the future?
We see the future is there are going to be like a very intelligent AI ad agents, which pretty much can automate everything along the performance marketing journey, right? You can think of like the best teammate who is specialized in paid ads can take care of everything from like the inspiration to the creation to the delivery and the final optimization, and they can do it continuously. So really, we're gonna free like marketers, like brands from like the manual, tedious work, and let them to focus more higher order tasks, right? Doing the designing, the messaging, or grow their business. I think that's the vision we are envisioning at 45.
We really appreciate your time today, both of you. Thank you so very much. Good luck with all of that. Please come back and let us know how all of it is progressing. Jeffrey Katzenberg, founding partner of Wonder Co. He's going to go out and get some skincare in just a second. And Ynon Na, co-founder and CEO of Creatify as well. In the markets, though, the S&P might be holding up, Romain, but we're taking a look at software stocks really rolling over.
Yeah, Cadence Design right now down 11%, Synopsys down 12%, Keysight's down 3%, and Ansys down about 6%. This on the back of that Financial Times story that says that the Trump administration has ordered U.S. chip software design companies to stop sales to China. Now, we don't really have a whole lot of information about this, of exactly what's happening, when it's happening, or why, but the reaction in the market very swift. And of course, this all comes ahead of some big earnings by one of the biggest chip makers, in the world, NVIDIA.
Yep. But also, what have we learned? Buy the dip has been the name of the game over the last few months. All right, we're going to take you to the bell 15 minutes away. Paul Christopher, head of global investment strategy at Wells Fargo Investment Institute. This is The Close on Bloomberg.
We've seen a little bit of a decoupling between NVIDIA and the rest of the market. And I think that's actually a really positive thing. We can't have just one or just a handful of names that continue to dominate year after year. So even though breadth is still struggling right now, what we've seen is that some other areas of the market have been able to kind of shine a little bit during this period of uncertainty.
Kara Murphy over at Kestra Investment Management. Breadth certainly struggling on this day. The equal-weighted S&P 500 lagging the cap-weighted index, but everything right now, Alex Steele, in the red.
Yeah, it really depends on what we're going to see from NVIDIA. Does it affect the overall index or really just the Mag 7 there, NVIDIA stock, just down 0.2% ahead of earnings?
Yeah, and we should point out, too, it's not just NVIDIA today. Obviously, we know they're going to suck all the attention out of the room, but you got HP, Synopsys, Salesforce, SentinelOne, as well as C3 AI and ELF.
Right, and well, ELF, exactly. Invest in your face. Even bringing up Synopsys, you can take a look at the FT report that potentially President Trump is saying that U.S. chip, not manufacturers.
Chip designers,
software, thank you,
yeah.
Software designers can't sell their product anymore to China, and those stocks taking a really big hit, which brings back the headline risk when it comes to D.C. Paul Christopher, head of global equity allocation when it comes to Wells Fargo, joins us now. Hey, Paul, we learn that this is a threat and then you buy. So when we get these headline risks, is it just a buy signal at the end of the day?
No, not really. You have to be more careful than that because, look, at the end of the day, you get these news items that come in. First, it's a tariff threat. Then the tariff threat goes away and it's a 90-day pause. At the end of it, you're still going to have significant tariffs. You really need to focus here on quality in the S&P 500. That means companies with good balance sheets, good cash flow, and really good earnings prospects. We like information technology in that regard.
Okay, so does that mean that they're exempt from tariffs or they're free from tariffs or they can manage it because of that free cash flow?
Well, I don't think anybody's really exempt from tariffs. You'll get some ripple effects or some indirect effects. But look, what we've seen from earnings so far this season, this first quarter season, is that guidance is saying, hey, look, we're getting demand from all sorts of people. Sovereign AI demand. We're seeing demand from companies that want to start doing more inference with AI, and we're going to see more and more companies turning to automation as a way to offset their more direct and negative tariff implications and effects, and that's going to help drive IT and communication services as well. We also like financials and energy, but my point is that there are companies we think in sectors that will benefit. Actually, that's what you want to look for here.
I am curious, though, about just economic conditions, Paul, particularly when it comes to consumer spending. I know it's held up pretty well, certainly defying a lot of expectations. And we got some earnings this morning out of several retailers that were relatively positive, certainly more positive than what folks expected. Do you anticipate, though, that as we get deeper into the year, we should at least prepare ourselves that the consumer side of the equation might not be as strong?
Yeah, you definitely want to do that. The way we think in June, this is the eye of the storm. We saw the first part of the storm. It was pretty big in April and into early May until we got that second pause, the one for China. And then now we're in a kind of that pause period, the eye of the storm. But come July, we're going to have the 90-day reciprocal tariffs for most countries go off. I think it's July 9th. Then August 12th, we have the China reciprocal deal That is expiring, so they need a deal by then. And somewhere between those two dates, we're likely to see Congress come up with a pretty big stimulus package that's going to increase the deficit, and that's going to worry the bond market, and that will then spill over into the stock market. So there's plenty of room for volatility here. Now is a time to take these to stock portfolio with the S&P still near 6,000. That's our year-end target. You want to take the opportunity to figure out what you want to trim, and you want to trim things that are going to be more vulnerable when we get to that back end of the storm.
But if I'm looking at my portfolio, and I'm thinking more from the perspective of an individual investor, and you're taking a look at your portfolio, some of the concerns going forward, some of what we've already seen going backwards, is there not a case to just simply be defensive? And I'm not saying your whole portfolio should just be like, bonds or anything, but I mean, what is the advantage of going after anything that maybe could be vulnerable to economic conditions, tariff conditions, geopolitical conditions?
Well, because what we foresee into the end of this year is that you're going to have the back half of that storm that I just mentioned, probably in the third quarter. But by the time we get to the fourth quarter, you're going to see some of that stimulus kick in. Stimulus that I mentioned a minute ago in the federal budget. You're also going to see deregulation start to really gain some momentum, and it needs some time to really have a noticeable effect on cost structures. And then you're going to have the end of the year, and people will be spending money, and the inflation will cool the economy, and you might have a Fed rate cut in there. So by the time we get to the end of the year, we see several cushions for the economy as it deals with the fallout from the tariff. So you don't want to just go defensive. You want offensive defensemen, in a sense. That is to say, companies that will hold up well, high-quality companies, sectors I mentioned, IT, comm services, energy, financials, those we think will hold up better during the back half of this storm. But then we want to go into 2026 looking for a shallow cycle and a recovery. Our target for year-end 26 is 6,500 on the S&P. So we don't want to just go defensive. We want to be in those sectors that will cushion us on the way down and then provide us the leadership back on the way up in 26.
I give you credit for having a target for 2026. That takes a lot when we just have so much uncertainty. What are you avoiding right now?
Really want to avoid some of the high cyclicals. Like industrials. I mean, look, think about what's going to really get hit by tariffs. It's going to be industrials. It's going to be consumer stocks. Those are the ones that are mainly in the crosshairs. Everything else is mainly going to have some diluted or a spillover or ripple effect. So industrials, don't want to get favorable on those right now. Consumer discretionary, don't want to get favorable on those right now. Stick with the sectors that we mentioned and use this opportunity here with S&P near 6,000 maybe to trim some of those sectors that we would be a little bit reluctant to take, an overweight in. Trim those and use the cash elsewhere.
Paul Christopher, head of global investment strategy at Wells Fargo Investment Institute, counting us down to the closing bells. Those bells 3 minutes away, with stocks just a few minutes ago hitting session lows. We should point out the S&P, the NASDAQ, Dow, they all opened higher on the day, but they never really had any meaningful gains on the day. But we're seeing a big drag now, and that's coming from tech. Microsoft, Tesla, Amazon, really dragging it down. But your biggest percentage decliner right now in the index, at least in the S&P, is Cadence Design, down about 10%. NVIDIA down fractionally.
Yeah, and at least with Cadence, we have an actual news peg for that. But overall, volume is really light. And I have to wonder, I know we've been saying it could all depend on NVIDIA, but will it, though?
I don't know.
You take a look at the options market, like you talked about earlier in the show. We're just seeing a 6% potential move versus 8%.
Absolutely. And I was listening to Gina Martin-Adams on another Bloomberg program, and she was talking about how NVIDIA's importance to the market has lessened. It's still important, still the second highest rating, but not necessarily what it was a year or two ago. As you get closer to the closing bells, a full breakdown of all of today's market action starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alex Steele, taking you through to that closing bell, a global simulcast. It starts right now. Scarlett Fu in the TV studio, Carol Massler, Tim Stenovic in the radio booth. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube, as we watch stocks hit session lows into the close ahead of a big earnings report by NVIDIA.
Yeah, I don't know whether I'm just reading into something. It feels a little ominous as we get ready for NVIDIA earnings. You've got NVIDIA now down just a hair. That's the big one, but it is interesting to see some selling here into the close.
It's not the only company reporting after the bell. In just a couple of minutes, we expect to hear from Salesforce. We'll hear from Synopsys, HP Inc., C3AI, Elf Beauty, and others too.
Yeah, this feels like the last hurrah of this earnings season. Once NVIDIA is through, and I know I'm getting ahead of myself here, what's the next catalyst for this market that feels very much, even as it melts higher, range-bound?
Here, how about more restrictions from the Trump administration on different sectors? So the latest, according to the FT, is that the chip software designers need to stop China sales, and that obviously is why Synopsys is getting hit pretty hard. But again, we still have that tumult when it comes to headline risk.
Synopsys down about 10% right now. It is bouncing off the lows, but a huge drawdown here on that name. Cadence Design down 11, Keysight down about 2, and Ansys down about 5%. We should point out that when you take Synopsys, Cadence, and then the U.S. business of Siemens, that accounts for about 80% of the market here that Trump is said to be targeting based on that Financial Times story. Let's walk you through the closing bell numbers as we await these earnings reports as we get the bells in New York. The Dow Jones Industrial Average down more than 200 points, or roughly about 0.6%. The S&P down about 30 points or so, or 0.5%. The NASDAQ Composite and NASDAQ 100 each going to end the day down roughly about 0.5 percentage point on the day, while the Russell 2000 lower by about 20-something points, or 1% on the day.
All right, quick headline crossing. Tesla said to target the robo-taxi launch in Austin on June 12th. So we know they sometimes put out targets. Sometimes they make it. Sometimes they don't. Back to the big market. S&P 500, most names lower, remain 421 to the downside.
All right, let's take a quick look at the IMF. It's pretty straightforward. Red all around, all 11 sectors finishing in the red right now. The biggest decliners are utilities, materials, and energy stocks. Those are basically unchanged. Real estate investment trusts, communication services, and tech.
All right, to some of the individual gainers as we wait for earnings.
Okay guys, 7 PM होने वाला है. US market is going to open. 6 PM का डेटा ऑलरेडी जा चुका है. देखते हैं अब US मार्केट की ओपनिंग से पहले और थोड़ा मोमेंटम आता है. क्रूड ऑयल में एसएल जाएगा, निकल जाना, होल्ड मत करना, बहुत छोटा सा एसएल है, सिर्फ 20 पॉइंट का. बाकी नेचुरल गैस में देखते हैं, काफ़ी देर से रुका हुआ है, मॉर्निंग से कुछ खास मोमेंटम ही नहीं किया है. रेंज बाउंड है, अगर नहीं आया 7 PM तक मोमेंटम तो फिर इन्वेंट्री का ही वेट करेंगे. मॉर्निंग से मोमेंटम ही नहीं हुआ है, रीटेस्ट पे ही रुका हुआ है काफ़ी देर से. लेट्स सी थोड़ा ऊपर और आ जाता है 310 के आसपास तो, क्योंकि अगर यहाँ पर नहीं रुका तो फिर इसको और गिरना पड़ सकता है. टिल 268 बीच में और कोई सपोर्ट भी नहीं है. ये कौन सा लेवल का है? 530. बाकी यूएस जीडीपी का डेटा आया था, दैट इज पॉजिटिव फॉर डॉलर, नेगेटिव फॉर गोल्ड एंड सिल्वर 6 PM पर. उसके अलावा 2 डेटा और थे वहाँ पर जीडीपी के अलावा, यूएस की प्रीलिम जीडीपी के अलावा. फर्स्ट वन, ठीक है, अनएम्प्लॉयमेंट क्लेम्स का डेटा था. जो कि नेगेटिव था डॉलर के लिए, पॉजिटिव फॉर गोल्ड एंड सिल्वर. एंड उसके अलावा जीडीपी प्राइस इंडेक्स का डेटा भी था, प्रीलिम जीडीपी प्राइस इंडेक्स क्वार्टर ऑन क्वार्टर बेसिस, दैट इज न्यूट्रल फॉर गोल्ड एंड सिल्वर. और न्यूट्रल आया था डेटा गोल्ड और सिल्वर के लिए. लेट्स सी, थोड़ा नेचुरल गैस मूव करे, आज मोमेंटम ही नहीं हुआ है नेचुरल गैस में. बाकी देखो, थोड़ी देर पहले यूएस में वहाँ पर कल आप लोगों को याद ही होगा, यूएस की जो ट्रेड कोर्ट है उन्होंने एक्चुअली प्रेसिडेंट ट्रम्प के टैरिफ को ब्लॉक कर दिया था। बट थोड़ी देर पहले न्यूज आई थी कि यूएस के जो उन्होंने यूएस ऑफिशियल हैज इट उन्होंने प्रिडिक्ट किया था कि जो जज की रूलिंग है टैरिफ के रिगार्डिंग वो उसको चैलेंज करने वाले हैं। तो अगर चैलेंज करते हैं और वो हायर कोर्ट में पहुंचता है तो देयर इज अ वेरी हाई चांसेस कि वापस से सारे के सारे टैरिफ एज इट इज वापस लग जाएंगे। ना मुझे लगता नहीं वैसे अब आधे घंटे में क्या ही मोमेंटम आएगा। 7 पीएम की कैंडल देखते हैं। मुझे लग रहा है नेचुरल गैस मूव करना होगा तो कर जाएगा 7 पीएम तक। नहीं किया तो फिर इसमें कोई ट्रेड लेना भी मत, बिकॉज फिर मोमेंटम आएगा भी नहीं। इन्वेंट्री है 7 बजे, उससे पहले मोमेंटम कर दे पूरा तो बेटर रहेगा। एक डेटा 7:30 पर भी है, वो भी गोल्ड और सिल्वर को इम्पैक्ट करेगा, ध्यान रखना उसका भी इम्पैक्ट पड़ेगा मार्केट में। 6 लास्ट कैंडल देखोगे क्रूड ऑयल की, वो जो ये रेड वाली बनी है वो 6 पीएम का जो डेटा आया था उसके बाद बनी थी, स्पेशली जो जीडीपी का डेटा था। इज पॉजिटिव फॉर डॉलर, नेगेटिव फॉर गोल्ड एंड सिल्वर। क्रूड के लिए भी नेगेटिव ही चला गया प्राइस। अनएम्प्लॉयमेंट क्लेम्स का डेटा पॉजिटिव था, नेगेटिव फॉर डॉलर, एंड थर्ड डेटा इज न्यूट्रल। तो मिक्स डेटा थे। लेट्स सी क्रूड होल्ड करता है लेवल या फिर नहीं। कि क्रूड ऑयल की भी इन्वेंट्री है, ध्यान रखना आज। ऑयल की कल इन्वेंट्री नहीं आई थी, तो क्रूड ऑयल और नेचुरल गैस दोनों इन्वेंट्री आज ही हैं। 7:30 पे एक डेटा है यहाँ पर आपका पेंडिंग होम सेल्स का, वो भी इम्पैक्ट करता है एक्चुअली। क्रूड निकल रहा है सर, निकलने दो, फिर क्या करें? लेवल पे ट्रेड बनेगा तभी तो लेंगे। सेलिंग का तो टारगेट हो गया था, सेलिंग का 100 पॉइंट का टारगेट था, वो मिल गया था। क्रूड ऑयल सेलिंग का ट्रेड वो मॉर्निंग वाला था, अच्छा ट्रेड मिला उसमें। थोड़ा और ऊपर जाता तो वापस सेल करते, बट वो अटक गया सपोर्ट के अराउंड। लेट्स से नीचे निकल के आता है, वापस ऊपर ही जाता है। इसमें भी कितने 8:30 पे इन्वेंट्री है, तो 7:30 तक मान सकते हैं मोमेंटम आएगा मोस्ट प्रोबेबली। आफ्टर 7:30 मोमेंटम स्लो ही हो जाता है। नीचे आ जाए तो और अच्छा है, नीचे भी एक सपोर्ट है। हाँ वो भी एग्जैक्टली है, सेम ही लेवल है दोनों। नीचे आता है तो ये नेक्स्ट सपोर्ट एरिया यहाँ पर है आपके पास 5185, अगर ये होल्ड नहीं कर पाया। 5233 टू इस एरिया के आसपास भी है। ठीक है, 15 मिनट इस कैंडल के बाद इन यूएस मार्केट ओपनिंग, कोई ओपन रनिंग ट्रेड चल रहा है तो एसएल सिस्टम पर डाल दें। रिस्क मत लेना 7 PM की कैंडल के बाद, स्पेशली नेचुरल गैस में, क्योंकि इन्वेंट्री आने वाली है 8 बजे। नॉर्मली फिर यूएस मार्केट के बाद मोमेंटम आता नहीं है इन्वेंट्री अगर होती है तो। थोड़ा और नीचे है बस। इस एरिया में एक बाइंग का रेट अच्छा बन जाएगा, लाइक हमें है। M6 का है ना सेम। फाइव 5220 के आसपास थोड़ा और नीचे आना चाहिए। अब देखते हैं, मोस्ट प्रॉब्ली यूएस मार्केट का ही ओपनिंग का वेट है। दैट लेवल इज आल्सो गुड, ग्रेट लेवल, दिस वन। रुक रहा है सपोर्ट पे। लग रहा है क्रूड ऑयल पूरा बेयरिश ही होके मानेगा। पंद्रह मिनट रह गए हैं यूएस मार्केट की ओपनिंग पे। 15 मिनट लेफ्ट। 5290 से 5230 के बीच में होल्ड कर जाएगा क्रूड ऑयल बिफोर इन्वेंट्री। 50 पॉइंट की रेंज है। गैस भी साइडवे चला गया रीटेस्ट पे। इन्वेंट्री का मोस्टली वेट। नंबर ट्राई है सिर्फ यूएस मार्केट की ओपनिंग। किसी कोई ओपन पोजीशन चल रही है असल कॉस्ट पे रख लो इन्वेंट्री, सॉरी यूएस मार्केट ओपनिंग के बाद देखते हैं। इन्वेंट्री है 8 बजे क्रूड ऑयल की, 8:30 पे नेचुरल गैस की, 7:30 पर एक डेटा है वो गोल्ड सिल्वर को इम्पैक्ट करेगा। इस यूएस मार्केट ओपन होने वाला है, 10 सेकंड रह गए। जिन लोगों ने बाई किया हुआ है नेचुरल गैस में, एसएल कॉस्ट पर रख लो, पुट द एसएल ऑन कॉस्ट इन नेचुरल गैस। 8 बजे इन्वेंट्री है, 7 PM यूएस मार्केट ओपन। एक वॉलेटाइल कैंडल एक्सपेक्टेड है, चाहो तो बुक भी कर सकते हो। थोड़ा सा और टारगेट है ऊपर तक अगर आ जाता है 310 के आसपास, नहीं तो मुझे लगता नहीं अगर इस कैंडल पे ज़्यादा मूव नहीं आया तो फिर मोमेंटम होगा भी नहीं, चांसेस आर वेरी लेस। नेचुरल गैस में एसएल कॉस्ट पे रख लो, पुट द एसएल इन कॉस्ट इन नेचुरल गैस। इन्वेंट्री आने वाली है 7 PM यूएस मार्केट ओपन, 8 PM नेचुरल गैस इन्वेंट्री, 8:30 यूएस क्रूड ऑयल इन्वेंट्री। देखते हैं, ये एसएल जा चुका है इस ट्रेड में, ठीक है, ध्यान रखना। कोई नया ट्रेड बनता है तो फिर से देखते हैं। बाकी जितना मैं एक्सपेक्ट कर रहा हूँ 5290 से 5230 की रेंज, मुझे लगता है अभी ये जब तक इन्वेंट्री नहीं आती इसी रेंज पे रहना चाहिए।
News when you want it with Bloomberg News Now. I'm Karen Moscow. We'll get to the court ruling on the president's tariffs in just a moment, but first, breaking economic news crossing the Bloomberg. The U.S. economy shrank at the start of the year, restrained by weaker consumer spending and even more imports than initially reported. Gross domestic product decreased at a 0.2% annualized pace in the first quarter. That compared with an initial report of a 0.3% decline. The news is sending bond yields lower this morning. The economy's primary growth engine, consumer spending, advanced 1.2%. That compared with an initial estimate of 1.8%. Meanwhile, the weekly jobless claims number rose 14,000 to 240,000, and that was above all estimates. Now to the president's tariff strategy, which has been thrown into turmoil after a U.S. court issued a rare rebuke blocking many of the import taxes he has threatened and imposed on other countries. We get more with Bloomberg's Bill Ferries.
This is not all of the tariffs, but it's a lot of the ones we're most familiar with from the last few months in office. They include the tariffs against China, Mexico, and Canada over the trade in fentanyl. They include that kind of 10% across the board flat rate tariff against just about every country in the world. That's the tariff, those reciprocal tariffs that are getting in the middle of negotiations right now. There are still some tariffs, mostly dating back to the first Trump administration, that remain in place.
And that's Bloomberg's Bill Ferries. The Trump administration is already promising to appeal, and Ferries says the issue could come before the Supreme Court in a matter of weeks. Meanwhile, National Economic Council Director Kevin Hassett says there are different approaches President Trump could use to impose global tariffs. He tells Fox Business the options would take a couple of months to be put in place. Markets are getting a lift on the tariff ruling. They're also getting a boost from NVIDIA earnings. NVIDIA Chief Executive Jensen Huang soothing investor fears about a China slowdown by delivering a solid sales forecast, saying that the AI computing market is still poised for exponential growth. Still, in an interview with Bloomberg, Huang is warning that Chinese AI rivals are now more formidable. He says companies like Huawei and others are filling the void left by the American departure from the Chinese market.
Without American technology, the availability of Chinese technology will fail the market. And so, whatever we offer has to at least at least be competitive and it has to add value to the market.
NVIDIA's Jensen Huang added that U.S. restrictions on exports to China have effectively locked NVIDIA out of the country. He joined Bloomberg's Ed Ludlow for a special
Ramesh Energy, hello, how are you? इसी बता दीजिए बिटकॉइन देख लेते हैं एक बार बिटकॉइन को बिटकॉइन को देखोगे इंट्राडे में तो अभी कुछ खास किया नहीं है सेल ऑफ कल आया था उसके बाद से साइडवेज ही है रेंज में कोई ट्रेड लिया है तो बता दो बिटकॉइन में 15 मिनट का चार्ट देख रहा हूँ फिलहाल के लिए मैं गैस अपना तो प्रॉफिट बुक कर लो या फिर एसएल कॉस्ट पर रख लो इन्वेंट्री आने वाली मुझे लगता नहीं अब मूव आएगा अगर इस कैंडल पे भी नहीं आता है मोमेंटम वेरी रेयर चांसेस फिर 8 पे ये नेचुरल गैस की इन्वेंट्री कोई नया ट्रेड लेना मतलब नेचुरल गैस में क्रूड ऑयल की इन्वेंट्री भी 830 पे देखो नीचे एक सपोर्ट था वहाँ प्राइस ऑलरेडी एक बार सपोर्ट ले गया थोड़ी देर पहले अभी 1,07,800 के आसपास एरिया था वहाँ से प्राइस ऑलरेडी सपोर्ट ले गया दूसरी बार आ रहा है यहाँ पर मेरे अकॉर्डिंग अगर यहाँ पर नहीं रुकता है थोड़ा और नीचे गिरता है तो बेटर ही रहेगा सपोर्ट एरिया 1,07,800 अब एक बार ऑलरेडी ले चुका है सपोर्ट 15 मिनट में इसके नीचे अगर आता है कोई नया सपोर्ट क्रिएट करे नीचे फिर सीधा 1,05,700 वो एक रिटेस्ट लेवल है मार्केट में 15 मिनट टाइम फ्रेम के अकॉर्डिंग एक भी करते रहो गाइस कम ऑन है बट वो तो अब देखोगे 1,06,900 वाला जो सपोर्ट है ना वो 1 2 3 4 5 6 टाइम टेस्ट हो चुका है तो अब चांसेस बहुत रेयर हैं कि वो होल्ड कर पाएगा. 30 pending home sales data. Pending home sales data. ऑयल भी अच्छा खासा गिर गया है. थोड़ा पुल बैक एक्सपेक्ट करते हैं यहाँ से. देखते हैं एक ट्रेड अगर और बनता है बाइंग के लिए. बाकी रेंज तो लगी रही है ओवरऑल.
The U.S. plans to start aggressively revoking visas for Chinese students. That's according to Secretary of State Marco Rubio. This includes those with connections to the Chinese Communist Party or studying critical fields. It's the latest escalation in the Trump administration's push for greater scrutiny of foreigners attending American universities. The U.S. will also enhance scrutiny of future visa applications from the People's Republic of China and Hong Kong, Rubio said. China had the second most students in the U.S. of any country in 2024, behind India. Earlier this week, Rubio ordered U.S. embassies worldwide to stop scheduling interviews for student visas. This all comes after Trump sought to block Harvard entirely from enrolling foreign students. As the U.S.-China rivalry spreads beyond just trade, where does this leave both countries?
It's a small win for China, and I think it's a bigger loss for the U.S. On the China side, China's government do want Chinese students to come back to China after they study abroad. However, we do lose the opportunity for more cutting-edge technologies that are being taught in U.S. universities.
The latest move by the U.S. also risks upsetting the Geneva Truce, where both countries announced a massive de-escalation in tariffs. Trump also said recently he'd be willing to travel to China to speak with Xi about foreign policy and economic issues, but the outlook for that may now be less certain.
News when you want it with Bloomberg News Now. I'm Nathan Hager. Trading is officially underway on what has already been a very busy Thursday morning on Wall Street. That is the sound of the opening bell from the floor of the New York Stock Exchange. At the open, the S&P 500 is higher by 0.9%, a gain of more than 50 points. The Dow Jones Industrial Average opens higher by nearly 0.2%, or about 70 points. And the Nasdaq Composite, tech-heavy, leading the gains this morning, up 1.5%, up nearly 300 points on a morning of new tariff uncertainty. The U.S. Trade Court declared most of President Donald Trump's so-called Liberation Day tariffs illegal, saying he went too far, declaring a national economic emergency to justify them. We get more from Bloomberg News senior editor Bill Ferries.
They include the tariffs against China, Mexico, and Canada over the trade in fentanyl. They include that kind of 10% across the board flat rate tariff against just about every country in the world.
But Bloomberg's Bill Ferries says they do not include the president's first-term tariffs on China or sectoral duties on things like steel or aluminum. The Trump administration is promising to appeal. White House trade advisor Peter Navarro says there's no question there's an economic emergency.
We've got courts in this country who are basically engaged in attacks on the American people. The president ran on stopping the fentanyl poisoning, stopping international trade unfair practices from stealing our factories and jobs. And courts keep getting in the way.
You can hear more from White House trade advisor Peter Navarro. He spoke on the Bloomberg Surveillance podcast. Even with this legal setback, PIMCO public policy chief Libby Cantrill says President Trump does have other tariff tools.
There is not an all clear from a tariff policy perspective. We will see additional tariffs. Again, I would not be surprised if we didn't see them over the next few days or so.
That's Libby Cantrill at PIMCO. The latest read on the economy may show more tariff impact than expected. Bloomberg's Michael McKee has the latest first quarter GDP numbers.
It fell by 0.2% in the first quarter. That's a little bit better than the 0.3 that had been forecast. However, consumer spending much weaker. It was only up 1.2%, was 1.8% in the initial release.
A sign consumers may be pulling back at the start of the year. Bloomberg's Michael McKee also says weekly jobless claims rose more than expected in the latest week to 240,000. That was up from 226 the week before. The tech sector, as we mentioned, still looking up after earnings from NVIDIA. Those shares are higher by 5% at the open. The AI chip giant says it'll take in $45 billion this quarter, even with restrictions in China that would have brought in about $8 billion. Bloomberg Intelligence senior tech analyst Matthew Bloxham says NVIDIA CEO Jensen Huang is also sounding upbeat about business spending in AI.
There's been a lot of doubts recently, given the trade situation, about what that might do to economic growth. And I think, whether the economy is growing or not, it's clear that companies are prioritizing investment in AI, and probably, if anything, the momentum behind that is building rather than slowing. So I think that's an encouraging sign too.
Matthew Bloxham of Bloomberg Intelligence. There is a new source of tension between the U.S. and China. Secretary of State Marco Rubio says the U.S. will start aggressively revoking Chinese student visas with a focus on links to the Chinese Communist Party. Jensen Huang says he thinks the administration understands the importance of immigration.
We don't want everybody to be able to come here, and there should be rules. But nonetheless, for the ones that really can make a contribution, want to make a difference, we want to make it possible for them to come here and bring their great ideas, bring their great intellect, and help us build a great America.
Jensen Huang of NVIDIA joined us on a special edition of Bloomberg Technology focused on the company earnings. And we got more earnings this morning, including from Kohl's. The department store chain posted better than expected sales even after its last CEO's scandalous ouster. At the open, Kohl's shares are soaring by 16%. Meanwhile, Best Buy is down 6% at the open after cutting its sales forecast thanks to tariffs on China. United Airlines and JetBlue have announced a new partnership that'll let travelers use loyalty points and book flights across both airlines. It'll also bring United back to New York's JFK Airport. At the open, United shares are higher by 2.5%. And the New York Times says it'll let Amazon train its AI models with New York Times stories. The paper's shares at the open are higher by nearly 2%. And that's news when you want it. With Bloomberg News Now, I'm Nathan Hager. This is Bloomberg.
क्रूड ऑयल एनी ट्रेड नहीं है अभी क्रूड ऑयल में देखते हैं एक ट्रेड बनता है। इन्वेंट्री आने वाली है, थोड़ा वेट ही कर लो अब इन्वेंट्री का, उससे पहले फ्रेश ट्रेड लेना सही नहीं है, क्योंकि ले भी लिया अगर आ भी गया सपोर्ट पे तो भी मोमेंटम होगा नहीं इतना। इन्वेंट्री भी तो है, क्रूड ऑयल की इन्वेंट्री है अभी 7:30 का पहले डेटा है, उसके बाद 5200 का एक लेवल है नेचुरल गैस में। थाउजेंड टू हंड्रेड के इस लेवल से देखते हैं। आधा घंटा है, नेचुरल गैस की इन्वेंट्री एट 8 पीएम। फोरकास्ट देखोगे तो लास्ट टाइम जितना आया था उससे कम एक्सपेक्ट किया है, तो अगर कम ही आता है तो इट इज़ पॉजिटिव फॉर नेचुरल गैस प्राइस। अगेंस्ट आया तो और नीचे चला जाएगा। क्रूड ऑयल की इन्वेंट्री का भी सेम ही है, लास्ट टाइम से जितना एक्सपेक्ट था उससे कम एक्सपेक्ट किया हुआ है। कल के इन्वेंट्री का फोरकास्ट भी पॉजिटिव ही है प्राइस के लिए ओवरऑल। फॉरेक्स लेवल क्रूड ऑयल देख लेता हूँ एक बार। फॉरेक्स भी रनिंग 15 मिनट कैन क्लोजिंग 4 आवर कैन यूएस क्रूड बिग कैंडल। कांट कमेंट सर, इन्वेंट्री आने वाली है उससे पहले मैं कुछ कह नहीं सकता। इन्वेंट्री में कुछ भी पॉसिबल है। बाकी 4 आवर में क्या है यहाँ पर? 4 आवर लुक्स 4 आवर यूएस क्रूड ऑयल कैंडल एंगल लास्ट 10 कैंडल, लास्ट 10 कैंडल कहाँ करिए लास्ट 10 कैंडल एंगल? नो कैंडल इज एंगल्फ। एंगल्फिंग ये नहीं होती गाइस। एंगल्फिंग में जो कैंडल बनी है, मान लो ऐसे 2 3 4 जितनी कैंडल बनी है, एक कोई बड़ी कैंडल, उसकी ओपनिंग और क्लोजिंग, उनको एंगल्फ कर ले। विक किसकी बड़ी बन रही है छोटी बन रही है उससे फर्क नहीं पड़ता, वो होती है एंगल्फिंग। दिस इज नॉट अ एंगल्फिंग कैंडल। सेवन थर्टी, 1 घंटा और क्रूड ऑयल की इन्वेंट्री में, आधा घंटा नेचुरल गैस की इन्वेंट्री में। एक बार यहाँ पर फॉरेक्स का भी चार्ट देख ही लेते हैं। सेम ही लेवल है दोनों का। लुक एट दैट कैंडल। ठीक है, यहाँ पर एक सपोर्ट है क्रूड ऑयल में फॉरेक्स में देखोगे एफएक्स ओपन ब्रोकर का चार्ट $60.66 पे, बट वही है कि यार इन्वेंट्री, पता नहीं इन्वेंट्री में कैसा मूव आ जाए, दैट कंसर्निंग में। बाकी यहाँ से भी ऑलरेडी 2 बार बाइंग मार्केट दे चुका है, ये थर्ड टाइम आएगा। हायर हाई बना है तो फॉरेक्स में अब ये सपोर्ट पे पहुंच चुका है, तीसरी बार आ रहा है लेवल पे, थर्ड टाइम। एमसीएक्स में वहाँ पर गैप अप हुआ है शायद, तो उस वजह से वो लेवल दिखेगा नहीं आपको। फॉरेक्स में सपोर्ट है बताया ना, डॉलर यूएस डॉलर में। एमसीएक्स में एक ही बार सपोर्ट लिया है यहाँ पर, आई थिंक 5210। डिफरेंस होता है, थोड़ा बहुत डिफरेंस देखने के लिए जरूर मिल जाएगा। देखो बाकी इन्वेंट्री का फोरकास्ट तो पॉजिटिव ही है। $25 इनफ है। सपोर्ट फॉरेक्स में आ गया है एग्जैक्टली। बाकी अब ध्यान रखना अभी, क्योंकि इन्वेंट्री आने वाली है तो उससे पहले मुझे लगता है तो नहीं मूव आएगा। लोगे तो क्वांटिटी कम ही रखना, और इसमें मैं क्या कह सकता हूँ, नॉर्मली मोमेंटम आता नहीं है इन्वेंट्री से पहले, थोड़ा सा ना आधा एक घंटा पहले रुक जाता है मार्केट। नेचुरल गैस को ही देख लो, थोड़ा बहुत मोमेंटम आया है, फिर 7 PM की कैंडल कुछ मोमेंटम नहीं हुआ, 8 बजे तक होगा भी नहीं, इन्वेंट्री के बाद ही कुछ मूव करेगा। सेम क्रूड ऑयल का भी सिनेरियो है। बाकी इन्वेंट्री अगर कुछ अलग आ गई तो फिर प्रॉब्लम क्रिएट हो जाएगी। तो लोगे तो थोड़ा सा क्वांटिटी कम रखना, या फिर एसएल कॉस्ट के आसपास रख लेना। ये देखो फोरकास्ट पॉजिटिव, इसका मतलब ये नहीं कि अगेंस्ट नहीं आ सकता, ऐसा भी हो सकता है अगेंस्ट आ जाए प्राइस के। अगेंस्ट आया तो फिर और गिर जाएगा प्राइस, अननेसेसरी रिस्क हो जाएगा। ठीक है, एक डेटा था पेंडिंग होम सेल्स का, वो भी आ गया है, नेगेटिव है डॉलर के लिए, पॉजिटिव गोल्ड और सिल्वर के लिए। यूएस पेंडिंग होम सेल्स का डेटा। अब इन्वेंट्री है, उसके अलावा और कोई डेटा नहीं है आज के दिन। 3 डेटा थे, 3 के 3 आ चुके हैं आज। ठीक है, नाउ इट इज इन्वेंट्री टाइम। 8 बजे नेचुरल गैस फोरकास्ट बेरिस, सॉरी फोरकास्ट बुलिस, एंड फिर 8:30 क्रूड ऑयल की इन्वेंट्री फोरकास्ट बुलिस। फिर आज कोई डेटा नहीं है, कल लास्ट ट्रेडिंग सेशन रहेगा। कल आपका कोर पीसी प्राइस इंडेक्स का डेटा है, और कंज्यूमर सेंटीमेंट, ये भी गोल्ड और सिल्वर को इम्पैक्ट करेंगे। तो इन्वेंट्री है बस, और कुछ खास डेटा नहीं है। क्रूड ऑयल का एक ट्रेड लगाया है, क्वांटिटी कम रखना, इन्वेंट्री आने वाली है, उससे पहले मोमेंटम नॉर्मली होता नहीं है, नेसेसरी अगर साइडवेज गया तब भी कुछ नहीं मिलेगा, और अगर एसएल गया तो और रिस्क हो जाएगा। 1 घंटा है बस, क्वांटिटी कम ही रखियो। 2% गिरने वाला है ऑलमोस्ट नेचुरल गैस, गैप अप के बाद एग्जैक्ट रेजिस्टेंस से गिरता ही चला जा रहा है। बाय द वे यहाँ पर प्राइस एमसीएक्स में दूसरी बार है, फॉरेक्स में तीसरी बार आ रहा है। कम रखना, या फिर चाहो तो इन्वेंट्री का वेट भी कर सकते हो। इन्वेंट्री से पहले नॉर्मली ट्रेड रिस्की ही होते हैं, तो मैं इसलिए मना कर रहा हूँ। इन्वेंट्री के बाद ट्राई करोगे तो ज़्यादा सेफ रहेगा, चाहे वो क्रूड ऑयल हो या फिर नेचुरल गैस हो। फ्रेश ट्रेड के लिए नेचुरल गैस में ऑलरेडी बाइंग में हो तो हाफ प्रॉफिट बुक करके पूरा प्रॉफिट बुक करके भी निकल सकते हो। अगर रुकना चाह रहे हो तो एसएल कॉस्ट पे रखना, डोंट टेक हैवी क्वांटिटी इन क्रूड ऑयल, ठीक है। जो नहीं लेना चाह रहे रिस्क, यूएस इन्वेंट्री, क्रूड ऑयल इन्वेंट्री का वेट कर सकते हैं, उसके बाद ही ट्रेड करना मेरे अकॉर्डिंग। तो जो थोड़ा बहुत रिस्क ले सकते हैं, दिस इज़ अ ट्रेड इफ़ यू वांट टू टेक सम रिस्क। बाकी रिस्क जरूर रहेगा ट्रेड में जब तक अब इन्वेंट्री नहीं आ जाती। भी कर सकते हो, इन्वेंट्री आएगी उसके बाद ट्राई कर लेना। इन्वेंट्री के बाद भी ट्राई कर सकते हो, ठीक है, वही बेटर ही रहेगा अगर रिस्क नहीं लेना चाह रहे हो। ये उन्हीं के लिए है जो थोड़ा रिस्क ले सकते हैं। नहीं ले सकते हो रिस्क तो फिर वेट फॉर द क्रूड ऑयल इन्वेंट्री। इन्वेंट्री का वेट, इसमें कुछ कर भी नहीं सकते अभी। जी लगा रखा है एसएल और टारगेट। क्वांटिटी का ध्यान रखना, इन्वेंट्री से पहले अगर ले रहे हो तो ज़्यादा रिस्क मत लेना इस ट्रेड में। ऑलरेडी लास्ट वाले में एसएल जा चुका है, ये भी सेम ही एसएल है। 20 पॉइंट का ये था, इसमें 25 पॉइंट है फ्यूचर में एसएल। टारगेट बड़ा रख सकते हो क्योंकि फोरकास्ट पॉजिटिव है, अगर पॉजिटिव ही आ गया तो घूम जाएगा ऊपर, बट टाइम है अभी आधा घंटा अप्रॉक्सीमेटली, चांसेस तो ऐसे कम ही रहते हैं मूव आने के। एंट्री कितने बजे है? क्रूड ऑयल की 8:30, नेचुरल गैस की 8 PM। इसके बाद एक कैंडल और है, फिर नेचुरल गैस की इन्वेंट्री आ जाएगी, क्रूड ऑयल की आधा घंटा। मधुसूदन जी, क्या हो रहा है क्रूड ऑयल में? क्या हो गया क्रूड ऑयल में? कल पंप आज डंप। रेंज चेंज कर रहे थे क्रूड ऑयल में मोस्टली। कल वाली रेंज वो काफ़ी दिनों से बनी हुई थी, फ्लैग बना, रेंज ब्रेक करा, रेंज हटा दी, वापस से थोड़ा ब्रॉडर रेंज में आ गए वापस। ये 15 मिनट नेचुरल गैस इन्वेंट्री में। देखते हैं इन्वेंट्री फोरकास्ट तो पॉजिटिव ही है, मोमेंटम कैसा आता है, फोरकास्ट के अकॉर्डिंग आता है भी है या फिर नहीं। लास्ट कैंडल है नेचुरल गैस की इन्वेंट्री से पहले इन्वेंट्री आ जाएगी, इसके बाद जो लोग अभी भी हैं ओपनिंग पोजीशन में, बाइंग पोजीशन में, एसएल सिस्टम पर रख लेना, ठीक है। इन्वेंट्री से पहले फोरकास्ट जैसा मैंने बताया पॉजिटिव जरूर है, बट जरूरी नहीं है कि हमेशा फोरकास्ट के अकॉर्डिंग ही डेटा आए, अगेंस्ट भी आ सकता है। 10 मिनट लेफ्ट, 10 मिनट और हैं सिर्फ क्रूड ऑयल इन्वेंट्री में। अपना एसएल कॉस्ट पर रखने लगा इस नेचुरल गैस में, ठीक है, इन्वेंट्री आने वाली है। लॉजिकली तो ऊपर जाना चाहिए नेचुरल गैस को भी। अब सब इन्वेंट्री है पर ही ये डिपेंड है, इन्वेंट्री ऊपर लेके जाने देती है या फिर नहीं। 5 मिनट रह गए हैं इन्वेंट्री में नेचुरल गैस। Less than 4 minute left। अगेन किसी की ओपन पोजीशन चल रही है। में भी देखो इन्वेंट्री आने वाली है आधे घंटे में, अगर ये नहीं मूव करता है तो कॉस्ट टू कॉस्ट निकल भी सकते हैं, ठीक है। अगर ये नहीं मूव करता है तो कॉस्ट टू कॉस्ट निकलना चाहो निकल जाओ, इन्वेंट्री के बाद ही ट्रेड करना, कोई नया ट्रेड मत लेना यहाँ पे। क्रूड ऑयल इन्वेंट्री भी है 830 पे, डोंट टेक द रिस्क अदरवाइज। Less than 2 minutes left. नेचुरल गैस किसी की अगर ओपन पोजीशन है, कोई बाइंग में है, एसएल कॉस्ट पे रख लो, प्रॉफिट बुक करके निकलना है निकल जाओ, चॉइस आपकी है। इन्वेंट्री देखते हैं एग्जैक्टली क्या आती है, उस पर डिपेंड करेगा, नया ट्रेड मत लेना बीच में। क्रूड ऑयल में भी इन्वेंट्री आने वाली है आधे घंटे में, 8:30 पर 8 PM हो चुका है। अगर ये नहीं मूव करता है इस कैंडल पे या नेक्स्ट कैंडल पे तो मेरे अकॉर्डिंग तो निकल जाना चाहिए, फिर इन्वेंट्री पे देखते हैं। कॉस्ट टू कॉस्ट भी निकल सकते हो आप यहाँ पर, फिर से एंट्री मत करना, अब तो बिल्कुल मत करना, ठीक है। अगर ये नहीं आया इस कैंडल पे मोमेंटम, 2-3 पॉइंट का लॉस चल रहा है उसमें निकल जाओ, कॉस्ट टू कॉस्ट निकल जाओ, फिर इन्वेंट्री का वेट करते हैं, फिर देखते हैं, ठीक है। नया ट्रेड नहीं रहेगा इसमें, फिर से मत एंट्री कर देना आप बिफोर इन्वेंट्री। फोरकास्ट वैसे पॉजिटिव ही है बट इन्वेंट्री का वेट ही करेंगे फिर, इन्वेंट्री से पहले नई नई एंट्री नहीं। 1 मिनट से भी कम बचा हुआ है, ठीक है। कॉस्ट टू कॉस्ट निकलना चाहो निकल जाओ क्रूड ऑयल में, नई एंट्री मेरे साइड से मत लेना, ठीक है। कॉस्ट टू कॉस्ट निकलना है निकल जाओ, वापस कॉस्ट पे ही आ गया वो। ऊपर चला जाए तो वेल एंड गुड, नहीं तो अगर अभी रुकना चाह रहे हो 25 पॉइंट का एसएल है फ्यूचर में, उससे बड़ा एसएल लेना मत। अब कोई नया ट्रेड नहीं है यहाँ पे इन्वेंट्री से पहले, वेट फॉर द इन्वेंट्री नाउ। जाने को जा सकता है बट नॉर्मल इन्वेंट्री से पहले मोमेंटम आता नहीं है प्राइस में। अब इन्वेंट्री का ही वेट करते हैं पहले, फिर देखेंगे। 30 सेकेंड्स, 30 सेकेंड्स लेफ्ट। 20 seconds left. Natural gas inventory, 7 seconds left. इन्वेंट्री आई है नेगेटिव फॉर प्राइस के लिए, फोरकास्ट था 98 बुलियन, उससे ज़्यादा आ गया डेटा, मतलब जो फोरकास्ट था उसके अगेंस्ट आ गया डेटा। सो इन्वेंट्री, नेचुरल गैस इन्वेंट्री इज नेगेटिव फॉर नेचुरल गैस प्राइस, मतलब प्राइस के लिए तो बेरिस ही है। इन्वेंट्री फोरकास्ट का जो डेटा आया है नेचुरल गैस में, नेचुरल गैस इन्वेंट्री इज नेगेटिव फॉर नेचुरल गैस प्राइस। अब आधे घंटे बाद क्रूड ऑयल की इन्वेंट्री है, देखते हैं क्या आती है। देखो मैं तो कह रहा हूँ कॉस्ट को निकल जाओ क्रूड में, बाकी आपकी चॉइस। रुकना चाह रहे हो तो ऐसा लगा रखा था उतना ही रखना, उससे ज़्यादा बड़ा रखना मत, कोई फ्रेश ट्रेड बनेगा इन्वेंट्री के बाद तो देखेंगे। नेगेटिव ही है, लेट्स सी कितना मूव करता है नेचुरल गैस, करता भी है या नहीं। इन्वेंट्री तो नेगेटिव ही आई है बट कुछ मोमेंटम हो ही नहीं रहा है नेचुरल गैस में, ना ऊपर जा रहा है ना नीचे आ रहा है वापस। कोई नया ट्रेड नहीं है मेरे साइड से क्रूड ऑयल में, जो बाइंग में है कॉस्ट टू कॉस्ट निकल जाओ, मैं यही सजेस्ट करूंगा। जो नहीं निकलना चाह रहा भाई वो ऐसा लगा के रखे, नया ट्रेड बनेगा तो मैं लगा दूंगा, अभी नहीं है। इसमें क्या हायर हाई बना ही नहीं है ना। क्रूड ऑयल की इन्वेंट्री है, देखते हैं क्रूड ऑयल की इन्वेंट्री में कुछ बनता है तो। क्रूड ऑयल इन्वेंट्री शेड्यूल एट 8:30। Peak says upgraded model regions better, Illinois less.
News when you want it with Bloomberg News Now. I'm Nathan Hager. It's a big legal setback for the centerpiece of President Trump's trade policies. But to hear the White House tell it, nothing has changed. A U.S. trade court declared most of the president's tariffs under economic emergency law illegal. That includes the so-called reciprocal tariffs from last month's Rose Garden announcement. But White House trade advisor Peter Navarro says there is an economic emergency.
China has killed over 1 million Americans with fentanyl poison, and we took this step to stop that. We will continue to press on that.
And White House trade advisor Peter Navarro says the president has other options to enforce tariffs even if he loses on appeal. Navarro spoke on Bloomberg Surveillance. Former Bridgewater chief investment officer Rebecca Patterson agrees.
He's got lots of other paths in addition to appealing this ruling at the Court of Appeals for the Federal Circuit. So I don't think we're out of the woods by a long shot on this.
Rebecca Patterson, formerly of Bridgewater, was on Bloomberg Daybreak. And as for where this leaves ongoing trade negotiations, Bloomberg's Brendan Murray is tracking that.
One of the key questions right now is, will countries continue to negotiate the way they have? The administration has said there's anywhere from a dozen to 20, 25 countries that are at the table and want to do a trade deal to avoid these reciprocal tariffs. So the question now is, if they're illegal, why would they continue to discuss them?
That's Bloomberg Global Trade Editor Brendan Murray. Now, for its part, Japan says it's still engaged in discussions. Prime Minister Shigeru Ishiba says he spoke with President Trump for nearly a half hour today to discuss trade. That's as his top trade negotiator heads to Washington today for a fourth round of talks. Tariff impact may be showing up more in the overall economy. Bloomberg's Vinny Del Giudice has looked at revised numbers from the start of the year.
Gross domestic product sank at a 0.2% pace at the start of the year, the first loss in 3 years. Blame it on weaker consumer spending and the impact of White House tariffs on trade. GDP figures are revised multiple times as more data become available, enabling government analysts to fine-tune their estimate. The Commerce Department initially reported a slightly sharper 0.3% drop. Vinny Del Giudice, Bloomberg Radio.
Okay, Vinny, thanks. And as investors parse through this data, stocks are churning now. The S&P 500 is up just 0.2%. The Dow Jones Industrial Average is little changed. The NASDAQ Composite still holding on to a 0.4% gain. 10-year Treasury is up 10/30 seconds. The yield down 4 basis points to 4.43%. Harvard University is holding its commencement today as it faces even more pressure from the Trump administration. The Department of Homeland Security released a letter today saying the school has a long way to go before it's eligible for federal funding. This week, the White House moved to cancel all its remaining federal contracts with Harvard as it's threatened its international enrollment and tax-exempt status. The State Department says it will start aggressively revoking Chinese student visas at schools across the country. NVIDIA CEO Jensen Huang says he thinks the administration understands the importance of immigration.
Look, I'm an immigrant. I know many immigrants that came to the United States to build a great life, and many of us have contributed greatly to the technology industry and the United States.
NVIDIA CEO Jensen Huang spoke on a special edition of Bloomberg Technology after his company reported another quarter of solid earnings, even with an $8 billion revenue hit expected thanks to restrictions in China. Matthew Bloxham covers tech for Bloomberg Intelligence.
There's been a lot of doubts recently, given the trade situation, about what that might do to economic growth. And I think, whether the economy is growing or not, it's clear that companies are prioritizing investment in AI, and probably, if anything, the momentum behind that is building rather than slowing. So I think that's an encouraging sign too.
Matthew Bloxham of Bloomberg Intelligence checking shares of NVIDIA right now. They are higher by more than 3%. Tesla is up about 1% after CEO Elon Musk made it official last night. He's getting out of Doge. Bloomberg's Laura Davison has more on what it means for the government's cost-cutting effort.
The program officially continues through July of 2026, but it's not clear that they'll be able to do a lot more. Even in just the past couple months, as Musk has sort of ramped down some of his personal involvement, the amount of savings that Doge has said it has saved itself, has really started to flatline. So unclear that there will be much impact from Doge going forward.
That's Bloomberg Deputy Washington Bureau Chief Laura Davison. And that's news when you want it with Bloomberg News Now. I'm Nathan Hager. This is Bloomberg.
The data that matters for your investments.
The entire auto sector is higher today.
And analysis on the companies making news on Wall Street.
Tesla's been a stock that's been in focus. Shares have really been all over the map this morning.
Listen to the Stock Movers Report from Bloomberg.
Let's talk about some other decliners.
It's your short audio report on the day's winners and losers in the stock market.
Second biggest driver in terms of points for the S&P 500.
Subscribe to the Stock Movers Report on Apple Podcasts, Spotify, or wherever you listen.
This is an iHeart podcast.
Dr. Navarro, welcome back to the programme, sir. First of all, I think we've got to get into the ruling overnight. Have you spoken to the President? And ultimately, what's his reaction to what we heard?
Haven't spoken to the President yet, but I've spoken to the people who have spoken to the President. Look, we're in a situation now, big picture here is IEPA. We were using the International Emergency Economic Powers Act. There's no question that there's an economic emergency with respect to both uses that we had. One is we are in a world where China has killed over 1 million Americans with fentanyl poison, and we took this step to stop that. We will continue to press on that. At the same time, we invoked that rule to stop what has been 20 million illegal aliens streaming into our country, driving down wages, taking jobs away. That's an economic emergency. And on top of that, The world continues to steal about $1 trillion a year as measured by the trade deficit. And that's an economic emergency because it's transferring our wealth abroad. So we think we have a strong case. Yes, we will immediately appeal and try to stay the ruling. But at the same time, the court, interestingly enough, basically said we were right, just use different rules and laws. So nothing has really changed here in that sense. We're still, as we speak, having countries call us and tell us they want a deal. So these deals are going to happen. So that's kind of where we're at. And it's troublesome here because if you look broadly at the pattern, we've got courts in this country who are basically engaged in attacks on the American people. The president ran on stopping the fentanyl poisoning, stopping international trade unfair practices from stealing our factories and jobs. And courts keep getting in the way of that. The courts get in the way of our trying to deal with the border issues. Now they're getting in the way of our trying to deal with the fentanyl crisis. And that's where we stand here. And I think part of what's going to be important about this ruling demonstrates yet again to the American people that the judiciary in this country has been weaponized in ways which are contrary to their interests.
Well, Peter, you would have heard a lot of people come on this programme and ultimately say you still have tons of options. And you've alluded to one of them. You will, of course, appeal. But could you describe what you might do in the interim, the way you might pursue your ultimate objective anyway, with the tools you have still available to you?
I'm going to let Jamison Greer, the USTR, inform you on that, and you'll be hearing from him soon on that. But I mean, look, any trade lawyer knows there's just a number of different options we can take. If you look at the kind of things we've already done, it kind of give you a roadmap on that. There's all sorts of numbers out there. There's 122, there's 301, there's 232, there's 338. There's all sorts of things we can do well within the law. But look, we think that what we've done already is perfectly appropriate. So that's why the appeal will take case. But, you know, it's like, interestingly enough, I was scheduled to come on the program today to talk about the bond market and the big, beautiful tax bill, but there is a bridge to that. And if I may, we have a situation where the bond market, we've seen like a 50 basis point increase in yields in the 10-year since April 2nd. And a lot of the hysteria around the big, beautiful tax bill centers on the Congressional Budget Office scoring that bill in a way which says there's going to be a $3.7 trillion addition to America's national debt over the next 10 years. And so, of course, you got to finance that, and that drives interest rates up and heads explode. When, in fact, if you do the math properly and you look at the history of the CBO forecast, you actually see about a $5 trillion swing to a $2 trillion surplus from the bill. And I'd like to just walk you through the math there. It's like the CBO, the Congressional Budget Office, historically has been very bad at estimating impacts of tax bills. In the 2017 tax cut that President Trump did, they got that totally wrong. They underestimated the GDP growth by a full percentage point. And what that does, if they make that same mistake here, which they have done, when you add that, that's about $2 trillion of additional revenue because you got greater economic activity. And then,
Peter, you also have the revenue from the tariffs, which I saw your opinion piece in The Hill. I just want to get back to the I just want to get back to the tariffs because you don't have that revenue.
Well, that's another $2 trillion.
If you don't have the legal authority to use it, though.
That gets us.
But can I just ask, you mentioned Ambassador Greer, we're going to hear from him soon. Are we going to hear from USTR about the bridge, potentially what John was talking about, if you can't use IEPA, potentially you're going to come out, the administration say we're going to use 122 in the interim?
Well, the court did in some sense tell us to do that, which was interesting. But look, here's the thing. Fentanyl, I just, people need to wrap their heads around the fact that every day here in America, people die because communist China puts 50-gallon drums full of these chemicals that come over to the Mexican cartels and then are made not just into fentanyl. They use the fentanyl to spike heroin, to spike methamphetamines, to spike ecstasy, and they're even putting it in prescription drugs like Xanax and Valium. And people are dying. It's been over 1 million people, 1 million Americans. And it's an economic emergency because a lot of those people are prime age working force here in America. So this kind of court ruling, the judge, I mean, look, the lead judge. But if the court
said, if the ruling said, Peter, and we've been talking about this, page 34, 35, they say basically you are in your right if you use Section 122. Why didn't you guys do that from the beginning?
Well, Section 122 only gives you 150 days. So there's your answer right there.
So, Section 122, if you use this now for 150 days, would it be a bridge to 301 or a bridge to 232? What are you thinking more long term?
You can be the strategist on that, but those are the kinds of thoughts. And look, if anybody thinks this caught the administration by surprise, think again, okay? Because you could see in the oral arguments where those judges were going, and the lead judge in this. I mean, the problem with that court, it's such an obscure court, but it's consistently been globalist, pro-importer, giving us bad rulings. The lead judge there ruled against the 232s originally and had to get overturned by the appeals court. So that gives you an idea of the bias against the president's tariff policy right on that court. But I think the big picture here is we've got a very strong case with IEEPA, but the court basically tells us if we lose that, we just do some other thing. So nothing's really changed. I want to say this to the world. You're cheating us. We're coming after you. Deal, and let's make this right, because ultimately what's at stake here is the global international environment getting in a way where it's fair to America, and thereby, if it's fair to America and we restructure this thing in a way, we'll have just more stability in terms of financial flows and capital and everything like that.
Dr. Navarro,
wildly out of balance now.